So, I'm excited to get to know you guys. So let me just break down the course. So this is an 8-hour course. Um, it is up to you guys how you guys want to, like, what you guys want to do. If you guys have something to do at, 3 p.m. and you got to go, it's not like I'm going to be, penalizing you guys for leaving and coming back or leaving because you have something to do. Think of this as dedicated study time for you guys. I'm just kind of helping guide it. So again, that goes along with whatever we do. If what I'm doing isn't helping you guys, then let's switch it up. Let's do something else. I have dyslexia, fun fact. So I have, done so many different study methods and learned so many different ways of learning, to kind of help it stick and help me memorize it better. So I can kind of go through a bunch of different ways to help you guys memorize this stuff, or just things that I've learned throughout my years of studying, to kind of help you guys go get through this process. So a little bit about me. I was in medical school, and then I realized that I didn't want to be in medical school because the system was broken and I didn't like how they were teaching us to care for patients. I thought it was more profit driven than actually helping people. And that was very frustrating for me. So I left and I said my prayers and I said, okay, God, where do you want me to be? I said, my whole life has been about medicine, but what now? And insurance kind of fell in my lap. And I will be honest with you guys, I was super frustrated with this at first because I was like, I can't do this. This is why I left medical school. The system was broken, and I feel like going into something like this will be instigating that, right? And then, I talked to my superiors about it, and that's a whole nother story, but they were like, look, just do this right now, see how you like it, and when you write your first claim, you'll understand. I was like, okay. So I went through the process, and I love teaching, so that's kind of how this part came along. I've always been a teacher, whether it was helping my friends out or tutoring, chemistry, bio, whatever. I've taught it. So that's kind of this side of things. But insurance has grown on me, and I've seen the good and I've also seen the bad. I'm sure we can all be, we can all be very aware of that, right? That there's good and bad to a lot of things, including this industry. But we can be the good. We can be the good in it, right? So that's kind of my story. That's why I'm here today. And of course, I'm still learning and still figuring things out the whole way, as I go along this path. But I'm excited to be here with you guys today. Like I said, I love teaching. I love getting to know people. So this is like heaven for me. I get to do this every other Saturday, and I look forward to it. So I'd love to know a little bit more about you guys. If anyone wants to unmute and, tell me where they are, why they're getting into this. Anything else you want to share?
I guess
Uh, oh, sorry,
yeah.
go ahead.
I think we lost both you guys.
No, sorry, my internet's a little bit laggy right now, it seems like. Can you hear me
That's
fine?
okay. Yeah,
Oh, okay, I guess I'll go first. I'm Diego out of Illinois, kind of Chicagoland area. Um,
very cool.
yeah, honestly, I used to own a landscape business and I stopped that and I kind of just been bouncing around from job to job trying to find something that I want to do.
Yeah,
Um, so I came across this job and, still kind of working through all the stuff. But I don't know, it's everyone I've talked to that's been in the job seems like they actually really like it. They like the company, especially. That's kind of like the main thing that kind of drew me into actually kind of going forward with it. So like
yeah,
I've heard a lot of good things, and at the end of the day, like I do want to help people. I want to do something I'm proud of doing.
right.
So that's like part of the reason, also like the motivation to get this job, and hopefully all works out well. That's kind of fingers crossed. That's my goal. So everything
Yeah,
works
of
out
course.
well.
I hear you. That's awesome. That's awesome. It's good. It seems like you already have a good support system, which is awesome.
Mhm.
That's one of the biggest things I can recommend to you guys when you guys are going into this. Make sure you are with someone that's going to teach you, because this book work is great and it's going to help you pass the test. But when you get into the real world application stuff, it's a little bit different.
Hmm.
So to have a good mentor, to have a good support system is what will bring you far in this field. So very cool, Diego. Very cool. Nice to meet you. Anyone else? Anyone else want to share? You don't have to, but if you, I'd love to get to know you guys since we're going to be together all day.
Good morning. My name is Tiffany LaFloria. I live in Hopkinsville, Kentucky, and my background is mostly in restaurant industry, 25 years management, and
Yeah.
before that, I was also nursing
Oh,
for a
very
while.
cool.
So, as of right at this point in life, I am a single mom, and
Okay.
I homeschool my daughter, who
Amazing.
also has dyslexia.
Okay. We got a lot of
So she
connections
was,
here.
yeah, she was having a hard time in school, so I decided to resign from my position as a preschool teacher and to homeschool her. And I needed something to do at home
Mm-hmm.
to help with supplement income and
Yeah.
also something to fulfill for me. So I love being a mom. It's the best responsibility. I don't even see it as that. It's the best thing I can do in my life. My child
Mhm.
is wonderful.
Of
However, I need something fulfilling for myself too.
course.
And so, going into this, I've learned so much. I'm on chapter 9 right now, and
Yeah.
it's just everything I'm learning. It's just blowing my mind. I'm like, okay, I need to look into this later. When I get our finances better,
Right?
I'm gonna look into this. I'm gonna look into this. I'm gonna look into this, and it's awesome. So, I'm excited. Um, this is something new for me, a field I haven't ventured into yet, but so far it seems like it's something that will keep us going and something I can prosper in.
Yeah. I hear you. You have a beautiful story. You have a beautiful
Oh,
story.
thank you.
Is
Thank
that you?
you.
Is that you and your daughter in your picture?
Yes, ma'am.
Oh my gosh, she's beautiful. So what grade is she in now?
She will be going into the sixth grade.
Okay, that's exciting. Oh
Yeah,
my
she
God.
just turned 11 in May.
Wow. Okay.
Yeah, she's my world.
Oh my gosh. I love it. I love it. Well, good for you. Good for you for taking this step and doing this. That's
Thank
awesome. Beautiful story and
thank
beautiful
you.
family as well.
Thank you.
Hello, my name is Shakia. I
Uh,
am 31 years old. I have three daughters. I've been married for 12 years.
oh,
My background is mostly retail, and I got sick in 2019. I got not 19, 18. I got diagnosed with multiple sclerosis, so that took a whole freaking toll. It was okay at first, and well, it wasn't okay because I've been trying to get diagnosed, but I kept getting dismissed and gaslit by the doctors telling me I'm crazy. Basically, I'm okay until I looked into it and my managers at Ross, I was a supervisor there, but the manager was like, "Hey, I think you have MS." And I was like, "What is MS?" And then I looked into it. And the next day I went to the hospital. I was there for 7 hours. And they finally put me through an MRI machine because I mentioned to them, I think I have MS. And then they was like, "Oh, you do have MS." But it was 2 years of going through the symptoms and being thinking I'm crazy. But
mm,
yeah, and then it was okay at first. I was walking on a cane, and then 2020 came around, and I wasn't able to get my medicine because what the medicine does is knock out your white blood cells just to like recuperate your immune system because
mm,
MS is where your immune system attacks your myelin on your nerves and yeah, you can't get that back. So there's no cure for it. There's only treatment. And so 2020, I went without treatment. And now I'm in a wheelchair and I'm not able to get out. So I looked into trying to make some type of something because I feel it's depressing not being able to do anything for my
mm.
daughters and my husband and just watching them watch me like, be sad all
Yeah.
the time. So I looked into life insurance and I think I can, do well at it. So that's why
Yeah.
I'm here.
Oh, oh my gosh. Wow. Wow, wow, wow. Oh my gosh, I worked in a neuro-ophthalmology clinic, so we saw a lot of MS patients. And bless your heart, that is tough. That is really tough. Is it okay if I talk about it for a second?
Yes, ma'am.
Okay, so what she's talking about, MS is a degenerative disease in the sense that you on your axon, so you have all these signals that are getting sent through your body and your brain and all these different places, and the way that they do that is through axons and then dendrites coming off that axon, and through those they can send electrical signals that'll tell your brain, your body what to do, how to move, things like that. And on the axon it's wrapped around with myelin sheath. Okay, and that myelin pretty much insulates the axon, so those signals can be sent quicker, okay? And the signals don't dissipate, okay? So whenever you don't have enough myelin, then those signals aren't getting sent, okay? Or they're dissipating too early. So in MS, like she was saying, your body's attacking that myelin. So over time, it gets harder to move and harder to function. Oh, bless your heart. I'm gonna keep you in my prayers because
Thank you. I recently got a backlifting pump, which is working well because my legs were
that,
super duper stiff and it was
yeah,
like moving around like with cement attached to my legs
yeah.
essentially. So I got this pump June 11th. I'm healing from it. It's a sore, but it is doing what it's supposed to do. So that's one thing that is making me I don't know, helping me get around. So I'm
Good,
happy about that. So
good, good. Oh, bless your heart. Oh, look at you. You're a fighter. I love it. I love it.
got to.
You do. You
Well, it's
do.
nice meeting you guys.
You do. You too. I'm so happy all you guys are here.
Hey, I just wanted to jump in real quick and kind of nerd out with you. I'm studying holistic medicine, functional medicine.
Mhm.
Chemistry is my specialty with the cancer prevention. And Shakia, I've been learning a lot about MS and the effects of parasites within MS. Not sure if you've ever heard of that before. There's quite a few studies on it, but you could look up the relationship between MS and parasitic infection. And they have some pretty good remedies that have helped quite a few patients in the studies recover most of their function and allow their bodies to heal and to kind of reset that immune function. So not sure if you've ever heard of that, but I just wanted to give you that. My husband,
No, thank you for that information. I'm willing to try anything at this point because the traditional medicine ain't working.
let me tell you, there's a book by it's called The Cure for All Diseases. And it talks about different frequencies you can use. There's a frequency machine that you can use just to kind of detox your body from metals and things like that. You know, other creatures like parasites, etc., that can kind of take up residence in our bodies. And she goes over a protocol in that book. Now, I'm not a doctor yet, and I'm not a practicing physician, so obviously, officially, I cannot give you medical advice. But from my personal experience, because I've been in the medical system and advocating for several people within my family for many years, a lot of those things have really worked. So I would love to just pass that information along. And if it helps you, you know, praise God. And if not, then I wish you all the best and I'm praying for you.
Thank you so much. I appreciate it. And yes, that information will do me some good because I'm about to look into it. I'm willing to try anything at this point.
Good.
Amen.
Yeah, amen. Look, God gave us a way to live. We just gotta, we've just messed it up over the years. So we gotta figure it out. But I'm right there with you. All right. Wow, wow, wow. Anyone? See anyone else?
So I'm Cami Whitmore. It actually says Tertia Whitmore. That's my husband, but
Okay.
um, I have actually been in the insurance industry for 28 years.
Wow.
Um, I was an agency office assistant for Northern Colorado all that time. And so I have my PC license already,
Okay.
but they have restructured. And so they took, there were 70 of us across the company in my position, and they eliminated my position and they made a new position and took us down to 30. So we had to reapply, and it's a new job. And instead of just being an assistant to one agency, we're now a market assistant for the ones that got which I got the job. The one of the 30 that they took us down, and we are now market assistants, and I have the state of Nevada.
Oh,
So in order to have this position, I need to get my life health license.
yeah.
So I'm studying for my life health license. So,
Good.
and it's been actually a little challenging for me, more so than I thought, just because I've been in the industry, but I don't sell. So um, the health, I think, is what's getting me.
Yeah.
Um, I like all the timelines and the dates and things like that. I think I struggle with it, and mostly because we don't even sell health insurance, so I'm not sure why I have to have it. So
Yeah.
I I think it's been a little bit of a uh it's been a really hard 9 months to have your job eliminated, and to be scared that you're not going to have a job after all these years, and then have to, build a resume, and, learn how to interview, and then interview for a brand new position, and figure out which territory you're getting, and finding out that I don't actually have the agency that I've worked for 28 years. They mixed us all up. So we're
Wow.
all, like Washington people are in Colorado, Oregon is in Washington, Arizona is, everybody, like, they mixed us all up because now we are fully remote.
Wow.
So before we had an agency and an office that we went into, but now we're fully home, which I'm thankful for. I'm very, very thankful for, because I love being at home, and I love um, but it's also, learning how to not be isolated, and, um, learning a new job and then studying for it. And so we actually don't start the new job until next Monday. So the 12th, well, actually the 14th. But we
Okay.
officially start on the 12th. So, um, I don't have to have it for 3 months after I start, but I want to get it done, finished, and over with in the next couple weeks.
Oh, yeah. Oh,
So that, but I've been, like I said, I've been struggling a little with the taxes, like what's taxed, what's not, um, and some of the health. I took some of the chapter tests, and the life I do pretty well in. The health I've been struggling a little with
okay.
all of
Okay.
that.
Good to know.
So
Good to know. Good. And congratulations on the job. That's
thank
awesome.
you.
Oh,
It's they told us last November. So we were like, they literally told us in an e-conference, all of us together, and they took all of our managers and they put them in a different state in a meeting and took their phones away so they couldn't even tell us. So they told them and us basically at the same time, and everybody was in shock. So it's been a rough 8 months or so.
yeah.
But we're getting to the end, and I'm excited to start my new job, and
Yeah.
really excited to get my test done and over with. So
Oh, yeah. Just get it done. Good. Okay. Sweet. I'm sorry you had to go through all that, but hopefully
you
there's
know,
some light at the end of this tunnel.
you know what? Changes is always scary, but change is also a good thing too. It's one of those things you have to step back from sometimes, because your first instinct is to be scared and to be, you know, apprehensive about something, but it's also been good. I think I'm gonna like having a new territory and, you know, getting into a new challenge because, you know, when you've been at something for 28 years, you become very, you know,
So, yeah.
comfortable in it.
Yeah.
So it's nice to have a new challenge and a new, you know, it's going to be different. I have the whole entire state instead of just one agency, but I'm looking forward to it and
Yeah.
really looking forward to passing my test. I'm done. I'm done with studying, and I'd like to have a, you know, I'd like to be able to conquer, like I said, the taxes and a lot of the health. Um, and then I think
Good to go.
yeah.
Okay. Sweet. Sweet, sweet, sweet. All right. I love it. Is that everyone? Did we get everyone? Or are we missing? I think we're missing a few people, but don't feel like you have to say anything if you don't want to. I don't want to pressure anyone, but of course I want to get to know you guys if I can.
I'll go since I was talking earlier.
Yeah.
I'm Chriselle. Where do I start? I'm a mom of 6.
Wow.
Been married
Amazing.
here, and all my kids are on the spectrum in some capacity. But I'm from the Philippines. Both my parents are passed away, but I say that just to say, like, I was taking care of my mom, and that's kind of like what got me into the whole medical situation.
Mhm.
And then my husband has POTS and sickle cell hemoglobin SC disease. So lots
Oh,
of time spent, many hours in emergency rooms and ICUs and picking up on all of the lingo that the doctors used and what they mean. So when Medicare kind of like you fell in my lap, I just was like, oh, this is like a natural extension of what I've already been doing.
yeah.
Studying also to be a holistic functional medicine doctor with specialty in blood chemistry and cancer prevention. I live in Georgia with all my kids and my husband, and just looking forward to passing my test so that I could provide a better life for them and hire some help at home, like
Yeah,
maids, nannies, and such, so that I'm not doing it all on my own.
of course. Wow, we got some super moms in here, y'all. That's crazy. You guys are incredible. Oh, wow. Beautiful. Yeah, you guys have beautiful stories. Okay. I'm gonna go ahead and get started unless there's anyone else that wants to tell their story. If not, no worries. All right. So I'm so happy I got to kind of meet you guys already. And of course, we're going to get to know a lot more about each other throughout this day. But like I said, this is something that I want to make for you guys. Okay. So I'm here to guide your studying and your learning. So like I said, if we are doing something that is not helping you, let's stop and let's, regroup and figure out what's actually going to help us. Okay. So my plan for the day right now is to go through some terminology. And how I like to go through terminology is I'll give you guys a term and then I want someone to tell me the definition. I don't want to sit here and read it and, because you guys aren't going to learn that way. So I need, oh yeah, go ahead. You guys can just unmute. You don't have to raise your hand.
Oh, okay. I wasn't sure. I didn't want to be
Yeah, no, you're good.
you. So I just had a question about the this study today. So I'm in Michigan, and I thought this was a study for the Michigan exam. So my question is are all the states pretty similar or the same? Because I wanted to study exactly what was going to be on the exam, if that's what I was told.
Right. So today is going to be over everything. It's not going to be state specific, but all of this information is going to be mostly what's on your exam. Like the state specific stuff, it obviously is something that you guys need to study, but compared to like the overall general information, this is going to be way more, like there's going to be so much more about this stuff. It is, and again, I'm not saying to not study the state stuff. And I'm not an expert in every state. So if you guys are asking me a state specific, I'm in Florida. So if you're asking me a state specific question, I might not be able to answer that exactly, but we can look it up together. So I hope that answer your question.
Yeah, yeah. So how this was advertised was that it was getting rid of all of the fluff and it
Yeah.
only going to be able to study like what is on the exam.
Yeah. So that's what we'll be doing. It
Cool.
won't, of course, I mean, to go over everything in this exam, we'd probably need like 3 days. Right? So I'm gonna get through as much as we can, and you guys will hear me say this like 100 times today, but the best thing to do for this exam is first learn the content as much as you can, but then learn the test. So today we're gonna do both of those. First, we're gonna learn some content, and then we're gonna go over and we're gonna do questions together to learn the test, because that's like one of the biggest, that's like taking out all the fluff. Like going through those questions and understanding how they ask the questions and how they want you to think through those and how they want you to answer those is like more than half of the test. So today we are taking away the fluff. Unfortunately, we won't be able to get through everything, but the goal is to get through as much as we can and take away all that little extra stuff.
Awesome. Thank you. And do you know how long the actual exam is?
So in Florida, I think we had 3 hours. I think we had 3 hours to take the exam. And most of the time you can finish in like an hour and a half, 2 hours, but don't rush it, you know? And I'm saying that with dyslexia. So if I can do it, you guys can do it, right? So we had 3 hours. I know some states will break up the uh nationwide and then state exam. So it's different for some states, but in Florida we had 3 hours, and I think it's pretty similar for every other state. It just depends. Like Florida, we go to Pearson VUE. Some of you guys will go to PSI to take the exam. Some of you guys will go to Prometric. And all of them have different protocols, but for the most part, you'll have about 3 hours and you'll take the exam. You probably won't need the whole 3 hours. And it'll be scary. You'll be taking it and you'll be like, oh my gosh, am I doing any of this right? But it'll be okay. It'll be okay.
Thank you.
Of course. Of course. Any other questions?
The state exams, we have to travel to take those, or they're not virtual?
Some states allow you to take it virtually, but some states you have to go in person. I think most you have to go in person. So you'll have to sign up with like a local testing center, and we'll send you guys a text that will explain. Once you get through this course and you take all the tests and everything, we'll send you guys a text that'll explain according to your state what the next steps are. So,
Awesome.
go get fingerprints, sign up for your exam. This is who you're taking it through. So go through them, things like
Okay.
that.
Oh,
Mhm.
awesome. Thank
Yeah,
you.
of course, of course. Any other questions?
Do you know if so I signed up for the course where I can do all those little practice exams
Good.
that are timed. Are those questions pretty darn similar to what will be on the test?
Yes. Yes. Do as many questions as you can. That is like the biggest thing that I can tell you guys. Do those questions. They are going to be very similar to the test. You know, I like, again, I cannot stress this enough. Some of them will be different. Some of them will look similar, but then they'll like trick you at the end and say something different. So when you're actually taking the exam, make sure you fully read the question, even though you're like, oh, I think I've seen this before. Fully read it, because they might throw in, something in there. But the questions that you'll have are very, very similar to what you'll see on the test. So yes, do those questions. Learn how
Is,
to take that test.
is the exam harder than those tests or just about equal?
I would say it depends. I thought I don't know. It's hard to say because some people are like, oh, it's so much easier. And then some people are like, no, it's a bit more difficult. Like I feel like I didn't know anything. So I mean, it's the same. So no test will be the same, right? Like you'll go in there and take it and it'll be different than, the person who took it last month. So it's hard to say because it kind of just depends what test you get. So that's why it's really good to study everything. Don't go crazy. Don't like focus on all these little tiny minuscule details. But for the most part, I would say you'll probably feel about the same. You might feel a little bit, depending on how you are with testing. Some people do really well during testing and they feel great, so they go in there and they perform better. But some people get into a test and they kind of freeze up. So they might not perform as well. It just depends who you are and how you are with testing. But I would say if you study those questions and you really go through them, you'll be more than okay.
Okay.
Yeah.
Yeah, because I'm in the life part, I'm getting like 91, 92.
Good, yeah.
But then, so I'm like, oh, this is super easy. So then I'm getting worried that like those questions are easy, or is it just because I know it? And then when I get to the health, I'm like, oh yeah, I'm at like 75. So I'm
Okay.
not doing as well on the health. So then I'm not sure. I was like, okay, is it easier, harder? What's going on with it? Yeah.
Yeah. Life and health are pretty similar, content wise. So try to just, I guess, like, try not to like overcomplicate. Like they're very, very similar. A lot of overlapping content in the two. So I'd have to see, and we'll go through it. Like I said, we're gonna go through it. We're gonna walk through questions together. So I'll be able to see how you're thinking through things, and then hopefully we can change that and alter it to a way that they want you to think. Like I said, half of this test is learning how to take their test.
Perfect. Thank you.
Of course. Anyone else?
I do have one more question.
Okay.
So do we get a copy of this link so we can go back and listen to it if we want?
Yes.
Okay.
Yes.
Perfect. Okay.
You will have a link to the video. You guys will get it in a text message. And then, yeah, you guys can watch it after.
Thank you.
And then we got a comment that says in Las Vegas, it is 60 minutes and it is, it is 160 minutes and it is broken up nationwide. And the other section is the state question. And she said it's Pearson VUE. So that's for Vegas, if anyone else is over there.
Quick question for you. Do you have any study tips for memorizing all of the supplement letters and what they're for?
My best tip is to write it down. Like again, with my dyslexia, I feel like I have to see it and then I have to write it and then rewrite it. And the best thing I found is to just make flashcards, even if you're never going to use them. Just writing down flashcards is like what helped me so much because I would remember, oh, okay, putting an action to behind, a term. So like I'm writing and I'm thinking and I'm doing all these things together. I feel like really, really helped me rather than just reading it and trying to memorize it.
Appreciate it. Thank you so much.
Yeah. And the other thing that's always helped me, even in medical school, was being able to teach someone. It's like if I can talk through it with someone, even if it's my dog, I'll bring Biggie. My dog's name is Biggie. And I'll be like, Biggie, I'm teaching you about this, and I'll talk through it just like he's a student or just like he's a friend that's asking a question about it. And I'll talk through it and see how I can explain it to them. And you can even do that with ChatGPT. We have all this access to AI now, so might as well use it. And you can say like, hey, can you listen to me and how I say this? And then, fix the parts that are wrong or give me some feedback on how I should be thinking about it.
Awesome. Very appreciative of that. Thank you.
Yeah, of course. Any other questions? And of course, you guys can ask questions throughout the whole thing, but as of right now. Okay, so again, we're gonna be together for 8 hours today. So I'm on the East Coast, so it'll be 9:30 to 5:30. If I say a time, just beware, I'm talking East Coast time. So I don't want to confuse anyone because I know a lot of you guys aren't East Coast time. And it'll slip my mind and I'll be like, oh, we'll be back at 2:30. But that's East Coast time. So I will do my best to just say, okay, we'll come back in 30 minutes or we'll come back in an hour. So I'm not confusing anyone. But if I do say a time, it's East Coast time. Yeah, you can go ahead. You don't have to raise your hand. You can go ahead.
Yes, ma'am. I do have a commitment I do need to do this afternoon, but I
Yeah.
can come back online.
Yeah.
Once it's
Yeah,
finished.
whatever you guys need to do. You don't have to, you can leave, come back, like you don't have to. This is for you guys, not for me. So, if you guys have something to do, go ahead.
Yes, ma'am. Thank you.
Yeah, of course. Of course. Okay, so like I said, so we have 8 hours together. I'm gonna give you guys a break every hour, probably like 5-10 minute break. This first hour I usually skip because we usually talk and get to know each other. But after hour number 2 or at hour number 2, I'll give you guys a break every hour just to go to the bathroom, let the dog out, feed the baby, whatever you guys need to do. And then we'll come back together. And also it kind of gives our brain a break because it's hard to sit, for 3 hours and just talk about insurance and learn, right? So we need to give our brain a little break. The other thing I want to say is for lunch, I'll give you guys an hour, but when that gets a little bit closer, we're going to talk about timing because I know everyone's on different, time schedules. What I usually do is do it 1 p.m. East Coast time because that kind of works out better for everyone else rather than doing it, 12 here East Coast time because that kind of screws everyone over on the West Coast because it's super, super early. So I usually do like 1 p.m. East Coast time. We can talk about it whenever it gets closer, but just, be thinking about what time you guys would want to take for lunch. And then again, we'll talk about it. Okay, so let's go ahead and get started. First thing I'm gonna do, like I said, is share my screen if I can figure out how to get this. Zoom. Okay, so sometimes I have troubles with technology. Sometimes it hates me, sometimes it doesn't. So you guys just gotta work with it. And also, just to preface, I know a good amount of this stuff. I know a lot of this stuff. I know a lot of the book work, but I don't know everything. Unfortunately, I'm not ChatGPT. So if I don't know something, it's okay. We're gonna look it up together and we're gonna figure it out together. Okay, so just to preface that, I'm not a dictionary, but I'll do my best to answer every question that you guys have, and what we can't, we'll look up together. Okay, so insurance cram. Let's go ahead and get started. This is my dog. His name is Biggie. Usually he's with me, but he's at his grandparents' house right now. I left him there and my parents love him. He loves the pool. He's a big pool guy. So I think yesterday he went swimming like 4 or 5 times, I think my parents told me. But this is my baby. Okay, so we're gonna skip forward. All right, so we're gonna start off with something very easy. What is insurance? Now, you guys can unmute, text in the chat, whatever you want to do. I would prefer if you guys unmute because again, like it's hard to go back and forth between screen share and chat, but thank you. But yeah, so go ahead if anyone wants to unmute and you can give me one word, whatever it is, or you can give me a whole sentence, whatever you think. What is insurance?
Contract to transfer risk.
Good, transfer risk. Perfect. Anyone want to add anything to that?
Security for unforeseen issues.
Good. Security. Security. Good. Okay.
Mind.
What is it?
Peace of mind.
Peace of mind. Perfect. Those are all amazing ways to describe insurance.
Coverage for potential loss.
Coverage for potential loss. Perfect. So these are all things that you guys want to think about, because when you sit down with a client, you're going to want to explain to them everything as if they are, you know, a kid in first grade. And I don't mean that to disrespect anyone that you're speaking to, but a lot of people won't ask questions, but it's always good for everyone to know every part of what they're doing, right? Because, you know, some people aren't comfortable with asking questions, but you really want to break it down for them just so you're not caught in something that's awkward, like, oh, I did describe that to you, but you didn't quite understand it, or, you know, or you're signing someone up for something that they don't really want and they didn't, you know, want to ask the question or whatever. So the first thing you're ever going to want to describe is, what is insurance? What am I giving you? Okay. So those key words that sound really good, those are the ones that you want to use. Okay. And that's why this is why we start off with insurance, the definition of insurance, because I know it's super simple and everyone's like, oh my gosh, this is what we're starting with. I know we'll speed it up in a little bit, but just so you guys know, you need to be able to describe everything, even the simplest terms. Okay, so the process of managing risk by pooling resources or accumulating funds to cover potential losses. Everything that you guys said, perfect. Usually we'll go into an example. This one I'm gonna skip because I feel like we don't need an example of insurance. If there's a reason why you guys want to see an example that I want to skip for some reason, then just stop me and we'll go through it, okay? All right, so actuarial department. What is the actuarial department?
They're the department that calculates the premiums.
Okay, okay, good. Anyone want to add anything to that?
Do they, yes, they calculate the premiums, but also they, assess what the client or the potential policyholder has as far as responsibilities, dependents,
Okay.
any liquidated funds or any actual funds or retirement savings that they may have, and tie all of that together to see and also their income, what their income is that they're earning at the time, and what the family would lose as far as if something happens to them dying,
Okay.
to develop the cost of the income and see how much actual insurance they would need.
So that that is more that's more of a different department. Premiums is probably like better on track with what this is. But we're gonna come back to what you're talking about. We're gonna see that in I think it's a few terms down. We'll see that department. But this one, let's talk about it. So it's a team of individuals that is in charge of determining insurance policy rates, calculating reserves, and determining dividend payouts. So let's talk about this. So insurance policy rates, what are those?
Premiums.
The rates that the policyholders will pay.
Perfect. The rates the policyholders will pay. What are reserves?
That be the cash value,
Cash value,
or would that be the reserves as far as the company itself, what they
there
have?
you go. There you go. Think more company. Good. So reserves are it's just monies that the company sets aside for times for hardships. Okay. They just have this like lump sum of money that they put away if they ever need it. Okay. Let's say they have a high net worth, you know, client and something happens to them and they have to pay a claim because something happened to them. They'll probably tap into those reserves because it'll be a lot of money and they have this reserves as kind of like a backup just in case they need it. Okay. So those are reserves. What about dividend payouts?
That is the excess or surplus they have at the end of like a term where they pay to either policyholders or stockholders, depending on which type of company they are, mutual or stock.
Good, perfect. I'm glad that throughout this whole thing, I'm gonna have you guys relate terms. Okay, so I'm so happy that you did that. And if you have no idea what she's talking about, no worries, we're gonna get there. But dividend payouts are exactly what you're talking about. It's pretty much just at the end of the year or at the end of the quarter or whenever, the company will go through all of the money that they have. And they'll say, okay, we set aside our stuff for reserves, we've paid all of our claims, and now we have this extra lump sum of money. What are we going to do with it? We're going to give it back to the people as kind of like a thank you. And that could be their their stockholders, that could be their policy holders, depending on the type of company that they have. But yeah, so it's just that money that they're going to give back to you as kind of like a thank you. Thank you for being with us. Okay. Okay, cool. So before introducing a new auto insurance policy, the actuarial department analyzed accident statistics and repair costs to set appropriate premium rates. Okay, perfect. All right, alien insurer. What is an alien insurer?
Isn't that a company that is outside of the US,
Keep going, keep going.
but is licensed to have, to practice here in the US?
Good, perfect, perfect. So we have 3 of these. This is the first one, okay? So alien is when the headquarters are located outside of the US, but they are allowed to practice inside the states. They're allowed to sell inside the states, okay? So in the context of the US, an alien insurer is a company that operates in the United States, but its main office and legal base are in another country. Okay, so let's say it's located in Italy and it works here in the US. It sells insurance here in the US. Okay. So a life insurance company based in Canada that sells policies to customers in Florida is considered an alien insurer in the United States. All right. An admitted insurer. What is an admitted insurer?
An insurer that has gone through the what is it, like licensing, for lack of a better term, with the state that they're going to do business in.
Great. Good. Good, good, good. So an admitted insurer is exactly what you're saying. They've gone through the licensing and now they can practice in that specific state. Okay. So if you can be an admitted insurer in Florida, but that does not mean you are an admitted insurer in Georgia. Okay. So a company that has been officially licensed, they have been given a certificate of authority by a state's insurance department, permitting them to sell insurance within that state. Okay, so watch the wording here. So to be an admitted insurer, you have to have a certificate of authority. A certificate of authority is a document. An admitted insurer is a title. Okay, so to be an admitted insurer, you have to have a certificate of authority. And that's for each state. All right. So State Farm is an admitted insurer in Florida, is licensed by the Florida Office of Insurance Regulation, follows all state guidelines, and its policyholders are protected by the state's guaranteed fund in case of the company becomes insolvent. Okay, so they have a little bit of a backing and you have a little bit of confidence knowing that if you ever have to file a claim, you will receive a claim, you will receive the payout as long as you are signed with an admitted insurer. If you are not, then you don't have, you don't have the state's backing. So if they go under, then, you might not get paid. You might not get the help you need. Okay, so what is a broker?
A broker is, I want to say it's like a go-between between a policyholder and a company.
Good.
I'm trying to go, the example I was given if a policyholder wants to sell, excuse me, a policy to another party, they would require a broker to do that.
Good, 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 good. That's perfect. So exactly what you're saying, a broker is kind of that in between. Okay, so you can go to a broker and they're gonna offer you a bunch of different options. Hey, this is, what your policy from State Farm would look like. This is what your policy from Aflac would look like. This is what your policy from Geico would look like. Okay, so they can offer you an array of different options rather than just going to Geico, so one company, and being like, hey, I want to get a policy from you. A broker can offer you many different options and you can pick the best one. So they work independently, they represent their own interests and those of their client or customer. Okay, so they're representing you as a client or customer and themselves, because they don't have a tie to any one company. They'll sell them all, but they'll find which one works best for their client or customer. So a person is looking for the best life insurance policy to fit their needs. They hire a broker who works independently, represents the client's interests rather than any specific insurance company. The broker researches various policies from different insurers and helps the client choose the best option, ensuring that the coverage meets the client's requirements. Okay, so as you can see here, it says rather than any specific insurance company. Okay, so the broker, again, doesn't have any ties to a specific insurance company, which is why people like going to them, because they will try to give you the best option rather than whatever option is best for one company that they really like. Not to say that brokers don't do that, because some of them might, but the idea of going to a broker is that they will offer you all the options and give you the best one. Okay, a captive insurer. What is a captive insurer?
Is a company that creates their own insurance,
Yeah.
like their own insurance company to cover their workers?
Perfect. That's perfect. Okay. So a captive insurer is a company that has a very high risk, or they can't find insurance for some other reason. So they create their own company to insure themselves. Okay. So let's say Disney. Let's say Disney does this. I'm not sure if they do, so don't quote me on this, but let's say that they do. So let's say Disney is the company, right? Disney World's the company, and they want to insure themselves because they can't get insurance anywhere else because they have a lot of things that need to be insured, and they have a lot of money, right? So they need a lot of insurance. Okay. So Disney is the company. Maybe they create an insurance company called Disney Insurance, and Disney Insurance will only insure Disney. Okay. So they create their own insurance company. All right. So an insurance company owned by companies it insures. It is created specifically to insure the risks of its parent company or companies. It is a form of self-insurance where a company sets up its own insurance company. Okay, so a parent company would be Disney, right? And then Disney Insurance is insuring Disney. Pretty simple, right? Pretty straightforward. So a multinational oil company formed a captive insurer in Bermuda to cover its environmental liability risks, which were too costly to insure through traditional commercial insurers. So they couldn't find insurance somewhere else, so they just insured themselves. Certificate of authority. We talked about this. What is this? What is a certificate of authority?
It gives a life insurance company or insurance company permission under state regulations and federal, well, I don't know if federal will follow with that, but under following state regulations to perform business in the state that they applied for.
Great, perfect. So you're exactly right. So you have a certificate of authority, so now you can operate in that state. If you have a certificate of authority, what are you called?
Admitted insurer.
Good, admitted insurer. So if you have a certificate of authority, you are called an admitted insurer. Perfect. So this is a formal license provided by a state's insurance department that allows an insurance company to operate legally in that state. So before a life insurance company can start selling policies in Texas, it must obtain a certificate of authority from the Texas Department of Insurance. This license legally authorizes the company to conduct insurance business within that state, ensuring that the company meets all regulatory requirements and can operate as an admitted insurer in Texas. Perfect. Claims department. What is the claims department? This one's pretty straightforward.
Process the claims on insurance policies.
Good, perfect. They process the claims. Okay, so that's, I mean, the claims department, they process all the claims. So the department responsible for handling the processing, investigation, and payment of insurance claims. Anything to do with claims, you're going to the claims department. Okay, writing it, you send it to the claims department. They will do the research to see if they're going to pay it or if they're not going to pay it. And then if they do decide to pay it, they will deal with all of that. Okay, so the claims department, anything with claims. Super simple. After her car accident, Maria contacted the claims department to file a report and begin the process of receiving payment for the damages. Great. Divisible surplus. What is this? We talked about a little bit about this earlier.
It is the excess profit that is split among either policyholders or stockholders, depending on the type of company.
Yeah, perfect. So we talked about something similar to this earlier. So divisible surplus is that extra amount of money that they're going to give back to the people as a thank you, right? So they're going to give it back to you as a thank you. That extra money is called divisible surplus. How they pay it out is called dividends. So I have a divisible surplus. Imagine all this cash in my hands, and then I'm going to give it to you guys. And as I'm handing it to you, now it's called a dividend. Okay, I'm giving you a dividend. Does that make sense?
Yes.
Great.
Yes, ma'am.
Perfect. So this term refers to the portion of an insurance company's earnings that is distributed to policy owners as dividends after the company allocates funds for reserves, which we know, right? Operational costs and other business needs. And remember, those reserves are that money that's set aside just in case of a uh-oh situation. It's the money that the insurance company sets aside in case they have a huge claim that they have to pay. Okay, it's their little backing. Okay, and just to re-emphasize, divisible surplus is the extra money that they have at the end of the year. And then the way that they're going to thank you is they're going to give it to you. And now it's called a dividend. When I give it to you, it's called a dividend. So I'm receiving a dividend. They have a divisible surplus. So now I'm going to
Now,
Go
I'm
ahead.
sorry, not all insurance policies offer dividends, correct?
That's exactly right. I'm glad you brought that up. Yep, not all of them do. It is also, so it depends on what type of company, and we'll get to that, which is great. I'm so glad you're already making these connections, but not all companies give these out. Also, it is totally up to the insurance company if they want to give it out. So even if they are a company that does give them out, they don't have to. There's nothing in the law or the rule or anything like that that they have to give it out. They could totally just keep the money, on the inside and put it to something else. Okay, so at the end of the fiscal year, the mutual insurance company reviewed its profits and used the divisible surplus to issue dividend payments to policyholders. So if they're giving, so this is jumping a little bit ahead, but if they're giving it to policyholders, what does that mean? What type of company is it?
Sure. Um,
I'll give you a hint. It's between mutual and stock.
Can you repeat that, please?
So in this example, they're giving the dividend payments to policyholders. So does that mean it's a mutual company or a stockholder company?
Company.
What is it?
Company.
stockholder,
It's mutual.
mutual.
Well, yeah. So, and
Well,
this is,
duh.
yeah, well, it's super simple. So, right, if it was a stockholder company, then the divisible surplus would go to the stockholders. It would go to the shareholders, right? And then since we know that, because it's in the name, Now, the other thing, the policyholders, that just has to go with mutual, okay? So if it's a stockholder company, it's gonna go to the stockholders.
Stockholders.
Yeah, and then if it's a mutual company, the divisible surplus is gonna go to the policyholders. Okay, I'm just making some connections here. For those of you that don't know what we're talking about, don't worry, we're gonna get there. But just so you're starting to see some connections. Okay, domestic insurer. So this is one of our three. So we had alien insurer. Now we have domestic insurer. So what is a domestic insurer?
Would a domestic insurer be someone whose home base in one state, but they also have certificates of authority in others?
Not
Or would
quite.
that be foreign?
That, yeah.
That's foreign, okay.
So what is domestic?
For your state.
Yeah, exactly. Domestic. You're
Yes.
domesticated, right? You're in your area. So we had alien insurer, which is you are located outside of the country and you are operating somewhere in the United States. Now, domestic insurer is your headquarters and you're located in Florida and you're also operating in Florida. Okay.
So the domestic and admitted are the same.
Domestic, okay, so, this is something I had a question about last time. So yes, they are related terms, but they're talking about different things. Okay. It's like if you were to say the color light blue, okay? Blue's the color and light relates to blue, but they're also like two different things, but they work together. Okay, so let me explain that a little bit more. So an admitted insurer is what you become when you have a certificate of authority. So a domestic insurer has to be an admitted insurer to work in a state. But domestic insurer is it's just a different term. Domestic, foreign, and alien all go together, and the only thing it's talking about is where the insurance company is working and where the headquarters are located.
Okay.
And then admitted insurer, saying you are an admitted insurer, is just saying, hey, I'm able to work in this state. So like,
Gotcha. Okay, all right.
yeah. So yes, they're like related, like you have to be an admitted insurer to be,
A domestic.
domestic insurer, but like it's just talking about two different aspects of it. Like one
Okay.
is just, okay, I can work in the state, we're good to go, I have my certificate of authority. And the other one's like, okay, my headquarters are here and I work here. And keep in
Gotcha.
mind,
Okay.
this isn't talking about you and I, okay? This is talking about the insurance company as a whole. So
All
like
right.
the insurance company works here and they sell here, not us. I got something in the chat, let me see. It's being licensed in the same state. Perfect. Exactly. Exactly. Okay, so domestic insurer, an insurance company that operates in the state where its main or home office is located and where it is authorized to do business. Okay, so again, we talked about alien insurer. You are operated in another country. You are working inside the states. Now we have domestic insurer. You are operating in one state and you are working in that state. Okay, so again, this is just talking about headquarters and then where they're selling insurance. All right. Sunshine Life Insurance Company is based in Florida and conducts business there. So it is considered a domestic insurer in the state of Florida. Okay, now we have foreign insurer. Now we have a third one. Okay, so we had alien, domestic, and now we have foreign. So what is foreign?
The foreign insurer is a company who is based in one state but allowed to function or licensed to function in other states.
Exactly, perfect. So my headquarters are in Florida, but I sell insurance in Georgia. Okay, and again, this isn't me, it's talking about the company. So the company's located in Florida, but they sell insurance in Georgia. Okay, so now we have three of them. So alien, you are located outside of the country, selling insurance in one of the states. Okay. And then we have domestic, so you are located in a state and you are selling insurance in that same state. Okay, foreign, you are located in a different state, but you are selling insurance in another state. Okay, so you're located in Florida, selling it in Georgia. An insurer that conducts business in a state other than the one where its principal office or legal base is situated. Maple Tree Insurance is incorporated in Texas, but sells insurance policies in Florida. In Florida, it is classified as a foreign insurer because it was formed under the laws of a different US state. Is everyone clear with the difference between domestic, foreign, and alien, and the difference between being an admitted insurer, the difference in similarity?
Yes.
If you're okay, cool. Everyone else okay as well? Don't be nervous to speak up. Again, this is for you guys, not for me. It doesn't matter how good I know this information. Okay, cool. Cool. All right, fraternal benefit society. What is a fraternal benefit society?
I'm gonna guess it's I think I remember this one. It's a nonprofit that provides insurance benefits. But it has to be like in a specific group that has like a religious or like an organized affiliation of some sort.
Yeah, that's perfect. You got it exactly right. Okay, so it's a non-for-profit organization, and these people come together because of religion, because of ethnicity, because of occupation, just for some other reason, these people come together in a group. Okay, and again, it's a non-for-profit, but because they come together in a group, they can get insurance. Okay, and they can get group rates and group insurance, which the thing about group insurance is that it's usually always better than individual. Okay, it's cheaper, you have more benefits, there's just an array of different things that are better. So it's usually better to get insurance through your work than to get insurance on your own. Okay, so these people come together because of occupation, ethnicity, religion, and then because they're in a group now they can get group insurance. They can offer, benefits to their society members. Okay, so it's a non-for-profit organization that provides insurance and other benefits to its members, who usually share common bonds such as religion, ethnicity, or occupation. And these societies operate under a lodge system and often engage in charitable and social activities. You don't really need to know the end of this, but just know it's non-for-profit. Oops, where'd it go? It's non-for-profit. These people come together because of some common bond. Okay. And then now that they're a group and they're not coming together just for insurance, they can offer insurance to their employees and get these benefits of being in a group. Okay. Fraternal and benefit society, the best way to remember that is probably just remembering like a fraternity, like all these guys come together and they create a group. And now that they're in a group, they can get insurance and they can get group rates.
This is also where they say they have to be organized for a reason other than just getting insurance, right?
Exactly. We can't just create a group and then be like, okay, we're a group of people. Let's get group benefits, right? Because then they would just, like, the insurance company would lose a bunch of money because they could just group everyone up. It's supposed to benefit people who are, working or in certain situations where they have, a group of people together that are not just coming together just for insurance. But yeah, you cannot just form a group just to get insurance.
And in order to maintain that insurance, they have to stay in, I want to say, for lack of a better term, communion with that organization.
Yeah. They have to continue to be a part of that organization. If they don't, then they can convert that, into
To a whole life policy.
You're right. Exactly. They can convert that into a whole life policy because usually group benefits come, group life policies are term life instead of whole life. So they can convert it into an individual whole life policy if they have that ability. But yeah, exactly. I'm so happy you guys are relating all of this together. So The Knights of Columbus is a well-known fraternal benefit society that offers life insurance and retirement products exclusively to its Catholic members. All right, industrial insurer, also called a home service insurer. This one makes me so mad because oh my gosh, it makes me so mad. Industrial insurer is like the worst term in the entire world for this. Home service insurer makes sense, but industrial insurer is it's just one of those things that, like, you know, those terms that don't make any sense with the definition. It's one of those. It's one of those. I hate it. Anyone know what it is?
To ensure that is it for like a smaller group? But all I remember is that the agents come to the house to pick up the premium payment.
Yes. Okay. So this is not very common anymore. This was, and for a few reasons. It was made to cover funeral expenses. Okay. Now funeral expenses are like so much more expensive. So, you know, these policies were usually for like $5,000, $10,000 just to cover funeral expenses. And these people would go to your home every week or every other week or every month, and they'd collect a premium, $5, $10, and it would be in cash, and they'd just come and collect it. Okay, so it's usually to cover funeral expenses, and they'd come to your house and collect these super small premium payments. They'd go door to door and collect these. So it's not very common anymore, but it is.
Sounds like something from the 40s.
Exactly. It's like way long ago. And that's why it makes me so mad, because home service insurer makes sense because they're coming to your home and collecting the premiums. But like, where does industrial insurer come in that? I have no idea. But an insurance company that specializes in small face amount policies, typically life insurance, which are often sold door to door and collected weekly or monthly in person. These policies are designed for individuals with lower incomes who may not otherwise have access to insurance. Okay. Oh, that's a good, okay, so they said maybe it's because it was created in the beginning of the industrial age. That's a great, I have no idea, but I mean, that would make a lot of sense. I like where you're thinking. I like where you're thinking. That's awesome. Okay, and then here we go. Industrial life policies were primarily designed to cover funeral expenses. Very good. So an industrial insurer might sell a $5,000 life insurance policy to a client and send an agent each week to collect a $5 premium in cash. So like I said, these don't really happen anymore. I think they are still a thing, but usually people don't really opt for that option. Okay, insured. Who is the insured? What are they? Who are they?
The client, it could be the applicant, could be the policyholder, or whomever's name is for the whoever is named for the insurance policy. Say
Good.
I buy a policy for my daughter, which would be
Yeah.
a juvenile, but her name, she's the insured, but I would be the policyholder.
Perfect. You are actually the first person to say that right off the bat correctly. Usually people are like, oh, it's the policyholder. So that is a big difference I need you guys to understand. The policyholder does not always have to be the insured, right? You can buy a policy for your daughter. You can buy a policy for your husband. You can buy a policy for, you know, as long as you have insurable interest in them, then you can buy a policy for them. But again, the policy holder might not always be the one that's being insured. Usually it is, but it doesn't always have to. So it's the individual or entity that receives insurance coverage under a policy. All right, so example. John purchases a life insurance policy to provide financial security for his family. In this scenario, John is the insured as he is the customer receiving protection under the insurance policy. If something happens to him, the insurance company will pay the benefits to his designated beneficiary. All right, the insurer. Who is the insurer?
The company that issues the policy.
Yeah. The company that issues the policy, they are the insurer, the company, right? They are insuring you. So the company that provides the insurance coverage. Good. I think we can kind of skip the example of that. We know, the insurers are Geico and Aflac and State Farm and all of those. Those are all insurance. Insurers. Insurers. Okay, Lloyd's of London. Who are the Lloyd's of London? What do they do? What is their purpose?
They're a group that provides, what is it? It's like a market. They're not themselves an insurer, though.
Exactly. Exactly. So they themselves are not an insurance company. They are not an insurer, but the Lloyd's of London is a marketplace for underwriters, because there's a bunch of underwriters and companies that will come together and write policies for people that have very high risk or cannot get insurance in any other way. Okay, so it's not an insurance company, it's a marketplace where people can come together, underwriters, companies, things like that. They can come together and write policies for people that have very high or unusual risk. Okay, so again, not an insurance company, but rather a marketplace where individuals and companies come together to underwrite unique or unusual insurance risks. Okay, the Lloyd's of London. So a movie production company wants to insure its lead actor against the risk of injury during filming, a unique and high risk scenario. Instead of going to a traditional insurance company, they approach Lloyd's of London, which is not an insurer, but a marketplace where individual underwriters and companies come together to underwrite unusual or complex insurance risks. These underwriters at Lloyd's agree to cover the actor's insurance, pooling their resources to manage this specific and uncommon risk. So why would they do this? Why would they want to insure someone with such high or unusual risk? You can't say anything wrong here.
Why would they?
Yeah, why would they want to do this?
Because it's a niche and it gives them money.
Perfect. That's exactly what I was looking for. It's a niche. They need it. And also people who are writing this high of risk or these like very unique scenarios are going to make a lot of money doing it. So there's an incentive in the sense of, okay, these people also need insurance, but also I will make a buttload of money from insuring these people as well, as long as
Gotcha.
they don't file a claim. If they file,
Right.
then you're screwed, right? But that's why underwriters and companies will come together. But yeah, so they'll make a lot of money, and also these people still need insurance. So they'll say, okay, I'll write it for you, but hand over the money.
Win-win.
Yeah, win-win, exactly. All right, multi-line insurer. What's a multi-line insurer?
It's an insurer that provides a plethora of products such as life and health, accident, AD&D, etc.
Yeah, perfect. So multi-line is exactly what it is. You have multiple lines of insurance. You can get health, life, auto, house, whatever you need, all through one insurance company. So an insurance company or independent agent that offers a wide range of insurance products, allowing businesses or individuals to address all their coverage in one place. For instance, many large insurers offer policies covering home, life, auto, long-term care, and health insurance policies. Okay, so the benefit of this saying, okay, I don't need to go see, Geico for my car insurance and then go over to Aflac for part of my health insurance. Okay, I can just go to one place and they can offer me home, life, auto, long-term care, everything I need. So I don't have to call a bunch of people to figure out all my different types of insurance. Okay, so the benefit is just going to one person or one insurance company that can offer it all for me. So the benefit, a family wants to simplify their insurance coverage by having all their policies with one company. They contact a multi-line insurer that offers a variety of insurance products, including auto, home, life, health, insurance. By choosing this insurer, the family can manage all of their insurance needs in one place, benefiting from the convenience and potentially qualifying for discounts by bundling multiple policies together. So just so you guys know, what is the difference between a multi-line insurer and a broker?
A multi-line insurer is the actual insurer. The broker sells the insurance for the insurer.
Great. Okay, perfect. So that is one difference. What is
Yeah.
another difference?
The certificate of authority,
Not quite. Not
no,
quite. Well, I mean, I see where you're going with that.
they're
So
not licensed.
exactly. Okay, so I hear you. So multi-line insurance, and certificate of authority, right? So they are an admitted insurer where a broker works under them. Okay. So the other thing I'm looking for, a broker, when you say a broker, I'm usually going to talk now. A broker can offer auto, home, life, health insurance, all of these different policies. Okay. But a broker can also be considered a broker when they just offer life, but they offer a bunch of different companies that have a life insurance.
Okay. A multi-line insurer offers just basically for them, correct? And a
Right.
broker is fishing, so to speak, with other different companies to find the best value.
Exactly. With a bunch of different companies. And then also they could just focus on life insurance and sell a bunch of different policies in life
Okay.
insurance from different companies. Okay, so that would be a broker. A multi-line insurer offers not only life insurance, but health insurance, auto, home, all these different types of insurance. Does that make sense?
Yes, ma'am.
Sweet. Okay, again, if I love that you guys are interacting and everything like that. So if anyone that, that isn't saying anything, if you guys are lost, please let me know. This is for you guys, not for me. So like, please, you can send me a DM or a direct message, in the chat, whatever you need to do, just like, hey, can you slow down? Hey, can you go back to this? Like, if you don't want to say it out loud, just send me a chat and we'll go back to it. I'm not going to say your name or anything like that, but I really want everyone to learn from this and everyone to take away from this. Okay.
I do have one question.
Yeah.
The difference between the broker and the multi-line. So the broker can offer one type of insurance, and the multi-line is obviously a bunch of different. Is that correct?
Yeah, exactly. So like a multi-line can offer home, auto, health, life, all these different things. A broker could just offer a life.
Okay.
They could just offer life, but they could offer life from 4 different companies.
Oh, I see. Okay.
Yeah. Whereas the multi-line, it's just their company, but they're offering life, health, auto, home, but it's all just from their company. So like let's say Geico, a multi-line insurer, you can go to Geico and you can get life insurance through them, you can get health insurance through them, and you can get, auto insurance through them. Okay, all through Geico. But let's say you come to me, let's say I'm a broker and you come to me, I can offer you life insurance or health insurance or all those other things as well. Or I can just focus on one thing. I can just focus on health insurance and I could offer you Geico and I could offer you State Farm and I could offer you Aflac. All these different companies inside one umbrella term. So like inside life, I can offer you 4 different companies.
Okay. Thank you.
Did I just confuse you a little bit more?
No, not at all. Not at all. Yeah.
Okay, cool. If you're still confused, please let me know. Because I know I can be a talker and talk in circles sometimes, so beware. All right, is everyone else okay on the same page?
Yes, thanks for that example about the broker one product from many insurers versus the sorry, I was reading those,
Okay.
versus the multi-line having is the insurer offering many products. That was
Right.
useful.
Good, 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 good. Okay, I'm glad. Yeah. And also, if you guys have been going through these terms and you're like, oh, I remembered it this way, share it with the group. Like I had someone in the last, or maybe it was two, I don't know, sometime I did this. And she offered some great tips like, hey, this is how I remembered this. This helped me remember this. So if you guys, have any mnemonics or anything that you want to share with the group, go ahead. Cut me off. Go ahead. Okay. So mutual insurance company. What is a mutual insurance company? We kind of touched on it earlier.
It's an insurance company that pays its surplus dividends to the actual policy owners.
Exactly, the policyholders. Okay, so there's a few things that I want you guys to think about when you're thinking about mutual, and you guys can write these down if you want. But when you think mutual, I want you to pair that with policyholders. So you can write policyholders get the dividends. So you can write that. You can write down participating. Okay. And then I think that's it. I think those are the two things. Mutual. So you think mutual, you think it's participating, and then you think policyholders get the dividends.
Mutual, I wrote down that mutual policyholders own part of the company,
And
which
policy,
will make it mutual. You have the insurer and you have the policyholder too. They're mutually coming together in business.
exactly. Oh, great. That's a great way to think about that. Mutual, you're coming together in business. Good. That's awesome. So exactly. Mutual, the policy. Oh, I remember the last thing. I was like, I'm pretty sure there's three things. So participating means that they can participate in voting. So in voting for the board, they have a lot of the policyholders, so the people who have policies, they have a lot of say in the company. So like they can vote for who's on the board. They can they can they can receive dividends. They participate in the company. Like you said, it's a mutual respect for each other. So like, you're mutually in business with them. You buy a policy from them, now you're together with them. You're working together with them. Okay, the other side of this is stockholder or shareholder insurance company. Okay, that's the other side. So that's the complete opposite of this. It's non-participating. The shareholders or the stockholders get the dividends. So that's like, the two different sides. I don't know why, but I always think of it as like there is no correlation to like either one being good or bad. But for some reason, I always think of mutual as like the good little angel, and then like the stock shareholder, like I don't know why. I don't know why I think of it like that, but I just do. So it's like the mutual is like, oh, you have a say in the company. Like you get money back. Like you get all these things just for buying a policy. But there's the stockholder and the shareholder. They like, this is my company. I'm not sharing it with you just because you bought a policy. Like this is my company. So I think of it like the angel and the devil, but like it's not like one of them is good or one of them is bad. That's just where my brain goes because my brain does silly things sometimes.
I love that. I think that's going to help me a lot.
Okay, good.
Thank you.
Good, good, good. Okay, so mutual, an insurance company that is owned by its policyholders, not the stockholders. Any profit that the company makes are either reinvested into the company or returned to its policyholders, often in the form of dividends or reduced premiums. Okay, so again, when you think mutual, I want you to think owned by policyholders. Policyholders get the premiums, and then it's participating. It's a participating policy, which means you are participating in everything, okay? You get to vote, you get to do all these different things. Okay? So that's what I want you to think for mutual. When we get to stockholder and shareholders, I'll say it now because if anyone's writing it down, you probably want them together. But when you talk about stockholders or shareholders, I want you to think non-participating. I want you to think, stockholders get or own the company, and the stockholders, the shareholders get the dividends. So they keep all of that within. Okay, they keep it all to themselves. Okay. policyholders, I mean, mutual companies are a lot more lenient. They're like, oh, everyone, come on, everyone can help. Okay. So if you have a life insurance policy with a mutual insurer, the company performs well financially. You might receive a dividend at the end of the year. After years of being with a stock insurance company, Sarah switched to a mutual insurance company because she liked the idea of sharing the company's profits through annual dividends. Okay, so you get thank yous back from them. You get, you get a say in who's going to be on the board. Mutual, you're just a lot more invested in it. Okay, you have a lot more say in the company as a whole. Stockholders and shareholder companies, you don't. They keep that all to themselves. Yeah, not that one's bad or good. That's just how I remember it. Okay, non-admitted insurer. So we talked about an admitted insurer. So what is a non-admitted insurer?
They
They're not
don't have a
granted,
certificate.
oh, sorry.
Good, say it.
Yeah, they're not granted certificates of authority.
Great. Okay, perfect. So they're not granted a certificate of authority, right? To be an admitted insurer, you have to have a certificate of authority. If you are a non-admitted insurer, you do not have a certificate of authority. You are not authorized to sell insurance in that state. Okay, the company is not authorized to sell insurance in that state. So let's relate some of these terms. A domestic insurer. Okay, think about it before I say it. So a domestic insurer is a company that is located in Florida and operates in Florida. Okay, it's a company that is located and operates in the same state. Okay, so they are an admitted insurer in Florida. They are a non-admitted insurer in Georgia. Okay, you have to become an admitted insurer in every state if you want to sell insurance in every state. Okay, not you and I, right? This is for the insurance company. The insurance company would have to be an admitted insurer in every state. Okay, so a non-admitted insurer, they don't have a certificate of authority, which means they cannot sell insurance in that state, and they don't have a certificate of authority. Okay, cool. So an insurer that has not been granted a certificate of authority by a state's insurance department, meaning they are not authorized to conduct business in that state. And again, if anything happens and the company falls through, you are not protected by any state fund or anything like that. So you may not receive your claims. A company in Florida needs specialized insurance coverage that isn't available through local insurers. They find an insurer based in another state that offers the coverage they need, but this insurer has not obtained a certificate of authority to operate in Florida. As a result, this company is considered a non-admitted insurer in Florida, meaning they're not authorized by the state's Department of Insurance to conduct business there. However, the company may still offer coverage through surplus lines, subject to different regulations. Okay, so we'll talk about surplus lines later on. But yes, okay. Non-participating policy. What are we thinking about when we talk about non-participating policy? I talked about this a little bit. Go ahead.
Shareholders.
Shareholders. We're thinking about shareholders, okay? Non-participating means if you buy a policy from them, you don't participate at all. Like you buy that policy and then that's all you have from the company, right? So now we're thinking stock insurance company. We're thinking shareholders, okay? We're thinking non-participating. We're thinking the angry little devil guy, okay? Again, not because it's bad, but that's just how my brain works. Okay, this type of insurance policy, commonly issued by stock companies, does not permit policyholders to receive dividends or participate in the election of the company's board of directors. Okay, so this is the complete opposite of mutual. Okay, so mutual companies and stock companies are complete opposites of each other. Stock companies, as you see here, are non-participating. So it does not permit policyholders to receive dividends or participate in the election of the company's board of directors. Mutual is the complete opposite of this, okay? It's owned by policyholders, they receive dividends, and they participate in the election of the company's board of directors. Okay, so these are the two sides, participating and non-participating. Participating is mutual, non-participating is stockholders. Go ahead.
I might be getting ahead of myself. Was that non-participating exclude cash value policies, or is that completely, totally different?
I would think about that differently. Yeah, I would think about that differently. We'll get to cash value, but like that's just kind of like a different term.
I mean, do they allow for those policies in
Oh.
non-participating?
Okay, cash value. Yeah. I mean, cash value.
Okay.
Yeah. Yeah, you can
Okay.
get cash value and yeah. I
Whether
mean,
non-participating or participating, they can get a policy with cash, a whole life policy with cash value.
yeah, so
Okay.
what she's talking about is when you get a whole life insurance policy, it's not in term life. It's not in, anything like that, but when you buy a whole life policy, an ordinary whole life policy, which is just a regular whole life, you will accumulate a cash value. Okay, so over time, as you pay into your policy, you will accumulate this abundance of cash that they can invest or that they can just kind of like keep there for, if you ever need it, you can borrow a loan from it, things like that. And you'll just kind of like gain this like side cash value. It's different from the death benefit. You'll still get the death benefit, but this is just some extra money that you've gained, okay? From just paying into this policy for years. Yes, you can get that in either participating or non-participating.
Okay.
What they're talking about is dividends.
Gotcha.
And dividends are just like extra money that the
Yes,
insurance
ma'am.
company has. Right.
After they pay everything out and pay all of their bills and what have
Yeah,
you. Okay.
exactly. That's just another benefit. That's just another extra little
Yes, ma'am.
thing. But yes. Okay, cool. David purchases a life insurance policy from a stock insurance company. His policy is a non-participating policy, which means that unlike policies from mutual insurance companies, David will not receive dividends based on the company's profits, nor will he have the right to vote for the company's board of directors. His policy provides the agreed upon coverage, but without any additional participation in the company's financial decisions or surplus distribution. Okay. Participating, what are we thinking about?
Policyholders.
They
Policyholder.
participate in they participate in the company.
Good, they participate in the company. What type of plan? What type of?
Whole life.
What type?
Mutual.
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 Oh, there we go. What type? Yeah, there you go. Mutual. So participating plan goes under mutual, right? A mutual insurance company is a participating plan. You think about policyholders get all the benefits. You think about they participate in the board of directors and all these different things. This is like the angel company, right? Non-participating plan goes under stockholders or shareholders company. Okay, the policyholders don't participate, and the stockholders or shareholders get the dividends. That's the devil side of things. Again, not really, but again, that's just how you can memorize it. An insurance policy that allows policyholders to participate in the company through the receipt of dividends and the right to vote for the company's board of directors. We're thinking mutual company. Emily purchases a life insurance policy from a mutual participating company. Her policy is a participating plan, which means she may receive dividends if the company performs well financially. Additionally, as a policy owner, Emily has the right to vote in elections for the company's board of directors, giving her a say in the company's management decisions. Okay, good. All right, private or commercial insurer?
It's an entity owned by a group or individuals that provides insurance.
Yeah, so it's the very fancy term for just like any insurance company that you know. So a private or a commercial insurer is just an insurance company that isn't owned by the government. Okay, so like we have Medicare, Medicaid, all of those things, that's all governmental side of things. But like State Farm, Aflac, Geico, all of those are all private insurers. Anything that's not owned by the government. So just any big insurance company that you can think of is a private or commercial insurer. So these are owned by individuals or groups and offer various lines of insurance. These insurers are distinct from government-owned entities. John purchased a life insurance policy from a well-known insurance company that is owned by private shareholders. This company operates as a private or commercial insurer, meaning it is not owned or operated by the government. Instead, it is a for-profit entity owned by private citizens or groups and offers various types of insurance, including auto, health, life to individuals and businesses. So again, it's just a very fancy term for literally any insurance company that you know. Okay, reciprocal insurer. What is this? And think about the term reciprocal. What does that mean?
Not sure if it's a group or individual, but they are both the policy holder and the insurer.
Okay, good. Good. Okay, so what does it mean to like reciprocate?
Like,
Go ahead.
There's an even exchange.
they mutually insure each other.
Okay, Cassandra, it's a little bit difficult to hear you. I don't know, it's
Oh,
muffled.
sorry. They mutually insure each other.
There you go, it's a lot easier. Yeah, mutual insurance. Good. Okay, perfect. So I love everything that you guys are giving. So to reciprocate something means I do something for you and you do something for me. We'll reciprocate it, okay? So I do something, now you do something, okay? So a reciprocal insurer, they just insure each other. I insure you, you insure me, okay? We're reciprocating it. An unincorporated group of individuals or organizations that agree to insure each other. They exchange insurance contracts through a common attorney in fact who manages operations on behalf of the group. Okay, I insure you, you insure me. We're reciprocating it. What is an attorney in fact?
It's someone who can act on behalf of the group.
Good. It's someone that can act on behalf of the group. Do they have to be an attorney?
No, they can just be somewhat of a fiduciary, just a person that is elected to have the responsibility um, of carrying out the legal tasks.
Great, perfect. Okay, so so a fiduciary is just, you know, you have a fiduciary responsibility, you're dealing with monies and it's your you have to, you know, uphold the best you know, ethical and reasonable things. I mean, you're dealing with money, right? So like fiduciary is just anyone that's dealing with money and they have to do the right thing with it. That's the simplest terms. Okay. So an attorney, in fact, they do not have to be an attorney. It's just someone who can act on behalf of someone. Okay. So my favorite way to describe an attorney, in fact, is actually going over to the real estate side of things. I don't know if anyone has their real estate license or anything like that, but the best way to describe this is I want to buy a house in, I don't know, let's say I'm buying a house in California. Okay, I live in Florida, but I want to buy a house in California. I will hire an attorney in fact, so it's just a person in California that I trust to act on my behalf. They can sign my contracts, they can make decisions for me just because I'm not over there, right? I'm in Florida. So I will hire someone who can act as me in California. Okay, so that's an attorney in fact. They do not have to be an attorney. They can be anyone. Okay. So, okay, let me not get ahead of myself, but that's it. So, when a reciprocal insurer is I insure you, you insure me, and they do this through an exchange in contracts through a common attorney of fact. Okay, so just a person who's kind of overseeing all of this. Good. A group of small business owners joins together to form an unincorporated organization that provides insurance coverage for its members. Each business owner agrees to cover a portion of the risk for the others. This setup is known as a reciprocal insurer, where all members of the group both act as the insurer and the insured, sharing the risks among themselves to protect one another from potential losses. All right, reinsurance. What is reinsurance?
It's when one insurance company transfers risk to another insurance company, but usually it's for like a larger risk.
Good. Perfect. Okay, so it's reinsurance. So it's just, hey, I'm gonna insure this. Let's say I'm an insurance company and I want to insure this. I want to insure Adele. I want the singer. I want to insure Adele, the singer. But I personally can't take Adele on, just me, because if something happens to her, I'd have to pay a crap ton of money that I don't fully have. So I'm gonna ask another insurance company to kind of reinsure me. So they'll take on half of the risk or a portion of the risk and say, okay, if anything happens, we will both help out to pay this. Okay. So, so it's just someone who, it's just an insurance company that is going to reinsure someone else for taking on a very high risk person or high risk business. Okay, so this involves one or more insurers, known as reinsurers, agreeing to take on a portion of the risk originally underwritten by another insurer who holds the entire policy. Okay, so perfect. So let's do an example. A life insurance policy issues a large policy to high net worth individual, which carries a significant amount of risk. To manage this risk, the insurance company enters into an agreement with a reinsurer. The reinsurer agrees to accept a portion of the risk associated with this policy. This means that if a claim is made, the reinsurer will cover a share of the payout, helping the original insurer manage its exposure and maintain financial stability. Okay, so again, I'm bringing on someone very high risk, so I need some backing. I need some help in case they actually do file a claim, because I won't be able to pay all of that myself. Does that make sense?
Yes.
Sweet. Okay, so I'm gonna skip this and I'm just gonna tell you guys why. So we just talked about reinsurance and now we're talking about a reinsurer. Okay, it's the same thing as insurance and an insurer, right? So a reinsurance is just the general term, and then reinsurer is the person or the company doing the actual act of reinsuring. Okay, it's the same thing. It's just talking about insurance and then insurer. Is it everyone okay if I skip this one?
Yes.
Yes.
Cool. Oops, I'm going the wrong way. Look, y'all, I'm trying to figure it out too. Okay, oh, okay, so it's actually been, okay, no, we'll take a break in about 9 more minutes and then we'll take a 10-minute break so you guys can do whatever you need to do and then we'll come back. So, risk retention group. What is a risk retention group?
It's a group that forms can give insurance to a specific type of employee group, something like that.
I think you're overthinking.
Is it
What-
the liability is provided by its own members, or like a liability is spread by its
Okay.
is a
I hear what you're
is a liability insurance is provided by its own members?
Okay, I hear what you're saying. So what does it mean to retain something?
To not transfer the risk.
To not transfer, I mean, just the general meaning of retain, like if a retention pond, okay? To retain something means to just keep it, okay? I'm gonna keep it with me. I'm retaining it. So risk retention group, I'm keeping the risk in my group. I'm not transferring the risk to anyone else, okay? I'm keeping the risk within the group, okay? So this is a liability insurance company created by a group of businesses or professionals with similar risk to self-insure against liability claims. It is owned by its members and spreads product liability and other commercial liability risks among the group members. Okay, so we're keeping all the risk within the group. I'm not going to reach out to an insurance company and transfer the risk to them. I'm just going to keep all the risk inside the group. we're just gonna have a lump sum of money that we're gonna pool in the center, and if anyone needs from it, then that's how we'll pay for it. But we're not gonna outsource, we're not gonna transfer the risk to anyone else outside the group. Does that make sense?
Yes.
Yeah, okay, cool. So we're retaining the risk, we're keeping the risk within the group. So after struggling to find affordable malpractice insurance coverage, a group of independent surgeons form a risk retention group to pool their resources and insure themselves against liability claims. Great. Self-insurers. What is a self-insurer?
Someone who pays their own insurance. They do not transfer the risk to an insurance company.
Right. They insure themselves. Hey, I don't want to outsource. I don't want to find insurance for myself. I can cover myself. I'm just going to put a set of money aside. I'm going to put some money aside. If I ever need it, that's what I'll pull from. But I'm not going to go find insurance. I'm going to insure myself. Okay. So they create their own self-funded plan to manage losses that may occur, choosing to retain the risk rather than transferring it to an insurance company. Okay. A large corporation decides to handle its employee health benefits internally rather than purchasing a traditional insurance policy. To do this, the company sets aside funds in a dedicated account to cover any medical claims that arise. By creating this self-funded plan, the company acts as a self-insurer, taking on the responsibility of paying for potential losses directly rather than transferring the risk to an external insurance company. This approach allows the company to have more control over its insurance costs and coverage. Okay, cool. So stock insurance company, we're finally here. So just to say it again, we had the mutual insurance company. Now we have stock. When you think mutual, you think participating, you think policyholders, you think dividends, they're receiving the dividends. Okay. When you think stock insurance company, what are we thinking? Complete opposite. Remember the devil side of things.
Stockholders.
Stockholders, good. We're
Yeah.
thinking stockholders. What else?
Non-participating.
They
Non-participating.
invest in the company.
They're the ones that invest in the company. They're the ones that get all the benefits from the company, not the policy holders. Perfect. You guys are right on. So an insurance company owned by shareholders, these shareholders invest capital in the company and expect to earn a return in the form of dividends or stock value appreciation. Profits are typically distributed to shareholders, not to policyholders, unless they also own stock. All right. So click to the next one. There we go. ABC Insurance Company is a stock insurance company owned by investors who purchase shares in the business. At the end of the profitable year, ABC Insurance pays out dividends to its shareholders, even though the policyholders don't receive any share of the profits unless they also own stock in the company. Unlike mutual insurers, a stock insurance company distributes its profits to shareholders rather than policyholders. Okay, perfect. Surplus lines insurance. What is surplus lines insurance? This is something that we saw earlier, but we didn't talk about.
This is where they insure the unusual risks. So like Tina Turner's legs or Adele's voice.
Good, perfect. The unusual risks, Adele's voice, Tina Turner's legs, those are great. Great, great, great. So it's a type of non-traditional coverage offered by surplus lines insurers. It provides protection for unique or high-risk situations that are not typically covered by standard private or commercial insurance providers. Okay, it's those unique or weird things that need to be covered. Okay, so a new amusement park needs liability insurance for its extreme riders, but traditional insurance companies consider the risk too high and decline coverage. The park turns to a surplus lines insurance provider, which specializes in covering unusual and high-risk scenarios that standard insurers won't handle. This non-traditional insurer offers the necessary coverage, allowing the park to operate its rides despite the unique risks involved. Great, 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 great. What else could this amusement park do to get insurance? There's two other things that I can think about that we talked about that this amusement park could get.
Can they go through Lloyd's of London?
Lloyd's of London, great, that's one of them.
They could do a risk retention group.
Risk retention, okay, good. So risk retention, so a captive insurer, right? Something that we talked about in the beginning, the Disney, right? Disney and then Disney Insurance, they could insure themselves to be a captive insurer. Good, 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 good. All right. Underwriting department. What is the underwriting department? This is simple, easy.
Quick question though, just to backtrack a little bit. So the risk retention group, it would be different in the example of the theme park because it's just the one company insuring themselves as opposed to a group of theme parks spreading the risk across the group, correct?
Right,
Okay.
right. You're exactly right. So risk retention group is a group of people or companies that come together and keep the risk inside the group, whereas a captive insurer is just that one company keeping the risk inside. So it's much more, it would be more so self-insurance, but because it's a company, it's called, and they're creating their own company, it would be called captive insurer.
Awesome. Thanks for that.
Yeah, of course. Thanks for bringing that up. Okay, so let's actually, before anyone answers this, let's pause here. Let's take a 10-minute break so you guys can go to the bathroom and do whatever you need to do. And then you can come back in 10 minutes and we'll start again. And whenever you guys come back in 10 minutes, we'll talk about lunch and when we want to do that. Okay,
Awesome. Thanks so much.
of course. See you in a little bit. All right. Let's see. Can't figure out how to turn my screen back on. Mm. Yep. Okay. So. All right. I'll give you guys a few minutes to get back. Sorry, y'all. I didn't even realize there were some people that couldn't even talk. You guys could give me a thumbs up whenever you guys are back, so I know who's here and if we should wait a little bit longer. Okay, we got 2 thumbs up. All right, we'll go ahead and get started. So, 3, sweet. Sweet. Okay, so, okay, well, you guys are here. So let's talk about lunch really quick. You guys can unmute or you can text in the chat, whatever you want to do. I have the chat open so I can see. Do you guys want to do, we could do lunch at 12, which is in 20 minutes. So that'd be 20 minutes for me. Or 20 minutes for everyone, but it would be 12 p.m. here. Or we can do lunch in an hour at 1 p.m. East Coast time, but that might work better for everyone else that isn't on the East Coast. So you guys think usually what I do is 1 p.m. because that's a little more even for everyone else, but I'm not really sure how everyone's feeling. We'll also every hour now, we'll take a 10-minute break. Okay, so I see 1
I
p.m.
think 1 is fine.
1 is good. Okay.
Yeah, I'm fine with 1 as well.
1 is good. Okay, so I'm getting a lot of 1s. Sweet. Okay, so we'll do lunch at 1. Okay, cool. So I'll give you guys another like little 5-minute break in an hour, even though we are gonna be going to lunch after that. But let's see. I'm gonna set my timer so I don't forget. Because I will talk through. I will talk the whole way through.
Is
All right.
the format that we're going to be doing, or are we switching up after vocab?
We'll switch up. Yeah, we're gonna switch up after vocab. We're gonna do like go through questions together, and I'll leave time for you guys to ask any questions or anything else that you guys want to go through that we didn't cover. Because like I said, we'll get through as much as we can, but unfortunately we can't, get to everything. But if there's like something that's like there's like a burning question about something, I'll give you guys time at the end that we can talk through it and ask questions and things like that. And if you guys have to leave early, but you have questions, you can just stop me and be like, hey, I have to leave, but like, I really want to ask these few questions. So feel free to do that as well. Okay. So, okay. So underwriting department. What is the underwriting department?
It's the department that assesses the risk of an individual applying for insurance.
Okay. Very, very cool. Good. That's perfect. So they do all the underwriting, right? They're responsible for evaluating insurance applications, determining whether to approve or decline them, and assigning risk levels to applicants. Okay, cool. So when Jane applies for a life insurance policy, her application is sent to the underwriting department of the insurance company. They carefully review her medical history, lifestyle, and other relevant facts to assess the risk of insuring her. Based on their evaluation, they decide whether to approve or decline her application and assign her a risk classification that will determine her premium. Just so you guys know, there are 3 types of risk classification. Okay, there's preferred, standard, and substandard. And we'll talk about those in a second, but that's what, when they're talking about risk classification, those are the 3 types. Okay. Okay, Kahoot. So I made Kahoots for you guys. Do you guys want to do them? Do you want to do them as a group? Do you want to skip them and continue doing what we're doing? How are you guys feeling?
Could you clarify what that is?
Yeah. So a Kahoot is just, it's kind of like a game, an online game, and it'll just kind of quiz you guys on what we just talked about.
I'm okay with
with doing it.
You're okay with doing it? Okay, so we got one here. Let me,
Yes, we can do that.
Yeah, like together.
okay, sweet. Yeah, let's do it together then. All right, so let me, okay, screen sharing has stopped. So let me pull up the Kahoot and we can just walk through it together instead of doing it. Okay. Why is that not working? Oh, because it's right in front of me. That's why. Let's see. All right. Hello.
Sorry.
No, it's okay. All right. We're getting there. Again, I'm not the best with technology, so it might take me a second, but all right. We're here. Let me chapter 1. We can do this. Okay. Do you guys want options? Like to pick from multiple choice like you would in the test, or do you guys just want to pull from the knowledge that you guys have?
multiple.
Options would be good.
Options. Yeah.
Options? Okay. So let me do if I can, maybe I can do learn. Yeah, okay, there we go. So there, I got it. So let's do here, share. Okay, can you guys see this?
Yes.
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 Is it big enough? Can you guys read it? Or is that better?
Yeah, we can read it.
Yeah.
Yeah.
Okay, sweet. All right, so you guys can yell it out, text in the chat, whatever you want to do, but the only thing I ask is let me finish reading the question before you answer, just so everyone has time to think about it before you give it away, okay? So, who is in charge of determining policy rates and determining dividend payouts?
Is it actuarial?
Department, yeah.
Actuarial, okay, is that real?
Actuarial, yeah.
Good, okay, great. Yay, correct. Oh, there's music. Can you guys hear that? Maybe it's just on my end. Okay, true or false? An insurer with a certificate of authority can sell insurance in any state.
False.
False. Do we all agree?
Yes, false.
False. Yeah.
Great. And why? Oh, is it gonna take? It's gonna take me away.
Be-
Okay.
They have to have it in the particular state. They have to apply for each state.
Exactly. They have to have it in every, so a certificate of authority only allows you to sell in a specific state. Okay, so in one specific state, and you have to be an admitted insurer, right? When you get that certificate of authority, you become an admitted insurer and then you can sell in that state, but that doesn't mean you can sell in every state. Okay, Reinsurance can involve more than one insurer to take on risk.
True.
True. Good.
True.
So what is a reinsurer? Can you guys hear this music, or is this just on my end?
Don't hear
Isn't
anything.
the reinsurer somebody who takes on risk with other insurance to minimize risk or to help with the risk?
Good. Perfect. Perfect. That's that backup, right? I want to insure I want to insure Adele, but I can't support her on my own. So I got to get a friend, an insurance company friend that's going to help me, and they're going to be the reinsurer. So in case she does file a claim, we can pay it because I can't personally pay it out all by myself. Okay, cool. Great. So created by businesses or professionals with similar risks to self-insurance against liability claims owned by its members. That was confusing. Sorry. I need to reword this one.
Risk retention.
Risk retention. What do we feel? Do we all agree?
Yep.
Yes.
Yeah.
Yeah.
Okay. I guess it wasn't as confusing as I thought. Cool. So risk retention, right? We're retaining the risk. We're keeping it inside. A large company with significant potential risks can create their own insurance sorry. An insurance company with significant potential risk can create their own insurance subsidiary known as
Captive insurer.
captive insurer. Good. Do we all agree?
Yes.
Yes.
Sweet. So captive insurer, remember Disney, and then Disney Insurance. Okay, so it's insuring itself. A fraternal benefit society is a non-for-profit. Okay, it's a non-for-profit. They come together for religion, ethnicity, certain things like that, and then they can have group insurance because they have a group. Industrial insurance, that's the one that I hate, right? I hate it so much because it doesn't make sense. We talked about maybe it's because of the industrial age that it's called that, but it's also called the home service insurer. They go door to door and collect $5 premiums, and it's for funeral benefits. And then participating, what are we thinking?
Mutual.
Mutual. Good. Perfect. All right. Great. You guys are awesome. All right. Nonprofit organization that provides insurance and other benefits to its members who usually share a common bond. Oh, I told you guys this one.
Fraternal
Fraternal.
benefit.
Yeah.
Fraternal Benefit Society. Great. What is a multi-line insurer?
An insurer who has multiple products in the lines of insurance.
Right. Great. Auto, health, home. You can buy it all from them. Domestic. What is domestic?
They're headquartered in the state and can sell within the state.
Great. And what are the other two that go along? Like when we talk about domestic insurer, there's usually there's three terms that we think about. So we have alien and foreign. Great. Great. So we have domestic, alien, foreign. Alien outside the country, foreign in another state, domestic, same state. Risk retention, we retain the risk. We keep the risk within. Good. And this is a non-for-profit. Sweet. Industrial insurer, is also called a free market insurer. Is that true or is that false?
False.
False. What is it called?
The home service.
Home service. Great. Home service. Right. I hate that one. I don't even know why I have to learn it. I don't even think it's relevant anymore. Whatever. Okay. Reciprocal insurer.
Insure each other.
Insure each other, right? We are reciprocating. I insure you, you insure me. Everyone okay with this one?
Yes.
Yes.
Good. What is insure themselves? What would that be called?
Self-insurer.
Self-insure. Good. An amusement park might choose this kind of insurance for their liabilities and risks.
Surplus lines.
Surplus lines, right? Surplus lines is that unusual risk. you know, so it's like unusual or really high risk, so they'll go to surplus lines. Okay, multi-line, ready? Auto, home, health, alien, outside of the country, working inside the country. Industrial insurance is the one that I hate, right? Home service insurance, those $5 premiums, super low cost for funeral expenses. Okay, surplus lines is that extra, is that unique circumstances. Okay. Stock insurance companies can issue non-participating policies, no dividends received, and can't participate in elections.
True.
True. Good. What is the opposite of this?
Mutual.
Visual.
Mutual. And they are what?
Participating.
Participating. Good. And they're owned by who?
Policy owners.
Shareholders.
Policyholders. Stock insurance companies are owned by the shareholders, the stockholders. And then mutual are owned by the policyholders. Good. Yay, you guys are awesome. Okay. Browse Cahoots. Okay, so now I can stop sharing. And we can go back over here. Oop. Get back over here. Share. Play from current slide. Okay, adhesion. What is adhesion?
It is when there's a contract that one party is bound to and the other one cannot negotiate.
Good. Good. Take it or leave it. Adhesion. Sticky. Adhesion. When you have an adhesive surface, it's sticky, right? Right. Right. So it's take it or leave it. If I take it, I'm stuck. I'm stuck to it. Okay. So it's a contract of adhesion is a contract created by one party, typically the insurance company, with no opportunity for negotiation by the applicant. The applicant must accept the terms as they are on a take it or leave it basis. Most insurance policies are contracts of adhesion. Okay, because they're not going to sit there and be like, oh, you don't want to do this? Okay, I guess we'll take that out of there. No, it's like one type of policy that they offer to all their clients or all their customers that are similar to you. And you can either take it or leave it, and you can go find someone else. So most insurance policies, especially like life insurance and things like that, are usually on a take it or leave it basis, which means there are contracts of adhesion. When Michael applies for a life insurance policy, he is presented with a pre-drafted contract by the insurance company. He cannot negotiate the terms or make any changes. He must either accept the policy as it is or decline it. This is an example of a contract of adhesion where the terms are set by the insurer and the applicant adheres to them on a take it or leave it basis. Agent. Who's the agent? What are the agents?
They're people who work on behalf of the insurer. They're the fiduciary for the insurer's financial, as in collecting premiums. And they also talk with the applicants.
Good. It's you and I, right? You guys are going to be agents. I'm an agent. You're an insurance agent. Okay. Everything that we do, an agent represents both themselves and the insurer in the application process. Okay. That's different than a broker. A broker will represent the insurance, or they will represent their client or customer and themselves. Okay. So what's best for them? What's best for the customer? An agent represents, because they work directly under a insurance company. So they represent the insurer that they work under and themselves. Okay. So, hey, I can offer you, I'm going to meet with a client. I can offer you this, but that's pretty much all I got because I'm only with this insurance company. Okay. So they represent themselves and the insurer. Make sense? I'm going to assume that we don't need to do an example on this one. An aleatory. What is an aleatory?
A contract where only one party is bound to promise.
Okay. I see what you're saying.
It's unequal.
There we go.
Equally.
There we go. It's unequal. So when you think of aleatory, you can think of a lottery. You can buy a $5 ticket and win $1 million, right? That's an unequal exchange because you only paid $5. Now they're paying you $1 million. Okay. So that's kind of the way, I think the best way to think of this is think when you see it aleatory, think a lottery. So it refers to a type of contract which the outcome depends on uncertain events, specifically unequal exchange of value between the parties. Okay. So think of, again, a lottery. You can buy a $5 ticket and win $1 million. That's unequal exchange. Aleatory, a lottery. Unequal exchange. A homeowner buys insurance. They may never have a fire, flood, or theft, in which case the insurer keeps the premiums. But if a fire destroys the home shortly after the policy begins, the insurer may pay hundreds of thousands of dollars, far exceeding the premium paid. Okay, so I buy a life insurance policy, and 2 months later, I die. I've paid 2 months of premiums, and now they have to pay my $500,000 death benefit. Okay, that's an unequal exchange in events. Okay, so that's an aleatory because I only paid 2 months and now they have to pay the full death benefit. Good. So aleatory, a lottery, unequal exchange. Apparent authority. What is apparent authority?
It's when an agent's authority is perceived by the customer based on the actions between them and the insurer.
Okay, good. Yeah. So there's a few of these. Express authority, apparent authority. There's a few of them and they can get a little bit confusing. So I really want to break this down for you guys. So apparent authority, I don't know. Sorry, I just got a text from my mom and she does the voice to text. And sometimes it just makes no sense at all. I don't know if you guys ever get those texts and you're like, huh? I need a translator. I just got one of those. But so an apparent authority refers to a situation where an insurance agent appears to have the authority to act on behalf of the insurer, even if they technically do not. A reasonable person would believe that they do based on the insurer's behavior or representations. Okay. So this is when the client or the customer believes that the insurance agent, that you and I have authority that we don't technically have. Okay. So let's say they call us and they say, oh my gosh, you charged me for this and my premiums went up and you did this and that and all these things. You don't technically have the authority to act on behalf of the insurer and explain why they did. Like, you can explain why they did that, but like you may not know. You didn't increase their premiums, you didn't do anything like that, but they thought that you do. They thought that you do that because you are tied with the company. So they believe that you are the ones that is determining their premium rates, and you are the one that's changing them, and you are the one that's doing all of this and that and the other. Okay, so that's apparent authority. The customer, the client, or the policy holder believes that you have authority to do something that you really don't have the authority to do. Okay, so Sarah, an insurance agent, helps a client make changes to their life insurance policy, even though the insurer has not explicitly granted her authority to make such adjustments. Because Sarah regularly represents the company and interacts with the client reasonably believes that she has the authority to make these changes. This belief is based on apparent authority, where the insurer's relationship with the agent gives the appearance that the agent has the power to perform certain tasks, even if they aren't specifically authorized to do so. Okay, so the policyholder thinks that you have the ability to do certain things that you don't. A broker, we already talked about a broker. So skip that one. A competent party. What is a competent party? This one's easy.
A person that they have to understand like the contract they're going to enter into.
Right.
They can't be like under the influence or anything.
Exactly. A competent party, they talked about this in law and everything like that too, right? So like when you're talking to someone, they have to be coherent. They can't have any, mental illnesses that are disrupting their way of thinking or their thought process. They can't be on any drugs, substances, alcohol, anything like that. They have to be competent. Okay. A person or group who has the capacity to understand the contract they're entering into. All parties must be legally competent, which means they should be of legal age, mentally fit, and not impaired by drugs or alcohol. Okay, let's skip that. Concealment. What is concealment? If I'm concealing something.
When you purposefully hide material fact.
Good, okay. So conceal it, okay? I'm keeping it to myself, okay? So occurs when an applicant fails to disclose a material fact that they know when applying for insurance. Okay? So when applying for a life insurance policy, Tom fails to disclose that he was diagnosed with a heart condition a year ago, even though he is aware that this information is relevant to the insurer's decision. This omission is considered concealment, as Tom knowingly withheld the material fact that could affect the insurer's risk assessment and the terms of the policy. If discovered, this concealment could lead to denial of his claim or cancellation of the policy. Okay, concealing something, I'm keeping it to myself, I'm not sharing it. Okay, I'm not telling you at all. Conditional. What is conditional?
Certain things have to be met before something else happens, like a eligibility is given or something along those lines.
Good, perfect. So a policy in which the insurer's obligation to pay benefits is dependent on the occurrence of specific events that the contract covers. Okay, so an example, Maria purchases a life insurance policy and the insurer promises to pay the death benefit to her beneficiaries. However, this promise is conditional. The insurer will only pay if Maria passes away while the policy is active. For the policy to remain active, Maria must continue paying her premiums on time and comply with any other terms of the policy. If she fails to meet these conditions, such as missing payments, the insurer may not be obligated to pay the death benefit. Okay, so Maria, it's conditional because they will only pay if she passes away during the policy's active period. Okay, so that's just, it's a conditional policy. All right. Oops. Consideration clause. What is consideration clause?
It's the portion in the policy that basically lays out the consideration exchange, whether it's like money or an action.
Good. Good. Yeah. So, perfect. So the part of the insurance contract that specifies the details regarding initial and renewal premiums, including the timing and frequency of the payment. So anything to do with premiums, so when I'm paying them, how much I'm paying them, how frequently, that is in the consideration clause of your contract. Okay. So when John purchases a life insurance policy, he agrees to pay an initial premium of $100, followed by monthly renewal premiums of $50. This agreement to make these payments is the consideration on John's part. In return, the insurance company promises to provide coverage and pay a death benefit to his beneficiaries. If the terms of the policy are met, the premiums and payment frequency form the basis of the consideration in the insurance contract. Okay, so this is the insurance. The consideration clause has anything to do with premiums, when to pay them, how to pay them, things like that. All be in the consideration clause. Okay, applicant. Who is the applicant?
Individual applying for insurance.
Good. Applicant. This is the person who offers a completed application and the initial premium as consideration to the insurer in return for insurance coverage. Okay, so that's the applicant. I'm going to go ahead and skip this one. Estoppel. What is this? This is one of my favorite words in insurance. Estoppel.
Also a real estate term. It's basically a provision that prevents a person going back on their word.
Good. Good. Perfect. So a legal doctrine that stops a party from denying or asserting something contrary to what has already been established as truth due to that party's own actions, statements, or behaviors. Okay. So they can't go back and say, oh, we never did that. Okay. Or we never said that. It's this doctrine stops that from happening. Okay. So if an insurance company through its actions or communications leads a policyholder to believe that they are covered for a certain claim, and the policyholder acts based on that belief, the insurer cannot later deny coverage for that claim due to the insurer's previous conduct. Okay. So, hey, I thought you were going to cover me for this. We talked about it. You know, you wrote it down, all of these different things. And then now when it actually happens, that you tell me that you're not going to cover it. So estoppel will stop that from happening. Okay. Very good. Express authority. So we had a parent authority. So a parent authority is when the policyholder, the customer, thinks that you as an agent has authority to do something or authority to act on the insurer's behalf when you might not have that authority. So now we have express authority. So that was a parent authority. Now we have express authority. So what's express authority?
It's when your authority is explicitly written out in the contract.
Okay. So we had a parent authority, express authority, and we do have, okay, I see what you're saying. Let's look at it. So the authority explicitly given to an agent by the insurer, clearly outlined in the agency contract. Okay. So like you're saying, it is explicitly said, and I wanted to be careful with that word, but it's like completely outlined in the agency contract. When I read my contract, it says I'm doing this, that, and the other, and I'm doing this, that, and the other. Okay. These are the specific things that I will be doing as an agent. Okay. So this is my express authority. Okay. So it's okay. So I'm gonna skip this because I feel like can understand that. Okay. Fiduciary. Who is a fiduciary? What are they? What should you think about? So a fiduciary, just think money. They deal with money. Okay. And they have to have, they have to act in a certain way that they're making all the best decisions, considering that they are dealing with someone's money. Okay. So the obligation of an insurance producer, and again, we are producers, we are insurance producers, we are agents. You can use those terms interchangeably. But yeah, so the obligation of an insurance producer to manage collected premiums responsibly and to provide clients with sound financial advice. A fiduciary holds a position of trust concerning the management of their clients and insurers' funds. Anything to do with money. Okay. So as an insurance agent, Emma collects premiums from her clients and ensures that these payments are promptly submitted to the insurance company. She is also responsible for giving her clients sound financial advice regarding their insurance needs. In this role, Emma acts as a fiduciary, meaning she is in the position of trust, both with the insurer and her clients, and must manage their funds and provide advice with care and integrity. Okay, fiduciary, think anything with money, finances, fiduciary finances. Fraud, what is fraud? So we talked about concealment. Now we're talking about fraud. Concealment is when you conceal, you hide things away. What is fraud?
Purposeful and meditated concealment for gaining benefits.
Good. Good. Okay. So the intentional act of providing false information. So, or making deceptive statements to receive compensation from an insurance company. Okay, so concealment is I'm not going to say it at all. Fraud is you're just providing completely false information. Like, oh yeah, I go to the doctor. I went to the doctor, so pay me my benefit of going to the doctor. Okay, that's like just completely false information. Or, oh, I have you know, diabetes, so pay me the benefit of, having diabetes and, having to pay for that. Because some policies, all you have to do is just submit, hey, I went to the doctor, and they'll pay you $100. Okay, so like if you say that and you never went to the doctor and they find out, then that would be considered fraud. Okay, so concealment, you're not saying anything at all, you're just keeping it to yourself. Fraud is you're providing false information. Good?
Good.
Sweet. So Tom intentionally lies on his life insurance application, claiming he has never smoked, even though he is a regular smoker. He does receive a lower premium. This act is considered fraud because Tom deliberately provided false information to deceive the insurance company with the intent to gain financial advantage from lower insurance costs. If discovered, this could result in denial of his claim or cancellation of the policy. How many years after someone gets a policy, can they get away with saying things that are false or wrong? Does anyone know what that time period is called, or how long that time period is? So after this certain time, let's say I'm not a smoker and I am a smoker, but after this certain time period, if they find out that I'm a smoker, then it doesn't matter. Oh, we got a chat. Let me see.
Period.
2 years. Oh, exactly. Okay, good. Sorry, I'm like, what? Sorry. I don't know why that took me so long to understand. 2 years. Perfect. 2 years. That's exactly right. So 2 years. After those 2 years, if they find out that they said something wrong, they can't say anything about it. Okay. Right? The incontestability period. Okay. After those 2 years, they can't contest anything that I said. They just have to go along with it, even if they know that it's wrong after those 2 years. Okay. Sorry, I feel like my brain's a little slow today. Okay. Implied authority. So now we have apparent authority, express authority, and now we have implied authority. So apparent authority is the client thinks that you have, or the policyholder thinks that you as an agent has more authority than you do. Express authority is what's explicitly given. It's what's outlined in your contract of what you are supposed to do as an agent. Now we have implied authority. What is implied? I'm going to show this, and then does anyone want to try to rephrase it in their own words?
It's authority that is given by the insurer to the agent to do their job. So like taking an application would be implied authority.
Good. Okay. So it's the things that you have to do as an agent that's not explicitly stated. Okay. So like express authority is like what you are supposed to do as an agent, like explicitly stated out there. But these are the things that like aren't stated, but you have to do them anyway. Okay. It's like things that just make sense. Okay, like you have to, like your fiduciary responsibility. Well, that might be stated. That's probably stated. But like you gave a great example. So like you help an applicant fill out an application. Now you have to take that application in. Let's say, let's say you're doing a written one. Usually they're online now, but let's say you're doing a written one. You have to take that application in. That's just implied that they filled out this. So now it's your responsibility to bring that application back to the insurer. Okay. So although Sarah's agency contract does not specifically state that she can schedule medical exams for clients applying for life insurance, it is considered part of her role as an agent to facilitate the application process. This is an example of implied authority where even though the task isn't explicitly written in her contract, it is understood as necessary for her to carry out her routine responsibilities as an insurance agent. Okay, good. So indemnity contract. What is indemnity contract?
A contract that restores the insured to where they were before the loss.
Great, 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 great. So a type of contract that aims to restore the insured to their financial position prior to the loss, no more, no less. Okay, so there was a fire and your house, half of your house burnt down. It is the responsibility in the indemnity contract of the insurance company to provide you the resources and everything you need to restore you back to your original position before that loss occurred. Okay, no more, no less. That's what an indemnity contract. So a life insurance policy typically functions as an indemnity contract when it includes a return of premium rider. In this case, if the policyholder outlives the policy term, the insurance company returns the premiums paid over the term, restoring the policyholder's financial position to where it was before they entered the contract. So if you outlive your term in usually a whole life, they should say whole life, because they're not going to do it for a term. But if it's a whole life and you outlive that that time, which is usually, what is it? When do whole life policies usually expire? At what age?
I actually don't remember that.
100.
100. Good. Yeah, 100. So they usually expire at 100. So if you live to 101 or you live past 100, then you'll get all your premiums back. Okay, and it'll restore you back to your financial position before you entered that contract because you outlived the whole life policy because it's supposed to cover you for your whole life. Now, I will say, remember how I said in the beginning that the best thing that you can do is find a mentor and a good support system when you're going to the field, because a lot of things will be different when you're actually working in the field. This is one of those things. For the test, know that it's 100. For real life, because people are living longer, they moved that age up to like 121 or 120 or something like that. So again, for the test, know that it's 100. For real life, that age is now moved up a little bit. Okay. Insurable interest. What is insurable interest?
It is the interest that a person has. Oh, it's hard to explain. I get it, but it's hard to explain. It's like the relationship interest that a person has with insuring someone who's not themselves.
Good. Good. Yeah. So insurable interest is you will have to experience some kind of loss if that person were to die or something were to happen to them. They'll say on here financial or emotional loss, but they're not gonna take it if you're just say, oh yeah, they would be a really like big emotional burden for me. It would more likely have to be a financial burden. So like, let's say you're a spouse and you're not the main breadwinner of the house, then like you would have insurable interest on your spouse who is the main breadwinner. Because if they were to pass away, then you can, you would experience a lot of loss. Okay. So you just have to have some insurable interest. Usually it's financial. Again, they'll say emotional, but it's usually has to be financial. So insurable interest is the financial or emotional stake one party has in the life of another, justifying the purchase of a life insurance policy. An individual has unlimited insurable interest in their own life, and insurable interest in another's life, and insurable interest in another person's life exists if their death were to result in a financial or emotional loss. This interest must be present at the policy's inception. Okay, so when you take out a policy, you have to have insurable interest in that person. But if insurable interest goes away, let's say you get a divorce, okay, and you marry someone else, it doesn't matter. It doesn't matter. After that policy has been initiated and it's going, it doesn't matter if you lose insurable interest in that person. You can still have that policy. You can't take out another one, but you can still have insurable interest in that person. All right. So Mary purchases a life insurance policy on her spouse, as she would face significant financial hardship if her spouse were to pass away. Because Mary relies on her spouse's income and emotional support, she has insurable interest in her spouse's life. This means that she stands to lose more if her spouse passes away, so she benefits more from their continued well-being. Okay. Insurance policy. What is an insurance policy? It's an easy one. I feel like we could almost skip this one. What do you guys think?
I think it's too easy to explain.
I think, right? It's easy to explain. But again, these are like the simple terms that you're gonna have to explain, because someone's gonna be like, well, what is a policy? Like, what am I buying? You know? So it's good, even though it sounds so stupid. It's good to be able to like just have some key words for it. Okay. So I'll show the definition, and then you guys can, think about it and think about how you would explain it. But it's a written agreement in which one party promises to compensate another for losses arising from unforeseen events. Okay.
They got that from ChatGPT.
Yeah. Oh, this one?
They got the definitions from ChatGPT because it's totally not written in latent terms.
And then that's fair, probably. Okay. So, we'll skip that because I think that's easy. But a legal purpose. What about legal purpose?
A purpose that's not illegal.
Super simple. The requirement that insurance contract must be for lawful purpose and not contradict public policy. Okay. I can't be a drug dealer and take an insurance policy out on my drugs. Can't do it. Okay. Because that's against the law. Simple as that. So an individual cannot take out a life insurance policy on a stranger without their consent or valid insurable interest, as this would violate the legal purpose requirement. The policy must serve a lawful purpose, such as providing financial protection for a family member or business partner, to be enforceable. Material misrepresentation. Oh, did I click that or did that just come up? I'm not even paying attention. Okay, so since it's already here, a misleading statement made by an applicant that may impact the insurer's judgment on whether to take on the risk. Okay, misleading statement. So when applying for life insurance, Robert claims he has never been diagnosed with a chronic illness, even though he has a history of heart disease. This is a material misrepresentation because the false statement is significant. The false statement significantly affects the insurer's decision-making process. If the insurer had known the truth, They may have declined the policy or charged a higher premium. This misrepresentation can lead to the policy being voided or claims being denied if discovered. All right, parole evidence rule. What is this?
It has to do with verbal versus written. So everything has to be written out. There can be no verbal contracts. It has to be written out.
Right, if you want it, write it down. If you want it in your contract, write it down, okay? A rule that stipulates that once parties have put their agreement in writing, any previous verbal statements are not included in that written document, and a written contract cannot be altered or amended by oral evidence. Okay, if you want it, write it down. Anything said is not going to be, it's not going to be taken into account for. Okay, it's gonna, if you just said it and you didn't write it down, it's like it never even happened. Okay, parole evidence rule, write it down if you want it. John and insurance company agree on the terms of his life insurance policy, and everything is documented in a written contract. Later, John claims that during their initial conversation, the agent promised an additional benefit not included in the written policy. However, under the parole evidence rule, John cannot use this oral statement to modify or add to the terms of the written contract. Only what is clearly stated in the written contract is legally binding. All right. Policy rider or endorsement. What is a rider?
Isn't that like an add-on?
Yeah, good. So it's added on to your policy, and it can either add something or take something away. Okay? So an amendment to an insurance policy that modifies the original terms, which could add or remove coverage or adjust other policy features. Okay? So you can add a rider on for your children, or you can have an aviation rider on there, which means you're not covered if you're flying an airplane. Okay, so it can add something or it can take it away. If you are adding something, it'll cost more. The insurance, obviously, they'll add more to your premium. If they're taking something away, it probably won't cost you anything because they're taking it away. A life insurance policyholder adds a waiver of premium rider, which ensures that if they become disabled and cannot work, the insurance company will waive their premiums while keeping the policy in force. Good. Reasonable expectations. What are reasonable expectations?
There are expectations of what any reasonable person would assume.
Great. Perfect. So the concept that the insured should receive coverage that a sensible and judicious person would expect from the policy. Okay, so just an expectation that any reasonable person would assume. Okay, policyholder purchases a term life insurance policy and names their spouse as the beneficiary. The policyholder passes away unexpectedly during the policy's term. Although the policy contains complex language, that's our alarm. So although the policy contains complex language regarding exclusions under the principle of reasonable expectations, the beneficiary expects and is entitled to the death benefit because a reasonable person would assume the policy covers death during the active term of the policy. So it's like, I mean, it's the common sense part of things. That's all you have to think about. Okay, so that went off. We can take a 5 or 10-minute break, or we can keep going. It's totally up to you guys. If you have to like run out to let the dog out or something like that, we can pause for a second. But we are also taking an hour break in 25 minutes. So it's up to you guys. If you guys want like a little quick 5-minute break, even just to like take a brain break, it's up to you guys.
I'm okay with keeping going.
Going? Okay.
Yeah, same.
Sweet. Okay, so let me make sure my alarm is off, so because that was okay, sweet. All right, representations. What are representations? So you have warranties and you have representations. Maybe that helps.
It's a fact that the applicant gives like to the best of their knowledge?
Good, good. It's something that you give to the best of your knowledge, okay? What is a warranty? Because that's kind of the other term that we pair with this.
It's absolute fact, absolute known.
Right. A warranty is 100% fact. There's no lenience in that. It's something that's 100% true. So a lot of times when we have people filling out applications, a lot of the things they say we're going to take as representations. We can't really take them as warranties because, then it would have to be 100% true. And like, let's say, are you a smoker? And you're not an avid smoker, you don't smoke all the time, but like you've smoked 3 cigarettes in your life. So like you can't say that you're not a smoker 100% because you've had 3 cigarettes in your life. So we would take it as a representation. Most of the things that you say we're going to take as representations instead of warranties. It's hard to say something 100%. And that goes with anything. Okay. So in most states, laws dictate that statements made on the insurance application are regarded as representations rather than warranties. A representation is required to be reasonably accurate according to the applicant's understanding. A representation is deemed fraudulent if it pertains to a significant factor in assessing risk and was made with intentional deceit. So when applying for a life insurance policy, the applicant states on the application that they do not smoke based on their belief and understanding that they have not smoked consistently in the past 5 years. This statement is considered a representation. If later discovered that the applicant had smoked 1 cigarette within the past year, it could affect the validity of the policy, but only if the misrepresentation is deemed as material to the risk. And that's the benefit of naming something as a representation rather than a warranty. Because if you say it's a warranty, then like what they said, hey, I'm not a smoker, has to be 100% fact. Subrogation. What is subrogation?
When an insurance company can seek reimbursement from a third party that caused the accident.
Good. That's perfect. So the insurer's right to seek reimbursement from a third party responsible for causing a loss to the insured. Okay. So let's say I get in a car accident and someone rear-ended me and I get in a car accident. Well, I'm going to go to my insurance company and say, hey, I just got in a car accident. Like I need money to pay for maybe medical bills and my car is damaged now. They will give me the money, but my insurance company will then go after the insurance company of the person that hit me and ask for money from them. Because yes, they're insured and they're going to pay me, but they don't want to pay because it's not either of our fault, it's someone else's fault. So that's subrogation, is the right for my insurance company to go after the guy that hit me or the guy's insurance company that hit me. Okay. Subrogation generally does not apply to life insurance. It is more common in health or property insurance where the insurers pay for the losses and then seeks reimbursement from a third party responsible for the damage or injury. Okay. Unilateral contract. What is a unilateral contract?
A contract where only one party is bound to the promise of the contract.
Good. Unilateral, one-sided. Okay, only one side has to do what they say. Okay, most insurance contracts are unilateral. Okay, so refer to agreement in which only one party, the insurer, is obligated to fulfill a legally binding promise. So a life insurance policy is unilateral, where only the insurance company is legally obligated to pay a death benefit to the beneficiary upon the insured's death. Provided that the premiums have been paid, the policyholder is not legally required to continue paying premiums, but if they stop, the insurer is no longer bound to provide coverage. Okay, so if we take out a policy, there's no legal binding there's nothing legally binding us to continue paying premiums. If we stop, we won't get coverage. But there is a legally binding promise to us from the insurance company that they will pay us if something happens during our policy term. Okay. Utmost good faith. What is utmost good faith?
Where everybody, all parties agree to give all material facts.
Good. Yeah, utmost good faith. It's just you're doing things to the best of your ability, to the best of your knowledge, in good faith. Okay, so it has to do with the belief that both the policyholder and the insurer need to know all material facts and relevant information and are thus obligated to disclose this information to each other, ensuring that neither party withholds important details that could affect the agreement. All right. We're going to skip this example. All right, valued contract. What is a valued contract?
It's a contract where the benefit is a lump sum for a specific event, such as a death.
Okay, good. So a type of insurance contract that pays a specified amount regardless of the actual loss occurred. Regardless of the actual loss incurred. Okay, so let's say I die and my spouse has a policy out on me, a life insurance policy out on me, and it's for $50,000. And let's say I die, but because of my death and everything that happened and the funeral expenses and all these things, the cost is $100,000. It does not matter. The insurance company is going to pay $50,000 and that is it. No more, no less. It could go the other way where I have a life insurance policy that is, $100,000 and they only have to pay, my family only has to pay $50,000 for funeral expenses and everything else. Okay. So now they just have an extra $50,000. But either way, the insurance company isn't going to pay more or less. Okay. A life insurance policy pays the face value of the policy upon the death of the insured, regardless of any other financial factors. Good here?
Good here.
Perfect. Voidable contract. What is voidable contract?
It's a legal contract that is enforceable, but due to a specific condition can be nullified.
Good, perfect. So a contract that can be legally voided by one of the parties under certain conditions acceptable to the court. A life insurance policy may be considered a voidable contract if the policyholder is found to have misrepresented their health status during the application process. For instance, if the insured claimed to be a non-smoker, but was actually a smoker, the insurer may choose to void the contract and deny the death benefit due to this material misrepresentation. A waiver. What is a waiver? It's easy.
The relinquishing of a right?
Yeah, good. You're just giving something up. You're waiving it. I'll waive your fee. You don't have to pay your fee. Or I'll waive my right to do this. I can't do it anymore. I'm giving my right away. Okay. The voluntary relinquishment of a known right, legal claim, or benefit. This can involve opting out of coverage, like waiving a mandatory health insurance benefit, or relinquishing the right to pursue a claim against a third party in the event of a loss. Okay. Great. So a life insurance company may issue a waiver of premium rider, which allows the policyholder to stop paying premiums if they become disabled. Okay. Warranty. So we talked about this earlier. So what is a warranty?
Information that has to be 100% true.
Good. Good, good, good. A warranty is information that has to be 100% true. What's the term that we talked about it with earlier?
Representations.
Representations, good, 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 good. And those should be true, but they don't have to be 100% true. Okay. And what are most statements on applications? Are they warranties or representations?
Representations.
Good, perfect. So in most states, laws indicate that the statements made by the applicant on the insurance application are treated as representations rather than warranties. A warranty must be completely accurate and true in every detail. Unlike representations, a breach of warranty can avoid an insurance policy regardless of the materiality of the breach or its impact on the loss. Okay. So a business key person life insurance policy, the company might warrant the insured key person does not engage in hazardous activities such as skydiving or mountain climbing. If this warranty is proven false, the insurer could void the policy because the specific activity significantly impacts the risk. Okay, Kahoot. Let's go back to Kahoot. Did you guys like the Kahoot? Do you guys want to do it, or do you guys want to keep going?
Love it. I think it's fun.
Okay, good.
Little test. I love it.
Good, 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 good. Okay. So I think I did learn. Yeah. Okay, so I need to share my screen now. Stop sharing. Okay, can you guys see this?
Yes.
Yes, okay, cool. So a contract of blank is created by one party and the applicant must take it or leave it.
Adhesion.
Adhesion, good. What's I want to ask you guys, but I also don't remember what the questions are, so I don't want to give anything away. What do you think about? What did I tell you to think about when I said aleatory? What's the way to remember that?
It's uneven.
Uneven, yeah. So a
Lottery?
lottery. Good. A lottery. Okay, good. I'm not gonna say these because I don't know if they're in. Good. Okay, we got it. I don't know if they're in future questions. I don't want to give it away. An agent represents both themselves and the blank during the application process. An agent, so you and I, who do we represent?
The insurer.
Sure.
The insurer. Okay, good, 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 good. So that's gonna go away. Okay, so the agent represents both themselves and the insurer. Who does the broker represent?
Client.
Client
The client and
themselves
themselves. Good. Why?
because they have the broker, it doesn't work for a company, they kind of work for themselves, so they have access to like a bunch of different what is it called? Like insurance companies.
Perfect. Perfect. They have access to so many, they don't have to represent one. They represent themselves and the client's best interests. Okay. So the agent works for an insurance company. Okay. So they represent that insurance company and themselves. Okay. Because they can't really represent the client as well because the client will have to take it or leave it, right? It's like, this is how we have. You can take it or you can leave it. So they don't really represent the client as much. Okay, a type of contract in which only one party, the insurer, is obligated to fulfill a legally binding promise.
Unilateral.
Yes.
Unilateral. Good. What is estoppel?
That's when they can't go back on their promise.
When they can't go back on the promise. What about indemnity?
Restoring to before the loss.
Good. And then subrogation.
the insurance can seek reimbursement from the third party that caused the peril.
Good. Okay, so these terms can all be a little bit confusing, right? So do you guys have any ways that you want to share with the group that help you remember these terms? Any mnemonics, anything like that that can help the rest of the group? Anything? See if I have it down.
I just think for estoppel, it's stop is in there, so it stops you from going back on your word.
Good.
And unilateral, uni meaning one, like unicycle. So only one party benefits or one party is bound.
Yeah.
And for indemnity, I kind of think of it as contraband. I used to be in the military, so indemnity period where they give up the contraband and they don't get in trouble for having it.
Okay.
Restore
Good.
back to like you not getting in trouble. So that's how I thought.
Good. Cool. Anyone have anything for subrogation? See. Thank you.
think I a sub meaning like another, like another. So I use sub to relate to the third party.
Great. Perfect. Okay. Sub like a substitute teacher. Okay, go
That's a
get
good
some.
one.
Good. Yeah. Okay, sweet. So let's go through one more time. What's estoppel? And anyone can give it a try.
Stops them from going back on their word.
Stops them from going back in their word. Okay. Indemnity.
Restoring the insured to prior to loss.
Good. Restoring them back to their initial, prior to loss. Subrogation.
Going after the guilty party.
Right. Going after the guilty party, the substitute. Yeah. Okay, cool. Cool. An insurer's right to seek reimbursement from a third party responsible for causing a loss.
Subrogation.
Subrogation. Good. Easy. What about parole evidence rule? What is that one?
That's when parole evidence, verbal, that has to do with verbal contracts have to be written and verbals will be thrown out in court.
Good, right? If you want it, write it. If you want it, write it down. If you want it, write it down. Make the evidence. Okay. Cool. Estoppel is a legal principle that prevents a party from going back on what has already been established. True or false?
True.
True. Do we all agree?
Yes.
Yes.
Yeah. Right? So anything that okay. So authority explicitly given to an agent by the insurer clearly outlined in the agent's contract.
Express authority.
Express. What is apparent and what is implied?
Implied is when they have that's the common sense one, and the apparent is what is perceived.
Good. Apparent is what is perceived by the policyholder or the client, what they think you and I can do. Okay. Implied is not explicitly written in our contract, like express authority, but it's just things that make sense for us to do our job. Good. Indemnity contracts aim to restore most of the financial losses. True or false?
False.
False. What are they? Why? Why is it false?
They restore all of what was lost.
They restore all of what was lost. Good. Once parties have put their agreement in writing, any previous verbal statements are not included in the document. What is that? You want it, write it.
Parole evidence
Parole
rule.
evidence.
Good. Parole evidence rule. If you want it, write it. Parole evidence rule. Policy writers or endorsements modify original policy terms, true or false? So what do writers do? Do they modify original policy terms?
Yes.
Yes.
True. Good. Aleatory contracts may have significant imbalance in paid premiums to what is paid out in uncertain events. Sorry, I beatboxed through that whole thing. Aleatory contracts may have significant imbalance in paid premiums to what is paid out in uncertain events. True or false?
True.
True.
True. So aleatory, what do we think?
Uneven.
Uneven,
lottery.
right? And a lottery, it's uneven. I could buy one lottery ticket for $5 and win $1 million. Okay, so true. Good, uneven. Woohoo! All right, good. Can I figure out? Okay, there we go. And then stop screen sharing. And then go back here, so adverse, okay. So, it's only 3 minutes, so I'm just gonna let you guys go early because I didn't give you guys a little bit of a break. I hope you guys had a good lunch. I'll let you guys kind of come back in. Whenever you guys are in, you can just give me a thumbs up or a text in the chat so I know. Mm,
I mean,
Hello.
I'm good with things.
Hello. Strong stuff.
Hi.
I need like that 100 if I have any 100.
Oh, you can't talk. Let me see. Okay, no, you got it. Okay, everyone should be able to talk. If you can't talk, text in the chat.
I was doing it. It was
It,
still wasn't, but it like literally just started working.
it started working.
Yes, just when I came back.
Yay. Okay, I think mostly everyone is back. So I'm gonna give like a minute left. I took a nap. I don't know about you guys. I had some food and then I took a nap. What did you guys have for, while I pull this up, what did everyone have for lunch or what did you guys do?
I listened to a podcast while eating lunch.
Okay, good. What
I
podcast?
ran errands.
You ran errands? Fair.
Yeah.
It was a Candace Owens.
Okay, I love Candace Owens.
I did errands.
Very cool, very cool. We got a lot of errands. A lot of errands. I don't know why I can't figure this out right now. Oh, there we go.
Right now, my daughter is at my friend's pool.
So while
Oh,
she's swimming, I'm watching her.
jealous. Yeah. I want to be, that sounds awesome. Is it nice and sunny where you guys are, or is it cloudy? It's kind of cloudy here in
Hot.
Florida. It's hot.
It is hot and sunny.
Ah,
Yeah.
jealous.
I'm in Colorado.
Okay. My brother's in Colorado.
So I live in Loveland, which is about an hour from
Oh,
Denver.
we went skiing, and we went skiing this year in Loveland.
Okay, so Loveland Pass is different than Loveland.
Oh,
Um,
okay,
so,
okay.
so Loveland Pass is about an hour and a half, 2 hours from me.
Oh,
So it's up
wow.
in the mountains. We are north of there. So we're north of Denver
Okay.
by Fort Collins.
Fort Collins, Greeley.
Yep.
Gotcha. So, okay. So my brother is out in Colorado Springs right now. He was in Lamar. Do you know Lamar? It's kind of
Yeah,
in the
that's in the plains. That's a big no.
He was in the middle. Yeah, he was in the middle of nowhere. He was doing research on snakes.
Really?
Yeah, and he was looking at the medicinal benefits of snake venom and their active ingredients against cancer cells.
Interesting.
He's crazy. He's opened snake bite clinics in Honduras and all over, and
Oh my
Oh,
gosh,
that's so cool.
crazy.
yeah, crazy, crazy guy.
As long as somebody else will get the venom, I'm good at doing the research.
Right. Someone
Well,
else
there you
is able
go.
to. Exactly.
Colorado Springs is pretty though.
Oh yeah.
Yeah, that whole area is really nice. Manitou Springs is gorgeous. Right
Okay.
there. Yep.
I'm going out there. His birthday's in August, so I'm gonna go out there and visit him.
Have
So
them take you to Manitou Springs.
Manatee Springs.
Yep.
Okay. I'll
Have
tell.
them. So if you want to go to Denver and you want to do something fun, it's not like great food, but it's a really cool experience. Have them
Okay.
take you to the Casa Bonita.
The Casa Bonita, Casa
Yep.
Bonita.
Yep.
Okay.
And it's in Denver, and you'll have to get reservations like now in order to
Oh
get there.
wow. Okay.
But it's just an interesting restaurant. It has a waterfall and cliff
Oh wow.
divers and caves you can go
Wow.
through. It's just a kind of a.
Crazy.
Have you ever watched South Park? They talk about Casa Bonita.
Okay.
And the creators of South Park actually bought Casa Bonita and own
Oh,
it
wow.
now.
That's awesome. That's awesome. Okay, yeah, I'm gonna talk to him because that sounds super cool. I know he has like something set up, but I think we're gonna be there I think I'm going for like uh 4 days or something. I don't know.
Okay. Yeah. So if you
Yeah.
go to Denver, do that. And Manitou Springs is right outside of Colorado Springs and it's beautiful. There's the Seven Falls and
Oh,
there's
wow. Okay.
oh, you should go to the Cheyenne Mountain Zoo and you can feed giraffes.
Oh, cool.
That's
Okay.
really fun too. It's right on the mountain, so you climb up the mountain to go through the zoo, but
Wow.
it's really cool because you get to feed the giraffes.
Yeah. Wow. Okay. I'm like, I gotta tell him all these things and see what we're doing. That's awesome. Yeah, Colorado's beautiful. I love it out there. I really do.
It is beautiful here.
Beautiful. Are you a skier?
Mm. No, I water ski, but I don't snow ski.
Okay.
Too
Fair.
cold for me.
Yeah.
Too expensive. It's really expensive here too.
Yeah, I think that's why he took me, I think, to Loveland this year because it's more of like the local, you
Yep.
don't get like, those crazy prices that
Vail,
like
Aspen.
Breck or yeah,
Wreck.
all those crazy, yeah. He gets so annoyed. He's like, don't support those big industries, like support the locals. So he
I
always
agree.
says, yeah. Yeah, for those of you that have no idea, Loveland is like a Loveland pass, ski pass is like a locals area to go skiing and snowboarding. And it's beautiful. I mean, it's Colorado, so it's beautiful. But it's not those like crazy expensive prices that you'll go pay for if you go to like Breckenridge or any of those other, super popular places. But it's just as nice, I think.
Yep, it is nice.
Okay, so I think I have this up. I'm just going to get to here. Okay, so let me share my screen. So do you guys want to go through questions now, or do you guys want to, what are you guys thinking?
Questions would be great.
Questions? Okay.
Questions sound good.
Questions.
Yes, questions.
Let's do it. Oh, I see Tony, 93 here in Michigan. Oh, burgers and hung out with kids. Oh, I'm jealous. That sounds awesome.
My
Sounds.
family reunion is this week, actually today in Michigan, but I couldn't go.
Oh no. Oh, because of this or because of other?
Just finances.
Yeah. Okay. I hear you. Oh my gosh. Yeah. Michigan's another beautiful place. It's cold.
Mhm.
It's cold up there. Okay. Let me. Oh, can you guys? Hold on. Stop screen sharing. Okay. Here we go. Can you guys see my screen?
Yes.
Yes.
I need my glasses. Hold on.
Yeah, it got small. Let me see if I can make that bigger. Can you guys see it now?
Yes.
Yeah.
Yes, ma'am.
Better. Okay. All right. So I'll read the question, kind of like what we did for Kahoot. I'll read the question, and then you guys can unmute, text in the chat, whatever you want to do. So let me just show you guys this. Let me zoom back out. There's Pearson, depending on what state you're in. This is like, these are questions according to your state. Unfortunately, I can't go to like specific questions. So like, it's kind of just whatever it gives me, which is a little unfortunate, but we'll see if we can get like a good array of different topics. But we'll do like 25 questions from Pearson. We'll do 25 from PSI and 25 from Prometric. And then we'll go from there if you guys want to just go over different things, if you guys want to keep going through questions, but that's what we'll do. Is that okay with everyone?
Yes.
Yes, ma'am.
Great. Okay, cool. All right. And I want you guys to like talk and discuss with each other and, figure out these questions, and I'll butt in when I feel is necessary. Okay, so a tax advantage retirement plan that allows nonprofit employees to invest in annuities.
403B.
Okay,
Mhm.
everyone okay with this one?
Yes, ma'am.
Okay. So if you don't know, that's totally okay. Just, take note of it. And you'll see it again. Do questions, do questions, do questions. I can't, stress it enough because you'll learn as we go through these questions as well. Okay. So a tax advantage retirement plan that allows nonprofit employees to invest in annuities. The biggest thing that they're going to relate here is nonprofit employees. When you see nonprofit employees, you're usually going to go to 403B. Okay. All right. So again, like as you go through these questions, you'll start to see key terms. Whenever you see those key terms, they'll want you to pick a certain answer. Okay. All right. An annuity that provides payments for two people and continues after one annuitant dies.
Joint and survivor annually.
Joint and survivor. How does everyone feel?
Yes.
Yeah.
Yeah.
So there's joint and survivor, and what's the other one that's similar?
Is it joint and survivorship?
Survivorship. Okay. Okay. So
Or
we
are those both the same?
let's see. Yeah. Okay. You guys can unmute and talk. Let me hear what you guys think. You guys talk with each other.
Another
So
one similar to these
yeah,
two?
it's joint and survivor annuity, and then there's one more that is similar, and you pretty much got it there.
Survivorship?
Survivorship. Okay. Okay, cool. So what's the difference? What's the difference between the two? Because I know
So
that
for
these
survivorship,
a little
in the
confused.
survivorship, the annuity, the survivor is a beneficiary and not a joint annuitant.
The survivorship, isn't it used for, or it covers two,
There we go. That's more.
yeah. And the benefits are paid on the, uh, after the
Remaining
or
balance.
last surviving, yeah. Last
Yeah,
surviving person gets the benefit.
good. There we go. There we go. So, okay, so we have joint and survivor annuity. So it provides payments for 2 people and continues after 1 annuitant dies. Okay, so it'll continue paying after only 1 dies. Okay, and then we have survivorship, right? The last survivor, and that one, I'm totally confusing you guys. I'm so
No,
sorry.
you're good.
We're talking
So,
about annuities, not
Can
life.
can I share how I remember this?
Yes, go
Okay,
ahead.
because it was noted and from what I remember, but the joint and survivor is first to die and the survivorship is second to die.
Yes. Okay, and let me rephrase. So again, there's a lot of overlap between like life and health and all these things, but so we're talking about annuities, and what I'm talking about and what I was trying to guide you guys to get to is more talking about the life insurance side of it. But an annuity is something that's going to pay you in retirement, right?
Mm-hmm.
It's not going to pay anyone after they die. Okay. It'll, for a joint and survivor annuity, it'll pay when both of them are retired. And then when one dies, it'll continue paying. But as for the other side of it, which is the life side, when you have a joint and survivor life insurance policy or a survivorship life insurance policy, that's where it'll pay after one of them dies or after both of them dies to the beneficiary. So and I totally like confused you guys a little bit. This one's talking about an annuity. The one that I was trying to get you guys to talk about is talking about life insurance. So I apologize for confusing you guys there.
Confusing.
Yeah, I'm so sorry.
Is
Didn't you?
the survivor annuity for tax benefits so that when both parties die, that it pays the estate or it helps with estate taxes? Is that why they do a survivor annuity?
So I mean, annuities, like it can be, but annuities are not really to pay for like death benefits. Annuities are to pay for like to have money in retirement,
Right.
right? So it continues paying because the other person's still alive. Okay, and they still need money to support themselves and to live. So like, yes, they can use that money to like, pay for things for things for the person that died. But usually when you're talking about annuity, it's to have an income stream. When you're talking about a death benefit in life insurance, that is usually to pay for funeral expenses and taxes and certain things on their life.
Gotcha.
Did that make a little sense?
Yes.
Okay, sweet. And I apologize because I'm only doing health and accent. Is the reason I've never seen these 2 questions in my portal test because I'm only doing health and accent. Have you gone through all the questions already? Because there's a test bank of questions. There's a huge test bank of questions, okay? And you guys can go through them, and some of them you can do more than once, some of them you can't, but they will all be randomized and put into a test. So some of these questions you haven't seen because maybe it just wasn't on your test. It could have just been randomized, and that part, this specific question had to,
Ava, I'm gonna use the restroom.
but yeah,
I'm gonna use the restroom. I'll be right back.
so
Sarah, do you need anything? Okay. Ava, you want anything while I'm in here?
that's why you probably haven't seen these questions, is just because the tests are randomized and you might not have gotten this question. That's the only reason. Okay, so just to clarify, what I was trying to get you to talk about and what I was trying to get you guys to talk about was talking about life insurance, but this is specifically with annuity. I apologize for the confusion. But remember, annuity is to supplement for income, and life insurance, the death benefit is after they die, where annuity you use when you're alive. Okay. I apologize again for the confusion. Are we all on the same page? I'm sorry. Might have just confused
Yeah.
everyone. Okay, good. All right. Which of the following statements about Social Security retirement benefits is correct?
The full retirement age varies depending on the year of birth.
Okay,
I
do we
agree.
all agree on this one?
I agree.
Agree? Okay, sweet. Cool. So that's something, just to have note of. It's not something that, you need to like stress over, but yeah, depending on what year you were born, their retirement benefits will vary. Do you guys know why?
Because the older you are, the more benefits you get. Or the longer you wait until you take Social Security, the bigger your benefit.
Okay, so so this one's talking about depending on the year you were born, not the year you retire.
But is that because of your age?
Because of your age. So essentially they just changed retirement age. Because people are living longer, people are working longer, there's more people on Earth in America, right? So they want to be able to kind of utilize these funds and have them for a while. So they kind of moved the age up. Okay. Because a lot of people are working longer and, we need to keep some finances for the next generation. Okay. So this one specifically, I understand what you were saying, and you're exactly right. Like it depends on what age you retire at, on how much benefits you will receive. But this question in particular is just talking about if you were born, I think now it's 67 and older, where it used to be 65. Is that correct? You guys can correct me on this.
That's correct.
That's correct. Okay, so it used to be at 65 years old, you can get full retirement. Now it's at 67. Or you can start getting retirement at full, but you can start getting retirement at 67. And then before it was 65. And that's just because people are living longer, working longer. We have more people, so they're trying to, I guess, well, yeah. Let me not get in there, but yeah. Does that make sense?
Yeah.
Yeah, okay. All right, so what is the purpose of Social Security earnings? What is the purpose of the Social Security's earning test?
To reduce the benefits for those who earn income while collecting early retirement benefits?
Good. Do we all agree with this?
Yes.
Yes.
Yes, ma'am.
Yay. Okay, so, to reduce the benefits to those who earn income while collecting early retirement benefits, okay? Because, we don't have endless amounts of money, right? So we need to make sure that we're not just giving money out to everyone and anyone. We need to make sure that they're going along with the certain requirements and that they're eligible. And if they're still earning an income and, collecting retirement benefits, then that'll kind of deplete our funds that we have set aside for retirees. Okay. And that was what I was trying to say, but couldn't find the words to say it for the reason why they moved the age up as well. We don't want to deplete those funds. We want them to last for generations. Okay. So which of the following best describes how Social Security survivor benefits work for a spouse?
The surviving spouse may receive reduced benefits as early as age 60.
Okay, do we all agree?
I don't remember.
You remember? It's okay.
I want to say it's the first one.
Okay. All right. So let's talk about it. Do we have a tiebreaker, or should we talk about it? So which of the
Because it sounds like it would make sense that the surviving spouse would be a beneficiary and they're really not tied into the deceased spouse's work income other than marriage.
Mhm.
So for me, it sounds like it would make sense to receive 100% of the benefit.
Okay, I hear what you're saying. Anyone want to argue option C?
I think C makes more sense, but I can't remember why. I feel like I read this before.
Yeah. Okay. Anyone want to try to take a gander, a little guess? Is for a tiebreaker?
I'll say C for the tiebreaker. The
C for the tiebreaker.
receive.
Okay. So let's go for C and then let's
Okay.
talk. Okay. So what happens? You got a shot. Good. Okay. C. Heck yeah. So which of the following best describes how Social Security survivor benefits work for a spouse? Okay. Social Security survivor benefits. So we're talking about Social Security. We're talking about something government owned, right? And survivor, you're the one, your spouse passed away and you're the survivor. Okay. So the surviving spouse automatically receives 100% of the deceased worker's benefit. So unfortunately, Social Security does not automatically give that right away. Okay. You, as a spouse, the surviving spouse may receive reduced benefits as early as age 60. So they can start collecting money from their spouse passing away at age 60. Okay, but before that, they're not just going to receive 100% of the worker's benefit.
Okay.
Mm-hmm. Yeah. Everyone okay with this one?
Yeah.
Okay, sweet. Which of the following best explains why Social Security retirement benefits are adjusted annually?
Keep benefits in line with inflation and
With
cost.
inflation.
Yep.
Mm-hmm.
Do we all agree? Sounded
Yes,
like
ma'am. I
sweet.
haven't gotten to this portion yet, so I'm pretty much guessing.
No worries, but we're learning as we're guessing. We'll switch gear because sometimes I can click to like a different one of these and try to see if
Oh,
we
you're fine.
questions.
You're absolutely fine. It gives me something, a heads up.
Okay, sweet. So, which of the following best explains why Social Security retirement benefits are adjusted annually? It's to keep benefits in line with inflation and cost of living changes, right? Because 25 years ago, we needed, different amounts of money than we do now to live, correct?
Yes.
All right.
And my daughter also, her biological father is retired, so she receives a portion of his benefits.
Yep.
And they just increased her benefits because of inflation and cost of living has increased.
Yep. Yeah, exactly. So you see it firsthand. And that's the best thing you can do. If you guys have any like personal experiences that you can relate to things, try to relate them because that'll help you remember it better. Okay, so David is 68 years old and has delayed David is 68 years old and has delayed filing for Social Security benefits. What impact does this have on his benefit amount?
His benefits increase due to delayed retirement credits.
Do we all agree?
Yeah.
Yeah. Okay, sweet. Perfect. So that's a benefit in working longer, you don't even have to work longer, but you just wait to claim Social Security, is that you get more benefits, right? You get paid higher amounts through the rest of your life. So I would suggest waiting if you can, obviously. Mary is receiving Social Security disability benefits. She decides to return to work on a trial basis. What impact will this have on her benefits?
Continue receiving benefits during the trial period.
Yes.
How do we all feel?
Yes.
Yes, perfect.
Mm-hmm.
That one stumped up my last cur a little bit, but
And there's
yeah,
only a certain amount she can earn to
huh?
continue to receive full benefit. Is there only a certain amount that she can earn working part-time to continue receiving her benefits up to
Yeah,
the point to where it may be deducted?
right. I think there is a point, like after the trial basis, after that certain whatever time they set, after that, if she can
Okay.
continue working, then they'll pull away. But if not, then they'll obviously put her
Okay.
back home and continue, she'll continue receiving benefits. Yes, okay. A Social Security feature that increases benefits for individuals who delay retirement beyond full retirement age.
Would it be delayed retirement credits?
COLA.
How do you guys,
Like I
oh,
said, I'm guessing.
Yeah.
we got COLA and we got delayed retirements.
Delayed retirement.
Okay, I heard 2 delayed retirements and 1 COLA. Are we okay with delayed retirements? I'm gonna go
Oh
with
yeah. Oh, it is delayed because it's delayed. Yes. It's
delayed
a
retirement.
question.
Good, yeah, because cost of living adjustment is what we talked about before, right? They're just
Mm-hmm.
changing the price that they're giving, they're changing the amount that they're giving you because cost of living is more or less expensive. Yeah. So this one's, a lot of things in insurance are very straightforward. Some aren't, but some are. This is one of those things that's very straightforward. Delayed retirement, the answer is delayed retirement, right? Super simple. Okay. A government program that provides health insurance benefits to individuals receiving Social Security disability benefits for at least 12 months.
Medicare.
Medicare, yeah.
Medicare. Okay. I heard 2 Medicares. Do we all agree with that?
Medicare.
Yes.
Okay. Yay. So you guys seem pretty sure about that. Is everyone on the same page?
Yep.
Sweet. So a government program that provides health insurance benefits to individuals receiving Social Security disability benefits for at least 12 months. Medicare. What is Medicaid?
People that can't afford.
State issued insurance, medical insurance.
Yeah, people that can't afford it, right? So this is, I always think of Medicaid, like arcade. So I think of like kids, so it's families and kids that don't, have enough money to pay. So they'll have Medicaid. And then Medicare is just, I usually think for older people, but also remember it's disability as well.
Right.
So yeah. So I always think Medicaid, arcade. So that's the kids and the family one. Okay. Which of the following retirement plans is specifically designed for self-employed individuals and small business owners?
Would it be the simplified employee? That's employees. Sorry.
No, it's the SEP. Yeah.
Okay. So we got 2 for this one.
Okay.
Do we agree?
Yes.
Okay. Yeah. So
Right.
the following retirement plans is specifically designed for self-employed individuals and small business owners. Okay, self-employed individuals and small business owners, the SEP, yeah, Simplified Employee Pension IRA. Okay. So, well, hopefully we'll get questions on. I don't want to spoil any following questions. I'm going to
Okay,
refrain
baby.
from too many questions. What is the primary advantage? Yeah, see, look, I would have spoiled it. What is the primary advantage of a Roth IRA over a traditional IRA?
Withdrawals are tax-free if certain conditions are met.
How do we feel about this one? We all agree?
If the withdrawals are made in a traditional, they are it's treated as income, correct?
So
So it is taxed.
if the withdrawals in a traditional IRA so in a traditional IRA, are withdrawals taxed or not taxed? That's the question that you're asking?
Traditional. Yes, they are taxed.
I don't know, you tell me. I
Yeah,
can't.
I'm
There.
thinking so because there's considered as income.
Good.
Yeah.
Okay,
Excuse me.
so we are good with B?
Yes, ma'am.
Good, okay. So the benefit, this is the huge benefit in being and having a Roth IRA, and that's why they always tell kids or people who are starting up to get a Roth IRA, because the benefit is in retirement, you can take out all of those funds without getting taxed. Okay, they're taxed, all the monies are taxed on the beginning half of it. So when you're putting in, that money is taxed. But when you're taking it out, the money isn't taxed. Okay. So Roth IRAs are great for retirement because you don't want to start pulling out all the money that you have and then getting taxed a bunch and then losing half of it, right? All right, so which of the following is the best reason for an employer to offer a 401k plan to employees?
It provides tax advantages, encourages long-term savings.
Okay, do we all agree? I'm gonna click it because I haven't heard anything else. So 401k plan, okay, tax benefits, and they encourage long-term savings while allowing the employer to, okay, so a 401k plan. I'm sure you guys have all had jobs that have 401k plans and 401k matching, right? So that's kind of the encourages long-term savings because the employer's helping you with this plan. You can put money into it and they'll match that. Okay, some of them will do 3%, some of them will do 7%. You know, it kind of just depends. But yeah, so it encourages long-term savings and provides tax advantages. Okay. Are we okay with this one?
Yep.
Sweet. Which of the following is the best option for an employee who wants to contribute to a retirement plan with employer matching contributions?
Okay. 401k.
401k.
Whoa. Good job, guys. I'm glad y'all were paying attention. That was like the ultimate attention test. Okay. So Tom is 50 years old and wants to make additional contributions to his retirement plan. Which rule allows him to contribute more than just the standard limit?
Catch-up contribution.
A catch-up contribution.
Catch-up contribution. I heard that twice, so I'm going to click it, and you guys are correct. So it allows individuals aged 50 and older to contribute additional amounts beyond the standard limit to certain retirement accounts. Okay, and again, it's super simple, catch-up contribution. And it's literally asking, can you add additional contributions to his retirement plan? So like I said, some things in insurance are very, very straightforward. This is another one of those that's just very straightforward. Mary wants to roll over her 401k plan from her former employer to another retirement account without tax consequences. What should she do?
Convert the 401k to a Roth without paying taxes.
What do you guys think?
Yes.
Yes.
Okay. You guys sure?
Yes.
Okay.
Uh-oh.
All right. So transfer the funds directly into an IRA or a new employer plan. Okay. So,
Yeah, that's what I meant.
oh, yeah. So that's what I was talking about. What do you mean? Yeah. So if you convert a Roth IRA, what's the benefit of a Roth IRA?
Tax-free.
Tax-free when?
When you
Going
take,
in or
when you take the funds out.
Before taxes?
when you take the funds out. Yeah. So you still have to pay taxes. Nothing is really tax-free, right? Could be tax
They
deferred,
get you one end or the other.
one end or the other, right?
Yes.
So, a Roth IRA, you are going to pay taxes on going in, right? Instead of going out, you'll pay taxes going in. Okay, so if you convert for a 401k into a Roth IRA, you have to pay taxes. You have to pay taxes going in, okay? If you don't pay taxes, that's not good, but they'll come after you. Don't do that. So the best option here without tax consequences would be transfer the funds directly into an IRA or a new employer plan. Okay, traditional IRA
Okay.
or a new employer plan. Because the new employer plan, then you just go from one, it's kind of like that workaround if you just do it. If you do it within a certain amount of time, then it's like you're changing jobs and you're just going from, you're just moving funds over. Like there's not even like a blip in the system. That's kind of what they look at it as. And then an IRA, you pay taxes going in. Okay. A traditional. Sorry, you pay taxes coming out. Traditionally, you pay taxes coming out. Okay. Are we okay with this one?
Yes, ma'am.
Yes.
Sweet. A tax advantage retirement plan designed for employees of nonprofit organizations and public schools. What are we thinking?
403B.
403B.
Yeah, this is exactly what I was talking about earlier. You see nonprofit organization in public schools, think 403B. Again, there's a few things that they're gonna have specific like key terms, and whenever they say those key terms, you have to think about like that specific term. Okay, and this is one of those things. You see non-for-profit organization in public schools, 403B plan. Sweet. A retirement plan that requires employers to contribute a fixed percentage of an employee's salary annually.
Profit sharing.
Profit sharing. What do we think?
Defined benefit plan.
Defined benefit plan.
Defined.
Yeah, I go defined.
Defined. Okay, so I heard more defined. So
Okay, profit sharing. Never mind. That doesn't make any sense.
Money purchase. Well, we were all wrong. What the heck is a money purchase pension plan?
Okay, so let's talk about it. What's profit sharing?
Sharing an increase.
Sharing what?
Sharing an increase. A profit, you're making an increase.
Profit. Okay, profit sharing. Yeah, so sharing the profit, right? Okay, good.
Yes, ma'am.
So what about a defined benefit plan? What are we talking about when we talk about defined benefit?
The benefits are specific and defined as to who receives what and what contributions are made by whom. I'm not sure.
No, it's okay. It's okay. I like that you're
I haven't
thinking.
reached this
I
part
like
yet.
that you're trying to think through it. Do I have anyone else? You guys can look it up. Look it up, and I want you guys, because if I just tell you the answer, you're not going to memorize it. You're not going to remember it as well as if you look it up and you explain it to me.
Is an employer-sponsored retirement plan that promises a set monthly payment at retirement.
Good. Good. So a set monthly payment at retirement. Okay. So the question is asking a retirement plan that requires employers to contribute a fixed percentage of an employee's salary annually. Okay. Money purchase plan money purchase pension plan. Wow. Say that 5 times fast. That's a tough one. Okay. So they require employers to contribute a fixed percentage of an employee's salary annually. Okay. And then we talked about Roth IRA, right? We talked about how they're taxed when?
Before going in.
Going in, so you can have what? on the end?
Tax free.
No taxes.
Yeah, no taxes when you pull it out. Okay. Insurance is tough because I love to be an explainer. As you guys can see, I can sit and talk about things forever and I'll talk in circles and whatever. But some of these things are just, you see it and you just gotta memorize it. And it is what it is. And I feel like that's one of these things. Money purchase pension plan. There's not really any I mean, I guess we can think about like pension, like you get a pension, right? But this one doesn't really give you any insight into the actual definition. It's just one of those that you just kind of have to remember, fortunately. But if you guys can do a lot of what you'll do on the test anyway is process of elimination. So knowing those key terms, defined benefit plan, profit sharing isn't really a key term, but defined benefit, Roth IRA, those are all kind of like key terms that if you know them, then you can like eliminate those and say, okay, it can't be that because I know those definitions. Okay. How do we feel about this one?
Pretty good.
Good.
Okay. Sweet. Which of the following is a common reason for purchasing personal life insurance?
To create an immediate estate for beneficiaries.
Okay. Common reason for purchasing.
I agree.
Okay.
Yeah, I agree.
Okay. Okay. Good. Are we all on the same page on this one?
Yeah.
Sweet.
Yes, ma'am.
Yeah. So which of the following is a characteristic of a buy-sell agreement funded by life insurance?
It provides funding for the surviving
Yes.
business owner,
Mm-hmm.
Yep.
owner
To
share.
purchase deceased owners there. Yeah.
Good. I think we had a mutual agreement on that one.
The first one was almost there, but it threw in tax-free.
Okay, good. Yeah, as you guys go through this, pull out parts where you say, okay, it can't be this because of that. You know, if it was asking it this way, and that's something that you guys can also do. If you run out of questions, go back to the questions that you already have given, that they've already given you, and just kind of ask them in other ways. You know, walk through them and be like, okay, if they were asking for this, how would they word it? Okay. All right. Sweet. Which of the following is the best reason for a business to purchase key person insurance?
To protect the business from financial loss if a critical employee dies.
Yes.
Yep.
Good. That's an easy one, right? All right. Are we all on the same page?
Yeah.
Yes, ma'am.
Great. A family breadwinner wants to ensure their spouse and children have sufficient income if they pass away unexpectedly. Which life insurance approach is the best choice?
Needs approach.
Needs.
Needs.
You guys feel good?
Yes.
Needs approach. Good. All right. You guys are going through this. James and Robert own a business together and want to ensure that if one of them dies, the other can buy the deceased partner's share. What type of life insurance should they purchase?
Buy-sell agreement.
Buy, sell. What do you guys think?
Yes.
Yeah, that's an easy one. Another easy one. Good. Sarah is a single mother and wants to make sure her life insurance policy provides enough coverage to pay off her mortgage, replace her income, and cover her child's education expenses. What is the most effective way to calculate her insurance needs?
Human life value approach.
Human life value approach.
So can
Yeah.
we,
Oh, wow.
I've been getting confused with these two, the human life value approach and the needs approach.
Okay. Does anyone
The human life it's pretty much a value of the insured, where the needs approach is for the beneficiaries,
Oh.
their future needs.
Hmm.
Yes.
Okay.
You're exactly right. So you're exactly right. So human life value approach is like what it's like what your future earnings would be. Okay. Needs approach is like, what your family needs if you pass away.
Okay, thank you.
Mhm. Does that make a little bit more sense?
Yeah.
Okay.
So the human life approach adds up everything, the insured individual's income, any other value that they have as far as savings, stocks, or what have you. And what I was saying earlier this morning, it incorporates all of that into determining how much insurance they should buy, correct?
Yes.
Okay.
Yes.
Thank you.
Exactly. Okay. A life insurance strategy designed to ensure a business can continue operating smoothly if a critical employee dies. Key person.
Key
Yeah,
person insurance.
sweet. All right, we have that one. This is the last one. A financial strategy that helps business owners ensure a smooth transition of ownership in case of death or disability.
Buy, sell,
Key
and
person.
Buy, sell.
No, buy, sell.
So sweet. Okay. So this one was really heavy on Medicare and Medicaid and annuities. Hopefully when we go through the other ones, we'll get a little bit more on life insurance, health insurance, things like that. If we don't, we can also kind of like jump around and see what we can find. But good. Okay, so we just did 25 questions from Pearson. We'll take a 10-minute break so you guys can go to the bathroom and do whatever you need to do. And then we'll come back and do PSI and then we'll do Prometric. Is everyone okay with that?
Yes.
Yeah.
Yes.
Yes,
Is
ma'am.
this helping you guys going through questions or?
Yeah.
Yeah,
Yeah.
I like the questions.
Yeah, like your questions. Okay, sweet. Okay, cool. I'll see you guys in 10 minutes then. All right. Let's see. So if you guys are back on, just send me a little thumbs up in the chat so I can see.
I'm back.
Sweet. Okay. Okay, so I just had a question, asking, I didn't see any of those questions in my practice review. So again, the questions that you guys have are randomized and they come from a huge test bank of questions. So if you can, some states allow it, some states don't. But if you can go back and go through any of those quizzes or practice tests or anything like that and just try to see, just try to like take it again and get more of an array of questions. Just going back through again, like we don't hand pick all the ones. There's just a bunch of questions. They go into a question bank and then it generates a bunch of tests for you guys. So again, if you didn't see a lot on Medicare and Medicaid, that's okay. There's not that much on your exam about Medicare and Medicaid and a lot of the stuff that we talked about, except at the end. The stuff at the end, is more high yield stuff. But I wouldn't worry too much if you don't see a lot of Medicare or Medicaid when you're studying. Learn a little bit here and there, but and again, take those tests as many times as you can, because again, those questions are in a test bank of questions, so you could get different ones every time you take it. So yeah. Okay, sweet. So let me go ahead, of course. Let me go ahead and share my screen. So now, we just did PSI. Oh I logged out. Dang it. Stop screen. Okay. So we just did PSI. We just did Pearson. So now we're going to do PSI and then we'll do Prometric. Let's see. PSI. Okay. I think I got it. Think I figured it out. Some quiz. Okay, here we go. So, which of the following determines how life insurance benefits are paid to multiple beneficiaries?
Beneficiary designation method.
Yes.
Okay.
Yes.
We all agree?
Mm-hmm.
Good. Okay, again, one of those ones that's just pretty straightforward. What is the primary function of the waiver of premium?
It continues coverage without premium payments if the insured becomes disabled.
How do we feel? Everyone else agree? Not agree? Okay. I'm gonna take it as everyone agrees. So good. So if you have a waiver of premium rider and you become disabled, then those premiums can be waived because you're not working. So the idea is that since you're not working, you won't be able to afford those premiums, but your coverage won't go away. Okay, your coverage should still be there. So you don't have to pay those premiums, and you will still have coverage. Okay, and that's if you become disabled. Are we okay with that one?
Yes.
Which policy feature is most useful for someone who wants their life insurance death benefit to increase over time to keep up with inflation?
Cost of living adjustment.
Do we all agree?
Yeah.
Yes.
That's another straightforward one, cost of living adjustment. A policyholder wants a life insurance policy that provides lifetime coverage and guarantees fixed premiums. Which option is the most suitable?
Whole life.
Whole life. Okay, so let's talk about this. So this is one of those ones that whenever you guys see, there's going to be key terms that they're going to talk about. That whenever they say those key terms, they're going to want you to pick a specific answer. Okay, so whole life, whenever you see guarantees fixed premiums, so guarantees fixed premiums, cash value, I think those are the two main ones. If I see another one, I'll let you know. But guarantee fixed premiums and cash value and stable death benefit. All of those, like level death benefit, all of those are going to be wanting you to pick whole life. Okay. If they want you to pick term life, they'll say, oh, okay, it's for a specific period of time. They'll say it's for a mortgage. They'll say it's to cover, children for a certain amount of time. You do not have a cash value component. Okay, there's no cash value component. And it's cheaper. It's a cheaper option. Okay, so those are all key terms for term life insurance. If they want you to pick universal, then they'll talk about, a lot of flexibility. They'll have like an investment portion that they might talk about, but you want to be careful because there's also index universal and there's variable, right? So universal, they'll say more like they want flexible death benefit and flexible premium payments. So those are all, again, key terms that you guys want to remember so you know what to pick and when to pick it. Okay, so Daniel wants his life insurance benefits to be distributed equally among his surviving children without passing to the children of any deceased beneficiary. Which distribution method should he select?
Capita.
Per capita? Do we all agree?
Yes.
Yes, maybe. Let's see. Good. Okay, per capita. So it divides the death benefit equally among surviving beneficiaries without passing shares to the next generation. What is per stirps?
I have no idea.
Okay, so per capita is just to the immediate children. Per stirps is dividing the benefit equally among, like, according to the family line, down the family line. Okay, so that can go to the children of any deceased beneficiary. It'll just go down the bloodline. Whereas per capita is among surviving children. Are we okay with that one, or among surviving beneficiaries? So per capita is among surviving beneficiaries. Per stirps is just down the family bloodline after beneficiaries. Is that okay?
Yeah.
Yeah, okay. Sweet. Again, if you are confused, please let me know. Okay, Michelle is a single mother with minor children. What is the best way for her to ensure the life insurance proceeds are managed responsibly for their future needs?
Designate her estate as a beneficiary.
Okay,
Set up a trust as the beneficiary.
set up a trust as beneficiary.
Yeah, I
We
was
had a
thinking
right there.
trust as well.
Set up a
Be-
trust. Go ahead.
Who would be the trust?
Whoever you sign as the trustee.
Mhm.
Like a company or?
No, it'd be like your parents or the sibling or, I mean, whoever you want
Somebody.
to take care of your kids while if something happened to you.
Yeah, okay, so yeah, so it's whoever you want. You can assign the trust to whoever you want. But you can't make a child a direct beneficiary. They won't be able to receive the funds till they're 18, or later, depending on how you set it. But so you'll have to set up a trust as a beneficiary. Also, the benefit of that is so they don't get all this money and then they just go spend it all, right? So if you set it up as, it could be your cousin, a family member, a sibling, whatever, whoever that person is, to kind of help your children with the finances that they'll receive after your passing. Does that make sense?
Yeah, thank you.
Of course. All of the following are valid reasons to review and update beneficiary designations, except
Policies holders change in health.
okay. Do we agree? So beneficiary is someone who will receive the funds. Okay, so could you change it because of a birth of a child?
Yes.
Yeah. What about divorce or remarriage?
Yes.
Yeah. Death of named beneficiary. So if the person that you have as the beneficiary dies,
Yes.
then you want to change it, right? So policyholders change in health is not a valid reason to change the designation of the beneficiary, because yeah, exactly. Okay. So a provision that ensures the policyholder has the right to cancel the policy within a specified period, within a specified period after the purchase for a full refund.
Free look period.
Free look period. Do we agree with this one?
Yes.
Yeah,
Yes.
easy peasy. All right, what is the purpose of the Medical Information Bureau in the underwriting process? MIB.
B.
B, to collect and share medical information among insurers to prevent fraud.
Yep.
We agree? Good.
Yes.
Sweet. Perfect. Which of the following correctly describes a substandard risk classification?
C.
Yep.
We all agree. Okay, so let's talk about this. We have three types of risk classification. We have substandard, which we see here. They are at higher risk, so they have to pay higher premiums, which makes sense. They're more of a risk taker, so they have to pay higher premiums. Okay. What are the other two risk classifications? We have substandard, and then we have what?
Bird risk.
Preferred, which is what?
That's the lowest
Premium.
risk class.
Yeah, lowest risk class. So they're very, very healthy. They're probably young. They're probably athletic, right? So do they pay higher or lower premiums?
Lower.
Lower premiums. So they're preferred. They're like the gold standard. Okay, so we have preferred and we have substandard, which is where you don't want to be. That's your higher risk, so you pay higher premiums. And then what's the average Joe?
Standard.
Standard risk. Good. Perfect. A report requested by an underwriter to gather additional medical details from a physician.
A.
A. Do we agree with this?
Yes.
Good. Good. Perfect. Why is it not a medical information bureau report?
Because it's a statement from the physician.
Right. It's a statement from the specific physician. Medical Information Bureau is going to gather all your information and your health, everything, every doctor you've ever been to, everything. Whereas if they're asking for additional medical details from a specific physician, they'll ask for an attending physician's statement. All right, risk classification assigned to applicants who pose too high a risk for insurer to offer coverage.
Declined risk.
Declined risk. So we forgot about this one. We totally forgot about this one. So we have standard, substandard, preferred, and then declined is if they're just too high of a risk, we can't cover you. Good. All right. Robert applies for life insurance and is classified as a substandard risk. What impact will this have on his policy?
B.
Good. So we all agree. So substandard is lower than the average, so he's more at risk, so he'll pay higher premiums. Julie submits a life insurance application, but forgets to sign it. What will happen next?
B.
B?
Yeah.
Good. We agree on this one. Any questions? No. Right. All of the following are sources of underwriting information except
Social media accounts.
Yep.
social media accounts. Okay. We all agree on this one?
Yes.
Yes.
Okay. Good. Okay, so they'll go into credit reports, insurance applications, so previous applications that you've submitted, and medical exams. They can use social media accounts. They can, like in real life, they can. It's not like like I'm sure over the next couple of years, it'll probably become more and more likely that this will be a bigger thing. But as of right now, they don't really allow that. All right. All of the following are factors that could cause an insurer to decline an application except.
The occupation in a hazardous field.
Okay. I hate this question. I've had it before. I hate this question. I think it's stupid because it's one of those things where you're looking at it and you're like, well, all of these things technically, you know, are bad, right?
A.
I was gonna
A,
say
okay,
C or D, sorry.
D, okay, yeah. It's one of these things that's like, it's not, which one is like the least, like all of them are factors. They are all factors. One of them is not as important as the others, I guess you could say. So I kind of heard all of I heard all of them except the one that it is.
C.
Yeah, it's C. So again, I hate this question. Don't get stuck on it too much because it's kind of a stupid question, I have to say. So it's required at the time of application, but it doesn't always lead to your application being denied. Okay, so it's, again, it's just a stupid question. Like, it is required. So I don't have anything else to say about this question. You're not going to get anything like this on the exam. I don't really know why this is a question on here anyway, but don't think about it too much. That's my advice. Don't think about it too much. Okay, are
Good
we
to know
okay? Huh?
Good to know.
Yeah, just kind of skip over this one. Stupid question. Okay, what is the standard grace period for a group life insurance premium payments? What is the standard grace period for group life insurance premium payments?
1 days.
31 days? How do we feel? Do we agree? Do we not agree?
Agree.
What, you agree? Okay, cool. Hey, two's enough for me. Okay, good. So standard grace period for group life insurance premium payments is 31 days. Standard. Good?
Yep.
Sweet. Who is the policyholder in a group life insurance contract?
Employer,
The what?
the employer or sponsor.
The employer, group sponsor. Do we agree?
Yes.
Yes.
Good. Okay, so the employer is the policy holder. What do the employees have?
A certificate.
Yeah. Yeah. They have a certificate. Just saying, hey, I do have insurance, but they're not the policy holder. Good. Good, good, good. An employer wants to provide a basic amount of life insurance for all employees while giving them the option to purchase additional coverage. Which plan would be most appropriate?
Contributory.
Contributory. Okay. Which one can we eliminate? Like
Keeper.
for keepers.
Key
We can
person.
totally eliminate that one. Okay, so now we're down to A, B, and C. I heard contributory. What else do we think? Or
Think
do we
voluntary, but
voluntary?
Yeah.
Okay, we have voluntary and contributory. We need a tiebreaker or someone to make it more difficult.
if it's a basic amount and they want to provide for all, if they want to do that, the other assumption is non-contributory, but
None.
then I don't know if that allows for each person to add coverage.
Right.
So
Okay,
I
so
don't know if it can be that one.
go ahead.
I don't know if it can be that one either.
Okay. So I like where you guys are going. I got another C in the chat. So we're gonna go with C because I think that's the only one we got two of. So we'll go with that one and then we're gonna talk about it. Okay, so non-contributory and contributory, what are those pertaining to?
Health insurance plans?
Health insurance plans, but like more specific, like be more
Who pays
specific.
in and who doesn't. Like the employer pays for non-contributing plans and the employee helps out and pays for the contributing plan.
Exactly, exactly. It's who's paying, okay? So, and the best way to think about it is probably what the employee is doing, okay? In a non-contributory plan, the employee is not having to pay, okay? In a contributory plan, the employee has to contribute, they have to pay, okay? So, do either of those have to have anything to do with providing basic amounts of life insurance for all employees while giving them the option to purchase additional? Does either of those have anything to do with purchasing additional coverage?
So contributing plan would be the only one that would,
Maybe, right. So that's the only one
Right.
that could maybe, because I
correct,
could
because
see
they're
how,
purchasing it, yep.
yeah, you could see how, okay, if you contribute, then like you can pay for extra stuff. So the only issue with that is that usually when they do a contributory plan, they'll do like a percentage. Like they'll be like, I'll pay for 50% or I'll pay for this amount. Or they can say, hey, I'll pay for this plan, you know, you can pay for others. But usually when they're talking about this specifically, like giving them the option to purchase additional coverage, that is gonna be voluntary group life insurance, okay? So it's like, it's voluntary, it's up to you if you wanna purchase more. If they want you to pick contributory plan, they will not phrase the question like this. They will, sorry, guys, I don't know if you guys can hear that. But they will phrase the question, you know, the employee and the employer has to pay. What is this called? They won't phrase a question like this that is gonna confuse you. And like saying, oh, well, it could be, you know, if I change it around this way and I think about it like this, it could be this answer. They're not gonna do that. Pick the one that is most straightforward with what they're asking, okay? Does that make a little bit of sense?
Yes.
Yeah, okay, sweet. So what is the best way for an employee to ensure their beneficiary receives group life insurance, proceeds quickly and directly?
A.
A, do we agree? I'm gonna assume that's yes. Yeah. Good. Okay, so the best way for an employee to ensure their beneficiary receives group life insurance proceeds quickly and directly, designate a beneficiary, right? All right. James is an employee covered by his company's group life insurance. If he dies while actively employed, what will his beneficiaries receive?
The face amount of his policy.
Yeah, exactly. The face amount of his policy. Sorry, Tiffany. I gotcha. I think you should be able to talk.
Okay. All right.
Oh,
I'm
good.
sorry. Yes, ma'am.
Okay, sweet. The face amount of his policy. Great. So the face amount of his policy is another way of saying the death benefit. Okay, so the face amount is a death benefit. A company wants to provide group life insurance coverage to part-time employees as well as full-time staff. What potential challenge might arise?
Part-time employees may not meet minimum participation requirements.
Do we agree with this one?
Yeah.
Yeah, okay, good. Yeah, exactly. That's pretty straightforward. All of the following are advantages of group life insurance except.
Permanent coverage for all employees. Our group life. Okay.
So we have, or so you don't think it's permanent coverage for all employees?
It is, they would have, there's two ways because for group life, all employees would have to cooperate, correct? Or a
For,
certain amount would have to.
it depends if you're doing contributory.
Right. Yes, ma'am.
Yeah.
Okay.
So all of the following are advantages except. Okay, so said permanent coverage for all employees. Do we all agree with this one? Should we talk about it?
Yes.
Yeah. Okay, so let's talk about it.
Well, it's also, lower cost compared
Sorry.
to individual policies.
Yeah. So it's all of the following except. So it's asking which one is not. Okay. So for group life insurance, lower cost compared to individual policies. That's true. In group life insurance policies, the costs will be lower in group rather than individual. Guaranteed issue coverage without medical exams. That's also true for group life. And then simplified administration for the employers. That's also true. The only one that's not true is permanent coverage for all employees because, does anyone know why?
Turnover.
What is it?
Turnover.
Turnover. So, here, I'll just tell you and then we'll talk about it. So it's because most of the time when you're doing group life insurance, it's going to be term life instead of whole life. They won't do whole life. And the reason
Gotcha.
why is partially because of turnover, but it's also the chances of you working there till the day you die versus retiring from there. They don't want to pay for a whole life policy because a whole life policy is way more expensive than a term life. I mean, it's so much more expensive because you get a death benefit, you get cash value, you get all these other benefits from it. Where a term life, they cover you for a specific term, and then it's done. Okay.
And group life insurance is all yearly basis.
It's a
Isn't it?
yearly basis. It's renewed on a yearly basis. Yep. And it's usually term life insurance. It's not whole.
Yeah.
Yeah, because yeah. So it's usually just term. So it's not permanent coverage because it's usually term life insurance. It's not whole life insurance. And that's why when they say when you leave group, when you retire or you change jobs, you can convert your policy from a term life in a group to an individual whole life.
All right.
Yeah. Is everyone on the same page?
Yeah.
Okay, sweet. So a type of insurance policy that pays benefits to the employer if a key employee dies.
Key person life.
Key person life. Do we agree?
Yes.
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 Easy one. Easy peasy. Which of the following best describes the primary purpose of an annuity?
To offer tax-free retirement savings.
Mhm.
Wait a minute.
Yeah.
To provide steady income stream,
Yep.
typically during retirement. Yeah, I meant that one. Yeah.
Okay.
Right.
Okay, good. Yeah. So an annuity, right, is to provide income stream in retirement, whereas a whole life policy, a life policy is to provide money for the beneficiary. So if you want the money, then you take out an annuity. If you want to give the money to your spouse or your kids, then you take out a life policy, life insurance policy. This is kind of funny, but you can think of an annuity as like kind of like a sugar daddy, but it's like you're the sugar daddy
Yeah.
and you don't pay yourself until okay.
Funny.
So an annuity is like a sugar daddy, but like you're the sugar daddy and you don't pay
You're
for it.
treating yourself better.
Right. Exactly. Okay. So what distinguishes a single premium annuity from a flexible premium annuity?
Single premium annuities require only one payment at the beginning.
Okay. Do we agree?
Yes.
Good, 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 good. Are we on the same page here? So single premium, you pay one time in the beginning. Flexible premium, you can pay all the time, anytime, whenever. No, it's not that lenient, but it's pretty lenient. You know, you can, your premium payments are more lenient. Multiple contributions over time. Okay. How are withdrawals from non-qualified annuities taxed? Oh, sorry, y'all. We actually went over one. We were done at 51. Okay, do you guys want to answer this question really quick and then we'll go on to the
Yep.
next? What do you guys think?
Uh, for me, it's either between B or C.
Okay, B and C. So go back to your notes or whatever you guys have. You can look it up on the internet or wherever and look up non-qualified annuity. What do you guys think? So we know what an annuity is, right? We just talked about that. It's like your own personal sugar daddy, except you're the sugar daddy.
Is it withdrawals are taxed as capital gains?
Okay, so I heard 2 for C. So we'll go with C and then we'll talk about it. Okay. So, this gets kind of confusing. But what you can see here down at the bottom, LIFO, last in, first out. Okay. So withdrawals are taxed on a last in, first out. Okay. So the last amount of money coming in and the first leaving. Okay. So, how are withdrawals from non-qualified annuities taxed? It's only earnings are subject to income tax. Okay, so what you make is subject to income tax. So it's taxed before putting it in. Okay. And then you put it into the annuity.
Okay. All right.
Okay. All right. Are we on the same page here?
Yeah,
still-
I think the non-qualified term kind of threw me off.
I know. Yeah, the non-qualified and qualified, it's it can be a little bit confusing. It can be a little bit confusing knowing the difference between the two.
There was a video in that portion where I forgot the gentleman's name, but he did an example of $2,000 and non-qualified at the top where it has 200 taken out for taxes. 10% up top was non-qualified, and then he had the 200 taken out from the 2,000 underneath, which would leave 1,800 to be taxed, something like that. That's just how I remembered it, how he did that little scenario.
Good, 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 good. Do I say I'm not good at this, but do you remember what section that was from? I don't know if you'll remember.
I
remember either.
just went through that, but I think it was chapter 8,
Okay,
7 or 8.
okay.
I have my notes here. It was
So just so you guys know,
it's under 7.
so while she's figuring that out, qualified, just know qualified is with pre-taxed money. Non-qualified is after-taxed money. That's the big difference. Okay. So qualified, pre-taxed, non-qualified, after-tax.
Okay.
Non-qualified is, could you repeat that?
Yeah, non-qualified is after tax. So things are taxed before. And then qualified is pre-taxed.
I'm looking at it right now. Okay. It's chapter 8.
So, okay, good. Chapter 8. Sweet. So qualified, the money that you're putting in is pre-taxed money. And then, so it's money that will be taxed later. Okay. And then in non-qualified, it's after-taxed money. So it's money that has already been taxed and you'll have tax-free withdrawals. Does that make sense?
Qualified pre, non, after.
Qualified is pre-tax, non-qualified after tax. So qualified, yeah. Anyone need me here? Let me, here's what I'll do. Let me stop sharing. Let me just text it in the group chat so you guys can all see it. Let's see. Qualified. Okay. I just sent it in the chat so you guys can see it there. All right. So now we're on to our, oh, it's logging me out. Now we're on to our Prometric section. So I'll do 25 questions from there. Let's see. Let's see, let's see, let's see. Mm, mm, mm. Share my screen. Here, share. Good. Okay. So now we're in Prometric, which is our last section. So the following are all considered elements of insurable risk, except
The loss must be predictable.
The loss must be predictable. Whereas, okay. So all of the following except. This one's a tough question. What do you guys think? I'll give you a hint.
The loss gain.
What was that? C. Okay, so
See,
C. Yeah. Okay, good. Must guarantee a financial what? It's not gain, right? It's what? You guys can say loss. Good. The risk must guarantee a financial loss for the insured. So the risk must be measurable. So what are the chances that what are the chances that I die from cancer? Okay. The loss must be accidental. Okay. So, you guys have probably gone through the suicide portion of it. Where it's, they don't cover suicide if it's within the first 2 years. And then the loss must be predictable. Okay. That one, I have no freaking idea what that really means. I remember it was a thing. I remember reading it. I remember to know it, but what the heck it means for the loss to be predictable, couldn't tell you. Every time I see it, I'm like, I don't know. I have no idea what that means, but I know that it's a part of it. But again, this is like the biggest reason to just kind of read through questions, because sometimes you're going to look at something and you're like, I have no idea what that means. But if you just read through everything and see, okay, there must be a financial gain, you can say, okay, I don't know what the heck this means, but I know that it's not a financial gain, it's a financial loss. Okay. Are we all okay with this one?
yes.
Sweet.
Yes, ma'am.
All right, so all of the following are methods insurance companies use to reduce adverse selection, except.
B.
B.
B. Okay, I heard that a few times. We're gonna go with that one. Okay, so all of the following are methods insurance companies use to reduce adverse selection. What is adverse selection? Don't read the thing at the bottom.
It is insuring individuals, high risk individuals, more prominently than lower risk or standard or preferred individuals,
Right.
and you have an imbalance.
Exactly. It's the idea that people who are at higher risk, so people who have high risk occupations, who just do high risk activities, they're going to be more likely to seek out insurance than someone who is very healthy, has a very standard low risk job, and just kind of lives their day to day, right? So the issue with that is that if insurance companies only insure people who have high risk, then they'll lose a lot of money. They'll lose a lot of money and they probably can't keep up with it. So they need to kind of pool a bunch of different types of risks together to stay afloat. Okay. So which of the following methods are used to reduce this adverse selection, to reduce so many high risk people coming in wanting insurance? Okay. So all of the following except. So underwriting, right? Underwriting will determine if that person is high risk. So that is a method that they use. Policy exclusions, okay, that is a method that they use, because you could get a bunch of pilots that need insurance, but we can't cover that many pilots, because being a pilot is a very high risk job. So they'll put aviation exclusions on there. So if we'll insure you, but we're not going to insure you if you die while you're flying. Okay. And then medical examinations, if we go through their medical history and do a medical exam, then we can see, okay, this person has diabetes, this person has, neurologic issues in their family, this person has, whatever different medical issues, and instead of insuring a bunch of people with one specific disease that maybe, you know, will cause the insurance company to pay a lot of money, like, you know, diabetes or things like that, then they can go through those medical exams and kind of choose and pick which ones, which again, it sounds terrible, but it is what happens, unfortunately. But yeah, so medical exams can reduce adverse selections because they use medical exams to see what risk classification you are, right? If you're high risk, low risk, preferred risk. Not using the right terms, but you guys know what I mean. And then the only one that isn't is offering policies to only high risk individuals. That would be making adverse selection worse, right? Okay, are we okay with this one?
Yes.
Yes, ma'am.
Sweet. Which of the following best describes the purpose of the principle of indemnity in life insurance?
Turn the insurance
B.
service financial.
Yeah.
Does it to what?
B.
B.
B, good, good, perfect. So we talked about that one. Indemnity is returning the insured to their original position before the loss, right? No more, no less. Good. All right. Which of the following is a fundamental requirement for a life insurance contract to be legally enforceable?
B.
B.
Yeah, B.
B, good. It's an easy one. Easy peasy. A contract in which only one party, the insurer, makes a legally enforceable promise.
Unilateral.
Unilateral. Do we agree?
Yes.
Good. What is an aleatory contract?
An uneven
Uneven.
exchange.
Uneven, right? A lottery. You buy a $5 ticket, you can win $1 million. What is a valued contract?
Where a lump sum is paid.
Right. So it's I signed up to get $50,000 if I die. It doesn't matter how I die, how much catastrophe I cause or how much catastrophe I don't cause. Either way, they're paying me $50,000. Valued contract is you signed for $50,000. That's what you're going to get. It doesn't matter if you caused more or less damage. Okay. Good. So, unilateral. Emma purchases a life insurance policy on her husband's life. Which of the following must be present at the time of application for the contract to be valid?
Insurable.
Insurable interest.
Insurable interest. Good. Perfect. That was easy. One. The following are characteristics of a valued contract except.
C.
It's C.
Benefit. C. The benefit amount is based on the policyholder's financial situation at time of death.
Yeah, that's what I go with too.
Good. Okay, sweet. Because a valued contract doesn't matter what happened.
It's one set number already in
One
place.
set number. Exactly. So all of these are correct. It's predetermined. It pays out regardless of the actual loss. And it's an example of a valued contract. Life insurance is an example. The only one that isn't is that it does not depend on the financial situation. It doesn't matter. You're getting that $50,000 either way. No more, no less. Okay. Which of the following types of life insurance provides coverage for a specific period and does not accumulate cash value?
Term life.
Term life, okay? So does not accumulate cash value, specific period, think term life, okay? If you see Well, hopefully we'll get a few of those and then we'll talk about it. Which life insurance policy allows policyholders to adjust their premiums, coverage amounts, and death benefits? Adjustable premiums, adjustable death benefits. What are we thinking?
B.
B.
Universal life.
Universal life, right? Again, these are things like if you guys are writing anything down, I would suggest to write these key terms down. If they want you to pick universal life, they're going to say adjustable premiums, adjustable death benefits. Okay, that's what they're going to talk about. If they want you to pick whole life, they're going to talk about cash value, level premiums, level death benefit. If they want you to pick term, they'll say, oh, for this specific term. They'll talk about mortgage, they'll talk about, children needing to be covered for a specific period of time. And then if they want you to talk about, and then we'll get to the other ones. But yeah, good. Okay, so a life insurance policy that provides a level death benefit and level premiums for the insured's entire lifetime. What is
Whole
it?
life.
Whole life. We just talked about it. Good. A type of life insurance where the policyholder's cash value is invested in separate accounts similar to mutual funds.
Variable life.
Variable.
Variable. Okay, so if they want you to pick variable, they will say, they'll be talking about an investment portion. You'll never have to be, oh, well, variable does do this and does that. No, if they're talking about investment portion and specifically in mutual funds or sub accounts, okay? Either of those terms, pick variable. Those are two key terms when they want you to pick variable. Mutual funds or sub accounts, investing, they want you to pick variable. Now be careful because there's also indexed universal life insurance. So indexed universal life insurance is invested in indexed funds. Okay, so those are the big ones. That's like the S&P 500. Okay, the top 500 companies. Okay, so if they talk about S&P 500 or index funds, then they want you to pick index universal. For index universal, they're also going to be talking about investments. Okay, so don't just see investments and then pick variable. Read what kind of investments. If it's mutual funds or sub accounts, and it's very, like, they'll even talk about like not very stable, like it can go up and down. That's variable. If they want investments that are more stable, then they'll do indexed universal life insurance. Okay, and the reason why is because it's you're investing in those index funds. Okay, and those index funds are those big ones that invest in a bunch of different companies, but like the S&P 500 is the top 500 companies. Okay, so you can invest in the top 500 companies. The top 500 companies are usually going up because if one of them isn't doing well, they'll kick them out and bring someone else in. Okay, so the S&P 500 is something that it's really, really great to invest in because it's usually always going up. Okay, so you have a floor, so you can't go below a certain amount for index universal, where variable, you don't have a floor. So you can go up, down, all over the place. You can lose a bunch of money, you can gain a bunch of money here. Indexed universal, which is different than universal, but it's indexed universal. There's a floor, so you can't go below that floor. Okay, so again, those are key terms that you guys should remember for each one. David wants to purchase a life insurance policy that allows him to start with a lower premium that increases over time before becoming level. Which policy best fits his needs?
Graded premium whole life.
Graded premium whole life. Okay, so even if you didn't know this one, you can do process of elimination. Okay, because again, those key terms, you don't see anything about, cash value or, steady death benefit, anything like that to pick whole life. You don't see anything about like flexibility, and you don't see anything about investing. Okay, so, and investing in sub accounts or mutual accounts. Okay, so graded premium whole life. So start with lower premium and then it increases over time before coming level or becoming level. Good. Right. Are we okay with that one?
Yeah. Yep.
Okay. So I just realized that I went over the hour. So I'm going to give you guys a 10-minute break to go potty or whatever else. And then we'll come back for our last little bit. All right. I can't remember if I let you guys go at 4 or 5, but either way, just start making your way back in. It's our last hour together. It's crazy. Once you guys are here, just give me a thumbs up or anything. I know everyone's getting a little tired. Sweet. All right. Okay, sweet. So we're gonna go ahead. I got 2 thumbs up. I think that's think that's good. Let's see. If you're here, just give me a thumbs up. Sweet. Sweet, sweet, sweet. All right. Okay. Go ahead and share my screen. My screen. All right, can you guys see this? Yes. You got
Yes,
it.
ma'am.
Yes.
A little
Okay.
bit.
A little bit. Let me zoom in.
Okay, thank you. I'm blind. I'm sorry.
No, it's okay. It's totally okay. All right, is that good?
Yes, ma'am.
Great. All right. Okay, so Maria what? Sorry. Maria recently purchased a convertible term life insurance policy. 5 years later, she decides to switch to a permanent coverage. What is the primary advantage of the conversion feature?
Hey,
A, it allows her to convert to a permanent insurance without providing insurability. Do we all agree with this one?
Yes.
Yeah.
Yes.
Good, that's easy, easy peasy. All of the following are advantages of whole life insurance, except
the last one. It offers lowest possible premiums for high death benefits.
good, 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 good. It offers the lowest possible premiums for high death benefits. Sweet. Okay. Are we all on the same page on this one? So whole life insurance, it provides lifelong coverage. That's true. It has fixed premium structure. True. And it accumulates cash value. The lowest possible premiums for high death benefits. That's not true. That would probably be term life insurance. Okay. Sweet. The following are characteristics of term life insurance, except
B.
B.
Yeah.
B.
B. Good. Good, good, good. So that's exactly right. Term life insurance does not build a cash value. Which of the following factors has the greatest impact on life insurance premium calculations?
Holiday rate.
B. Yeah.
The mortality rate. All right. Sweet. Okay, so impact on life insurance premium calculations, so how much you're paying, the applicant's education level, the applicant's marital status, and the policy's free look period. Those don't really have impact on, how much you'll be paying for premiums. So mortality rate of the insured group is the best option here. All right. What is the primary reason that the insurance companies invest premiums collected hold on. What is the primary reason that insurance companies invest premiums collected from policyholders? Guys, my dyslexia is, it's to
increase company profits.
increase company profits. Okay, good. Do we all agree on this one?
Yes.
Good. Oh, okay.
Oh, wow.
I know, look, even I'm sitting here, I'm like, yeah, that's good. Okay, so let's see. What is the primary reason the insurance companies invest premiums collected from policyholders? To lower policyholder premiums by earning interest is the answer. Okay. So this is a tough one because it's like what they want you to think versus what's actually happening versus what's actually happening. Yes, it is to lower policyholder premiums by earning interest. That's what they, if you are selling insurance to someone, that's what they would like you to say. But it's also increasing company profits, but they're not going to say that outright. Does that make sense?
Yeah.
Okay. Does anyone have any questions about this?
Nope.
No. Okay, good. Okay, good. The premium payment frequency that typically results in the lowest total cost over time.
Annual.
Annual. Anyone agree, disagree?
Agree.
Agree.
The higher the frequency in payments, the more they have to do administrative work and charges.
And then it costs more. Exactly. Exactly. Okay, good. So annual has the lowest total cost over time. If you do it more frequently than that, then it's more expensive because of those administrative costs. Good. Perfect. All right. A provision that allows a policyholder to reinstate a lapsed life insurance policy under specific conditions.
Reinstatement.
Yep.
Reinstatement. Good. It's an easy one. Sweet. Michael is reviewing his life insurance policy options. He wants a policy that allows him to adjust his premium payments based on his changing financial situation. Which type of policy should he consider?
B.
B.
G. No, C.
C.
Yeah, C,
C. Okay. Why?
because it's more flexible.
Flexible. They're talking about adjusting his premium payments and his financial situation is changing. Okay. When you're seeing a lot of like things need to be adjusted, things like that, they're wanting you to choose universal. Good. Good, good, good. All right. If they wanted you to choose term, what are some things they would say?
A fixed rate premium.
A what?
Fixed rate premium for a short period of time.
Okay. So, they might
Well-
say fixed premium, but that's not like a buzzword for term. For term, it'll be more like short period of time. It'll say like mortgage. It'll say, for your kids.
Education.
Education. Yeah, exactly. No cash value. Those are key terms for term life insurance. Yeah. Yeah. What about for variable? What are some key terms for variable?
Investment.
Mm-hmm. Investment, but more specifically, what kind of investment? Because there's another
Mutual.
one.
Mutual funds.
Mutual, and there's another one that I gave you guys. What is it?
Sub accounts.
Sub accounts and mutual. Good. Those are two key terms because you have to be careful because if you just look for investment, they might give you index universal as well. And then you'll get confused because both of those are investment. And even universal has an investment factor. So what you'll look for variable is like mutual, sub accounts, a lot of like variability, a lot of changing. And then whole life, you'll see level death benefit, level premiums, cash value. It's a big one is cash value. Yeah. All right. Samantha, a 35-year-old non-smoker, applies for life insurance. Her premium is significantly lower than her friend's, who is a 45-year-old smoker. What is the primary reason for this difference?
The
Mortality and lifestyle risks impact premium rates.
Okay, good, 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 good. All right, are we okay on this one?
Yep.
All of the following factors affect life insurance premium rates except
Home address.
B.
B. Okay, good. Are we okay on that one?
Yep.
Okay, what? All right. The following are valid beneficiary designations except
A.
A. I said this one earlier.
B.
A
B.
minor child.
Minor child, right? Why?
They would have to have a trust because they're a
Right.
minor child.
They're a minor child. You can't have a minor as a beneficiary.
Under
Yeah.
the age of 15 or some states 16.
Yeah, 15, 16, 18,
18.
in places, I believe, as well. Again, I'm not the best with, state specific stuff, but yeah. Yeah. Okay, sweet. Which of the following is the primary purpose of underwriting in life insurance?
B.
Mhm. I agree.
We all agree. Okay, sweet. Any questions there? Nope. What is adverse selection in life insurance underwriting?
See,
C. Do we agree? Do we not agree?
Agree.
Agree. Okay, good. Good, good, good. Okay, so life insurance underwriting, adverse selection, remember, is it's more likely for someone who's super high risk to seek insurance. Okay, people who have high risk jobs, people who just have high risk hobbies, they're going to seek insurance before the average Joe who lives a pretty normal and not risky life. Okay, or the person who's super athletic and is like, I'm not going to need that, right? So it's the tendency for high risk individuals to seek insurance coverage more often than low risk individuals. Right. The process by which underwriters evaluate an applicant's health, financial background, and lifestyle to determine insurability.
Risk classification.
mm-hmm. Yeah.
Yep.
Classification. Sweet.
It was underwriting.
Is it field underwriting?
So, okay, so let's talk about, so this is great. Okay, so risk classification, what is risk classification?
That's putting a person in like substandard, standard, or preferred risk, which sounds like that's what they're doing, evaluating an applicant's health, financial background, and lifestyle to determine insurability. That's
So,
what they.
okay, I like where you're going. So risk classification is just classifying risk. You're denied risk, so I'm not going to give it to you. Your preferred risk, I will give it to you at a lower rate, standard or substandard. Okay. It's asking the process by which underwriters evaluate an applicant's health, financial background, and lifestyle. Okay, so the process of underwriters doing this, so the process of underwriters doing what they're supposed to be doing is the underwriting process. Okay, when they're going into the applicant's health, financial background, lifestyle, That's all underwriting. Field underwriting is what you and I would do. We would go out and, we would be out in the field essentially and just getting people's name, address, beneficiary name, just the general ideas of, the general topics. But the underwriters who sit in an office, they really go into detail about all of these people. Okay, we just kind of get the base level stuff. We go out there, we get their name, their age, gender, things like that. And then we report back and then we send it into the company. And then the company, the underwriters in the company will do like the deep dive. Okay, so the field underwriters are us, the underwriting department and the underwriters that sit in an office and do this all day, they do a deep dive.
So basically, the process of underwriting, the result of that would be a risk classification.
Your result would be a risk classification, right? And this is asking the process.
Okay, yeah, that's really tricky.
Yeah.
It's tricky.
Yeah, exactly. Exactly. So how do we feel about this? A little bit more clarity?
Yeah.
Yeah.
Okay, sweet. All right. So let me ask you guys this. We have an hour left. We can go into questions right now that you guys have, and we can just talk through questions. We can do a few more questions from here and then go into any questions that you guys have. At 5 o'clock, I'll say, if you guys want to stay and continue asking questions, feel free. If you guys want to leave, I'm not going to penalize you for leaving early, 30 minutes early. We've been here for, 7.5 hours at this point. So it's not, if you need to leave 30 minutes early, it's not the end of the world. But so we have this kind of 30-minute period right now. We can go into questions if you guys have a bunch of questions that you guys want to ask me, or we can continue doing these for a little bit longer, or we can even go back to the PowerPoint and go through some more of those, or we can do Kahoots. What do you guys, I can actually make a poll. Let me do this. I can do something. Let me see. Maybe I have to stop sharing. Q&A. Oh, here it is. Okay, I see it. Let me do. All right, can you guys see the poll? So questions is just what we were just doing. The questions, PPT is the PowerPoint, and Kahoots are, the Kahoots that we were doing earlier. Oh, I didn't even put on there. Wait, sorry. I'm gonna edit this. Go back. And then I can write on there. Okay, let me do this one. Okay, Q&A is just question answer. So you guys ask me questions, or we can ask, whatever. Practice questions is what we were just doing. So can everyone see that poll? How many people are in here? 9, 10. So I think we're missing one person. Oh, there we go. Okay, so we got 8 people. Okay, so we have overwhelming majority for practice questions. All right, so we'll go back and we'll do practice questions, what we were just doing, until 5 p.m. At 5 p.m., I'm gonna stop and I'm gonna leave the last 30 minutes for any questions that you guys have for me. And that could be about hey, you took the test, what was it like? Hey, how did you study? It can be anything. It can be on content or anything like that. If it's IT related questions, please don't ask me. I have no idea how the computer works. I can barely even work my own computer. If you need IT help, there's a number that should have been texting you guys. It's like a 754 number or 8 something number. I don't know. But you guys should have received text from that number already. Text that number if you have any IT related questions. And then but yeah, content or how to study or questions about life as an agent or literally anything, feel free to ask. Okay. All right. But yeah, please don't come to me about IT. I have no freaking idea. No freaking idea. Okay. Let's see. Or state specific stuff can be a little difficult for me as well. I haven't done all my studying on each state. Okay, so let's just do 5. Maybe we'll try to do 5 questions from each section, and if we have some more time, then we'll do another 5. But I just kind of want to make sure it's equal because I know not everyone is taking Pearson and not everyone's taking PSI. So if I can figure out how to share my screen again. There it is. Sure. Okay. And then I don't even see the code again. Okay, there we go. All right, I'm gonna zoom in. Okay, so do 5 questions here. All right, so which type of life insurance policy provides lifelong coverage with level premiums and a cash value component?
Whole life.
Whole life.
Good, that's an easy one. Easy, easy. Good. What is the primary purpose of an annuity?
To provide a guaranteed income stream in retirement.
Yeah.
Good, perfect. Annuity is your own little sugar daddy, except the sugar daddy's you. Okay, guaranteed income stream in retirement. Right? What is the primary function of an irrevocable life insurance trust?
To fund long-term care expenses.
Okay. Do we agree? Do we not agree?
Is it to remove life insurance proceeds from the taxable estate?
Okay.
It's a trust, yeah, that would make more sense. A trust over an estate, yeah.
Okay, so to remove life insurance proceeds from taxable estate. Do we agree on this one? I think I heard 2 people for that one.
Yeah.
Yeah, okay.
Let's see.
Good, good, good. Okay. So I mean, yeah, so it's to
That
remove,
one was tricky
yeah,
because to fund long-term care, you can take that 2 ways, as far as a nursing home or
yeah.
as far as long-term care for beneficiaries.
Oh, okay. I see what you're saying.
That's how I was thinking.
Yeah, so be careful because these questions are going to be pretty straightforward. They're not going to give you like a roundabout question. Oh, if you think about it this way, then like it could be this answer. Okay. So just keep that in mind. Like even when you're on the test, like they're not going to give you some roundabout answer and question. Okay. This test is going to be pretty straightforward. And there's going to be certain things that are there's certain key terms that are going to make you pick something. Okay. So you shouldn't have to think about it in a certain way to make the answer correct. Okay.
Yes, ma'am.
All right, cool. So which of the following is the best reason to purchase a fixed annuity instead of a variable annuity?
B.
B.
I think I heard 2 for that, so we'll go ahead. Good. So fixed annuity is one that, you have those guaranteed payments throughout your life. Those fixed, meaning it's guaranteed a certain amount. Variable can change all over the place. Okay? Good. Good. A business owner wants to ensure that the company can continue operations if a key employee dies. What is the best insurance strategy?
Key person insurance.
Good. Key person insurance. Which of the following is the best retirement plan for a self-employed individual who wants to maximize tax-deferred contributions?
SEP IRA.
SEP IRA. I think we went over this earlier.
We did. We went over this earlier. So self-employed, SEP. Think about this one. Whenever you see self-employed, it's usually going to be this kind of thing. What about what are you going to see if they want you to pick 403B?
What you said, I think it's charities or school,
School,
teachers,
public
Nonprofit.
schools, nonprofit,
nonprofit.
nonprofit and public schools. Good. Perfect. Michael is 40 years old and wants to start saving for retirement while ensuring he can withdraw funds tax-free in the future. What retirement account should he choose?
Roth.
Roth.
IRA.
Roth IRA, tax-free in the future. We're thinking Roth IRA. Sarah has a whole life insurance policy with significant cash value, but can no longer afford the premiums. What is her best option to maintain some level of coverage?
Reduced paid up insurance option.
B, yes.
Good, reduce paid up. Is everyone on the same page there? Yes.
Yes.
So good. Okay. David is retiring and wants to ensure that his annuity provides income for both himself and his spouse after his death. What payout option should he choose?
Joint and
B.
survivor.
B. Okay, so I heard life annuity with period certain, and I heard joint survivor. So which one do we think?
C.
I would say C, because life annuity pays for the term of his life
Yeah, I would say C.
for a certain period of time
Good. Okay, so good.
until the funds are depleted.
Okay, so let's talk about it. So yes, you guys are right with this one, but I want to go back to what you said. So life annuity pays for his life, his entire life, and with period certain means after he dies, there will be, 10 or 15 years, however long he decides, of continued payments. Okay, so life annuity with period certain doesn't mean that it's going to be a certain period within his life. It's going to
Right.
be his entire life. And then after he dies, a period of time after that as well.
Right.
Okay, good. Just want to make sure we're on the same page. So sweet. So David is retiring and wants to ensure that his annuity provides income for both himself and his spouse after his death. Okay, perfect. So joint and survivor annuity, it's going to provide for him during his lifetime. An annuity is providing income, and after he dies, it'll provide income for his spouse as well. All right. A type of life insurance policy that combines permanent coverage with investment options in market-based sub-accounts. What are we thinking?
C.
They're
Very
variable.
good. Sub-accounts, mutual accounts, we're thinking variable. I also just realized that I went way above the 5 that we said we were going to do. So we're going to go on to the next section. You guys feel free to call me out. Tell me. But okay. Sweet. Okay. A type of life insurance that provides coverage for a specified period and does not accumulate cash value.
B.
B. Good. I heard 2 for term. So specified period does not accumulate cash value. Think term. Good. A type of annuity that allows the annuitant to receive periodic payments immediately after purchase.
Immediate annuity.
Immediate annuity. It's in the name. Immediately after purchase is immediate annuity. Keep in mind, immediate annuity, it says it down here. It's within 12 months of purchase. Okay. So anything within the first year, whenever you receive payments, even if it's 9 months out, that is still considered an immediate annuity. Okay. Any period of time after the first year will not be an immediate annuity. Okay. The main advantage of a fixed annuity is
it guarantees a fixed rate of return.
B. Okay, so I heard A and I heard B, I think. What do we think? What are we thinking? So a fixed annuity, what does fixed mean?
A. Guaranteed.
A. Guaranteed, let me see. In the chat, we got A in the chat. Okay, so remember fixed is not moving, right? It's the same. Okay, so it guarantees a fixed rate of return. No matter what, I'm receiving this amount. Okay, very stable. An individual wants a life insurance policy that offers market-based investment opportunities. Which policy would be the best choice?
Variable.
Oh, because I heard variable and I heard B. Okay. So an individual that offers market-based.
Universal.
Universal. Okay. So I heard universal and I heard variable. Okay, I got a tiebreaker in the comments. We heard C. So let's go with C. All right. So if you
Oh,
hear
I was right.
huh?
Sorry.
No, you're okay. You're okay. Market-based variable. Okay. When you see market-based investment opportunities, when it's yes, Universal has investment opportunities, but if they're just talking about investment opportunities, you're gonna pick variable. Okay. For Universal, you're gonna hear more of, flexible death benefit, flexible premium payments.
Yes.
You might hear investment opportunities as well. But if it's just saying investment, like all we have here is investment opportunities, they want you to pick variable. Okay, cool. Which life insurance policy would be most suitable for an individual seeking flexible premium payments and an adjustable death benefit?
Universal.
Universal.
Good, universal. Okay, sweet. I'm gonna do 2 more in this section because I feel like we have a little bit of extra time. All right. A retiree wants to ensure they do not outlive their retirement savings. Which financial product would be the best option?
Annuity.
Annuity. Do we all agree?
Yes.
Yeah, they do not outlive their retirement savings. That's annuity. Sweet. A 35-year-old parent wants a life insurance policy to protect their family financially until their children are independent. Which policy type is most appropriate? Protect their family until their children are term. Do we all agree?
Yeah.
Good. Yeah, I know it's a little weird, but you're exactly right. So until their children are independent, okay? Those 18 years, okay? You got to protect children for 18 years. All right. So that's term. Anything talking about mortgage, talking about protecting your children for their life, for their, as a child, especially because you can think of it as like, oh, well, I want to protect my child even past 18 years. Yes, but in context of this test, they're thinking at 18 years, the child's independent. Okay. So when they're talking about protecting your children, they're talking about for a specific period of time. Okay. Sweet. All right. So let's go on to here. Metric. All right. So, which of the following is a primary factor that determines life insurance premiums?
E.
E.
B.
Yes, ma'am.
Good. Good, good, good. We're okay with that one?
Yep.
What is the main purpose of the spendthrift clause in a life insurance policy?
A.
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 Yep. Yeah.
Are we okay with this one?
Yes.
Okay. The spendthrift clause ensures that beneficiaries cannot assign or borrow against or have creditors seize their payouts, protecting the death benefit funds from financial mismanagement or legal claims. Okay. Can't spend it all once you get it. All right. A provision that allows a policyholder to change the beneficiary designation at any time without consent.
Revocable.
Beneficiary.
Revocable, right, without consent. If they do it with if it has to be with consent, what would it be?
Irrevocable.
Irrevocable. Good. What is per capita? We had per capita and per stirps. Remember?
Per stirps
Days in my
is,
family. Oh yeah.
per capita is everyone, family, immediate family included, I believe, and per stirps is down the line, so to speak.
Yep.
Good. Good, good, good. Are we okay with that one?
Yes.
Yeah.
Good. What is the contingent beneficiary?
When the primary beneficiary dies before receiving benefits, the contingent is put in place to receive.
Good. Are we all okay?
Yep.
Sweet. All right. Life insurance settlement option that allows beneficiaries to leave death benefit proceeds with the insurer and earn interest over time.
Interest only. Mm.
Yep.
Interest only.
Good. We okay with this one?
Yep.
Good. Good, good, good. Laura wants to ensure her son receives equal monthly payments from her life insurance proceeds over 15 years. Which settlement option should she select?
Fixed period settlement.
Fixed period. How do we feel about this one?
Yeah, it sounds like
Yeah.
fixed.
Fixed period. Good. So, she wants to leave proceeds over 15 years. That's a fixed period. That's a fixed period of time. Okay. Good. David has a life insurance policy with a cash value. He wants to access the funds without surrendering the policy. What option does he have?
E.
B. And in the chat, I also got B. Good, 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 good. So he can take out a loan against the cash value. Okay. So if he wants to access the funds without surrendering the policy, he can take out a policy loan against the cash value. He'll still have the policy, but now he has some extra cash for whatever he needs it for. All right, do a few more. All of the following are characteristics of a contingent beneficiary except
B.
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 Mhm.
Okay.
That they can change the policy terms after.
So I heard B and C.
C,
So C, you guys have been
if
saying.
they're contingent and the primary is still alive, then the primary would receive the death benefits and they would still have no,
Oh,
they
yeah.
can't change the policy while the primary is still alive.
Yep.
Good. So, and this is except. Okay, so all the following are characteristics of the contingent beneficiary except. Okay.
B would be correct also, but after the insured's death, only the primary would be able to make decisions.
So,
So the contingents are kind of like second runner up
it
or
is
first runner up. Yeah.
there's the contingent beneficiary is the second runner up. Okay. So okay, so yeah, I don't know what I was gonna say. I had something to say and I have no idea where it went. But they have no rights to the policy's proceeds if the primary beneficiary is alive. That's true. The contingent beneficiary is the second runner-up. So they can't access anything if the primary beneficiary is alive. Okay. And again, they only receive benefits if the primary beneficiary dies before them and they're named as the second recipient of the policy proceeds. So the only one that is not correct is they can change the policy terms after the insured's death. No one can change the policy terms after the insured's death. After the insured dies, that's it. That's it. Yep. All right.
The only thing they could possibly change would be the frequency and how they receive the proceeds.
Yeah, they can choose. I'm pretty sure they choose how they receive the proceeds.
They could do a lump sum, they could do installments, they could do interest only, but as far as the policy itself, there's nothing that can be changed
Exactly.
because it's
Exactly.
been fulfilled.
Exactly. All right. And I think even some cases they will decide how it'll be paid out as well. Like sometimes they don't even choose that. Yeah. Okay, so the following factors influence the calculation of life insurance premiums except
D,
D.
that's right.
Good. We okay on this one?
Yep.
All right, we'll do two more. What is the purpose of the Medical Information Bureau, the MIB, in underwriting process?
B.
B.
D,
B. Good. Good, good, good. Which of the following correctly describes a substandard risk classification?
C.
C. Good. We're okay with this one?
Yep.
yes.
Sweet. All right. So, it's about 5 o'clock. Do you guys want to go for a few more minutes? Do a few more? Or are you guys over it? You guys are ready to ask questions? We'll doesn't seem like anyone's too excited to continue. We'll ask some questions. Okay, so it's about 5 o'clock. So you guys are free to go and continue on your day. And I really appreciate everything, that you guys were very interactive with me. I think you guys are all going to do very well on the test. I can't stress enough, do questions, learn how to take the test because that's half of the game. Half the game is really understanding how to take this exam. Not only how to understand the content, but how to take the exam, how they want you to answer these questions. Okay. But yeah, I really appreciate you guys coming on. I hope you guys learned a lot today, or enough to help you a little bit, I hope. But yeah, I hope I made it a little bit more exciting and fun for some parts of it.
You did for sure.
What was that?
You did for sure.
Good.
Absolutely.
Yeah.
Good. So yeah, if you guys have any questions for me, please ask. If you don't, have a great day. Be safe.
Thank you.
Keep you guys in my
Thank
prayers
you.
as you guys go through this journey. You guys will have awesome time in this field. You really will.
Thank you. We
Well, this
appreciate you.
is recorded, correct?
It is recorded. You guys will get this.
Awesome.
Someone in the chat said, can we take this class again? I'm still studying the chapters, halfway done. You can definitely take this again. I teach every other Saturday. There is someone who teaches the Saturdays in between, I believe. I don't really know how they set up their class, but my class is usually run in a similar way. So it won't be like completely different if you do come again, at least to my class, unfortunately. But if you go to the other person's class, it might be. I'm not sure. Of course,
So your next class will be not next week, week after.
the week after. Yeah. So let me pull out my calendar. July 19th.
Okay.
Thank you.
Perfect. Thank you.
Of course. I wish you guys the best of luck
Will
Thank
we
you.
receive an
Appreciate you.
invite?
to the
Take
class.
the for the 19th?
No, you won't receive an invite. It'll be the same as this, where if you want to sign up for it, you can. If you want to do another thing, again, it'll be very similar to this. And you guys will have the recording of this, so I don't know. I mean, I don't want to
Okay.
say, I mean, there is a benefit to being in person and being able to ask me questions and things like that, but since you guys have already paid and have I don't want to discourage anyone from, I mean, I'd love to see you guys again, but I also don't want you guys to waste your money, coming back and it being something very similar to today. But feel free to, I mean, I'd love to see you guys again if you want to, if you want to come back, feel free.
How
Thank you
soon
so much for today.
Of
how
course.
soon after will we receive the link?
It should be like today, tomorrow, or Monday.
Okay.
I try to get it out as soon as I can, but again, I'm really bad with technology, and half the time it doesn't work and I have to get someone to help me. So
Okay.
it kind of just depends on whenever someone can help me, whenever anyone else is free, because I usually try to do after this, but again, let me stop. Yeah, I'm really not that best at technology. But I will do my best to try to get it out today, but again, I'm not. If I can't figure it out, I have to wait for someone to help me. I don't know everyone else's schedule.
Okay. Thank you.
Of course, guys. If anyone has any questions, feel free to ask. If you don't, have an amazing day, an amazing night. I hope you guys had a great 4th yesterday. Where do we sign up for the exam? Okay, so the exam, after you guys finish the course and after you go through all of like everything the course has, the the exams, like all of that, the practice exams, everything, then you will receive a text from a number that will tell you exactly what to do, where to get fingerprinted, how to get fingerprinted, how to sign up for the exam, how to take the exam, everything. So once you get through the course, we'll send you a text. It'll tell you how to do it. But you usually sign up online. Yeah. Of course.
Are there a lot of specific state questions on the exam?
So there's a state portion. There's like I think you take like the nationwide portion first, and then you'll take the state one. So there's a good amount, but it's not like there's a lot of like generalized information as well, on both of them. So like the state specific, there's not really that much state specific stuff, to be honest. Like the free look period, that's state specific. Like the certain like days, like, you know, how many days it takes for this or how many days you get for this. That's the most like state specific stuff there is. There's not really that much state specific stuff. That's why if you guys like want to like share numbers with each other and like do study together, you guys totally can, because a lot of this stuff is like very generalized.
Okay, thank you.
Yeah, and in your course, there should be like a section that's like, hey, this is the state specific stuff.
Okay.
Hmm. Yeah. Oh, dang it, I should have sent this to you guys earlier. I'm so sorry. Let me send this to you guys right now. So this is something, okay, now I haven't personally like gone through every single one of these, but this is something that someone in a previous lecture that I gave sent to me, and it's really, really awesome. So I'm gonna send it to you guys. You guys can see. Let me put it, I'm gonna put it in the chat. Okay, so if you guys click on that link, it should open up to this outline, and it should have every state on there. And you can go to your state, and then there's like an outline of like the life exam content, health exam content, you know, can you take it together, and like a lot of good information. But yeah, so you guys check in the chat and copy that down, and then go look at your state, and that'll be more of like a big outline, and it's free. It's completely free. Yeah, of course. Yeah, someone sent it to me. I was like, this is awesome. Heck yeah. I wish I had this when I was studying. All right. Any other questions? I grew up in Daytona Beach. My parents, you know, I actually was born in Gainesville, Florida, and then I was raised in Daytona Beach. But my mom is Italian, and my dad is like way back Polish, but his family's been in the States forever. My mom is first generation here in the States. So we're Northern Italian. So we're 3 hours north of Verona, up in the Alps of Italy by the Swiss border. Very, very far north. All my cousins are like mountain men. It's really funny going up there. They like smoke cigars and drink beer. Not that there's a problem with it, but it's just funny seeing them. Oh, very cool. That's awesome. That's so, so awesome. Wow. Very, very cool.
Sorry, I was typing because my kids were being loud a second ago.
No, you're totally fine. No worries at all.
Do you have a study tip for like remembering the different health insurance types, like IPA versus EPO, PPO, HMO?
I don't, but the best thing, what I used to do, when I was studying and I needed like a mnemonic for something, I would go to ChatGPT. I'd be like, hey, here are these definitions. This is what they are. How can I memorize them? Like, what's the best way to tell them apart? And like ChatGPT gave me some pretty good ways to memorize things. And if you don't like it, you can just type in there again and be like, can you give me a different one? And it will. It's really, really good.
I'll try that. Thanks.
Yeah, of course. I use it for so much. I really do. Anything like studying wise, if I like have a question, I'm like, how do we do this? And like even sometimes you can download the app version and have a conversation with it. So like right now, I'm working on so many different. If I told you guys what I mean, I do this every other Saturday. I'm an insurance agent. I walk dogs and I dog sit. I do some like modeling, acting work on the side. I do what else I do? So I can't even remember. I can't remember all the things. Um, but so I have so many different things that I'm working on, and then also building a company of my own. So sometimes I'll go to ChatGPT and I'll just talk through things. I'm like, okay, I have this going on. How can I align this better in my day? Or like, how can I, there's a part of my company that I want to make, you know, more like this. How can I do that? And you can talk to it like back and forth like a person. Um, and it's been really, really helpful, just be able to like throw ideas out there and like obviously it knows so much. It's like the best advice ever.
That's
But yeah,
so in the app you can talk, you can like have
a
like
conversation.
person.
Yeah.
That's
Yeah.
cool.
Yeah, it's like a person. You can talk to it. And like if you have a long car ride, like if you drop your kids off somewhere or you have something and then you have like a drive home, just you can turn it on in the car and just like have a conversation with it. Like, hey, I'm doing this. How can I? Or like, hey, you know, can you quiz me on everything related to insurance in Florida? And like it'll talk to you the whole ride home.
That's a good one.
Yeah.
That is
Yeah.
a good one. That's awesome.
Yeah, it's really, really awesome. I yeah, yeah, it's really, really awesome. Really awesome. And like even like, you know, even like sometimes I'll use it for like if I'm like doing a Bible study or something like that, I'll be like, okay, in like if you were Jesus, how would you tell me to go about this situation? Which like obviously you have to be careful, because like you never know, you gotta be careful. But it'll give me like scripture and stuff to go off of, which is really, really cool as well. So I know it's funny. It's funny. But yeah. Yeah, I mean, I really recommend. I mean, even when you guys get into the field and you start practicing, um, as an insurance agent, and you have to like figure out ways to like market yourself or things like that, go to ChatGPT. Like, hey, how can I do this? Or hey, I have $50. What can I do with this? You know what I mean? Like, literally anything. Like, how can I make $50 into, I have to pay rent this month. Like, how can I make an extra $200 this month? Like anything. Just ask. I mean, we have so much at our fingertips right now before they charge us so much money to use it. I would use it now. Get everything you can out of it. Yeah. Any other questions? Hmm.
Thank you so much for your time. I have to
Yeah.
get going, and I just wanted to appreciate you and we'll try that Chat GPT thing for quizzing me. Thanks for
Yeah.
that question.
Yeah, of course. And like I have the ChatGPT like premium plus version. It's $20 a month. Um, so it's not like crazy, crazy. I mean, I understand like, sometimes I'm like, oh, maybe I should delete it this month. Like, I have to pay for rent and like I need that extra $20. You can like pause the prescription. You can pause the subscription. But like the plus version is I will say really, really good as well.
I'm gonna download it and try it out. Thanks so much for that.
Yeah, of course, of course. Um, for everyone else here, I mean, I can continue going through questions if you guys want, or, you know, whatever, whatever you guys want.
Well, I think I'm gonna exit, but thank you so much for this. You did an amazing job. I think this is gonna help me tremendously.
Good. I'm so happy to hear that. I'm so happy to hear that. Really, 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 really. Yay. You guys do awesome. You guys are gonna do awesome.
Thank you.
Stay
You have a
focused.
good night.
Yeah, you too. You too. Bye, y'all. All right.